Bajaj on Friday, and he said, I'm overwhelmed by the response. I mean, it's clear from what the anchor investors are saying. And very, very focused on what the trajectory is going to look like. But that's just part of the buzz of the IPO market. So cross IPO subscription starts today. It's in the auto anch space, 500 crore size for the issue, and the price span of 228 to 240. Lot size is 62. Tollins Tires also starts from today, 9 to 11 September, 230 crore rupees is the IPO size, price band 215 to 226 rupees, and a lot size of 66. And PN Gadgil Jewellers is the other one. Later this week, September 10th is when the issue opens. It's a 1100 crore IPO, price band of 456 to 480, and lot size of 31. Listing today, the big one, is Gala Precision. It has been subscribed 201 times. So it will be the second biggest this year, just in terms of subscription. Just by that, we're expecting it to be perhaps a good listing. But that's the IPO story. We're also focusing on the F&O side of things, on what could be a pretty tough day to figure out, at least initially, Samina.
Yeah, Taman, I think I should get a chair and sit right here and have a long-distance relationship with both of you in the studio. But yeah, it's going to be a tough morning. We've talked about what the global cues are, and like we've highlighted for you, those aren't looking good. Of course, the bull in Neeraj believes that there could be some recovery coming in, but we'll take you through what that data is. Nifty futures are trading at a premium, but there's a decline in open interest, which largely means that traders are not sure or a little apprehensive to take long positions. This also indicates that they're cutting the long positions on anticipation of consolidation or weakness going ahead. Now, this really is the data that is pointing towards that. Bank Nifty is no different. Bank Nifty trades, in fact, Bank Nifty futures are trading at a premium. The open interest, on the other hand, is also showing an increase. This surprisingly is indicating to an opposite trend to the index. So it seems like there could be a little bit of a bottom made on Bank Nifty, and the indication is that we could see some more long trades or fresh longs coming into play on the Bank Nifty. If I had to break this up, it's the bears that are currently in control of Nifty. On the Bank Nifty, it seems like the bulls could potentially be making a comeback, hoping that the Bank Nifty sees some recovery. Well, that's the spread, and that shows you all the action. In terms of what we have, maximum call writing has been seen at 25,000, which really means that this is the higher end of the spectrum that bulls are expecting. So trade is expected to remain in the range of 24,900 and 25,000. Call writing at 25,000, put writing very aggressively seen at 24,500. Maximum call OI is very obvious and can be seen at the levels in front of you. So if it's a trading range, the range is that on the upside, 26,000 still remains a very critical level of resistance for the index, followed by 25,500, and on the downside, 24,000 is an important sacrosanct support level for the Nifty. This is more medium term. In terms of call and put writing, what we've seen is that 24,900 has seen maximum put writing, and 25,000 has seen maximum call writing. So traders not expecting the index to go out of that 25,000 band anytime soon. Well, in terms of stocks, it's been an action-packed day, as you can see. Birla Soft saw an increase in OI, but there was a short build-up. SPI saw a similar trend. BHEL saw an increase or a short build-up to the tune of 7%, rather indicating that what you're seeing, the trend to be rather negative on these stocks. Indus Tower was also seeing a similar trend. LTI Mindtree, on the other hand, saw some long build-up, indicating that the bulls may be trying to get some control of that trade. So that's largely what we have. It's going to be a tough morning. Technical levels will become very important this morning, only because there's a lack of fundamental triggers for the markets, and the Nifty, remember, has been facing resistance, and we saw this last week at 25,300. But for now, very close watch on the support level, because that's largely where the markets hopefully should bounce back from, given that implied Nifty is indicating to a negative start as we see it. Well, we have with us Milan Vaishnav of Gemstone Equity Research now joining in. Milan, it's a tough market, lack of fundamental triggers. Technically, I think levels become very important. Going ahead, what I first want to ask you is if you had traders in the early part of last week who were long on the Nifty, by Friday would have made a loss. Is there any hedging strategy that one could, introduce on their portfolio today to reduce those losses from last week? Or would you just recommend them that if there is a small pullback over the next day or two, they should cut their losses?
I think they can do both, because when it comes to individual investment portfolios, the best thing that one can do is to find out potential resistances on each of the scripts that they are holding. If they are F&O scripts, liquid F&O scripts, then they can start writing the calls at higher levels, the place where they might feel that the stock might resist. So far as the index positions are concerned, I believe that I see two things happening. Yes, one, the kind of decline that we saw on Friday and the kind of soft opening that we might see today, it can lead to some very mild and feeble technical pullback. So they should wait for some technical pullback, and then they can consider writing calls at higher levels, especially the levels which are close to the lifetime highs, that is 25,200 and higher. That's where the real hedge will come in. So I believe they should introduce some hedge on both their investment portfolios as well as the index exposures.
Milan, you expect the Nifty to trade in a tight range over the next couple of days. You want to tell our viewers what the strategy is then in that case on the Nifty?
Right. See, I see both of the things happening. As I just mentioned, that the kind of decline that we saw and the kind of soft start that we might see, there is a possibility of a technical pullback. Now, that technical pullback I expect is going to be I will call it a feeble in nature. That is one thing. Another thing that I am seeing is that we are seeing a formation of a lower high on Nifty, and I'm from the derivative and the options perspective specifically, I am seeing that 25,000 and 25,200 levels, they are not only seeing incremental addition of the call high, but they are also seeing some unwinding of the put. So I believe that markets are not going anywhere above 25,000, 25,200 range. So in this case, I would again suggest a short strangle where we would sell 25,200 call and sell 24,500 put, both for this September 12th expiry. We can expect a total premium of around 85 rupees that could result in a potential yield of around 3%. And as a part of risk management, we will exit this position if Nifty ends up violating 24,500 or moves above 25,200.
Just for the sake of our viewers, to just simplify this, what Milan believes is that the Nifty will trade in that range that that we've talked about, which is 24,500 on the downside and 25,200 on the upside. Milan doesn't expect little or no movement in the Nifty's trading range. The strategy for an trader will be profitable as long as the range is respected. But what you want to be careful about is that if you see a move in either directions breaking that range, the losses could be, of course, unlimited in that sense. So as long as the Nifty stays in the range, you're in the money. If the Nifty breaks the range, exit your positions. That's Milan's advice on the Nifty strategy. Milan, you also have a trading strategy called spread on PI Industries. You want to walk our viewers through that too?
Yes, right. I'm adopting a rather very selective and stock-specific view here. I believe that PI industry has been under a short consolidation after the breakout that it saw above 4,000 levels, and after it marked a high of 4,600. So now I see that after a formation of a very small ascending triangle, I see the stock attempting to move higher. So in this case, I would recommend a bull call spread where we would buy 4,600 call and sell 4,800 call. We would be paying a net premium of around 72 rupees. Maximum profit that one can expect would be around 31,800 odd rupees, and maximum loss would be to the extent of the net premium paid. That would be around 18,163. However, we can keep these losses even lower if we maintain a very strict protective loss stop loss of around 4480.
Just very quickly, so this of course is a bull call spread where what Milan is saying on PI industry, the trend looks positive. and the gains are expected, but of course the stock may not rise too significantly, and hence he's recommending a bull call spread on this. So your profit may be capped because even if the price rises above the highest strike price, you gain on the call only up to the level that you've initiated the strategy at. Milan, just very quickly on PI Industries, if you're constructive on this one, and if there are traders who don't understand the options side, a naked long PI Industries trade could be done?
Yes, you can see. See what happens here is that if you are buying a naked call, obviously your losses are limited to the extent of the premium paid. However, I generally recommend to add some sort of hedge, because when you are buying a 4600 call and when you are selling 4800 call, you are also receiving some premium while selling 4800 call. So that small amount adds to the hedge. Otherwise, this becomes an unhedged naked open position. So generally, I generally recommend going in with a hedge. Now, the only minus point, as you just mentioned, is that because of this hedge, the total gains are limited to the levels mentioned, because above 4800, this call spread will not make money. The maximum profit will stay kept at 31,800 rupees. But in case of naked call, obviously the risk is higher, and therefore the rewards will also be higher. You will keep making money if the stock goes above 4,800, but not in the case of bull call spread.
You're right. Thank you, Milan. At these market conditions, it's probably best if traders go ahead with hedged positions on the Nifty, on the Bank Nifty, and on specific counters as well, because the macros or the global cues right now aren't too supportive. Tamanna, Neeraj, it's back to both of you. It's hedge strategies only today from the sound of it.
Yeah, it's a day which is tough to call in that sense.
I think that's the name of the game.
Yeah, limit your losses is the name of the game. You know, the other sort of unknown adding to the situation today is the GST Council meet. So it's the big story as well. The meet will take place today starting 11 a.m. A host of issues expected to be on the agenda, including the taxation that we pay on insurance premium, online gaming, and more. I'm joined now by Rishabh, who is going to be on top of that story and is tracking it very, very closely. Rishabh, you're already at the venue, well in time before the meeting as well. Now, typically, before any GST Council meeting, there's a lot of kite flying about what can happen. But what is officially on the agenda, and what are you learning?
Right, we're at the Sushma Swaraj Bhavan, where later today we'll have the 54th GST Council meeting here. A bunch of state FMs already being sort of rolling in, their representatives also rolling in already early this morning. What we know so far is that there are at least two things on the agenda. One will be the removal of tax on research grants, that is one thing, and the other one is the GST on payment gateway transactions less than 2,000 rupees. These two things are definitely on the agenda, but what's top of the mind is, of course, the health and life insurance premiums that is currently being talked about. Those are taxed at about 18% right now. Remember, Union Minister Nitin Gadkari also wrote to Finance Minister Nirmala Sitharaman on this and requested for the urgent withdrawal of this sort of tax, because life and health insurance is somewhat of a luxury for a majority of Indians currently. So that will be on top of mind. There will also be a status report on online gaming that is expected to come across. That will include all the sorts of revenue implications that the government will have if they decide to reduce the tax burden on these gaming companies, which currently stands at about 28%, which is the highest tax slab there is. There's also obviously the ongoing debate about game of skill versus game of chance that also finds its mention at every GST Council meet. Apart from that, some more possible things that could find their way onto the GST agenda are GST for cancer drugs that could see some sort of a reduction. We're also hearing something on exemptions for electricity meter services. So these are some of the top things on the agenda today, and we'll be tracking them closely.
Stay tuned to NDTV Profit all day. The press conference is expected between 3 and 5 p.m. this evening. And of course, you will get details of what exactly is happening in that GST Council meet a little earlier. So we're the destination for that. Abhishek A. Rastogi is also joining us. He is founder at Rastogi Chambers, tracks the law on GST very, very closely. Abhishek, great to speak with you this morning. I mean, every time there's a GST Council meeting, sometimes there's over-promise and then under-delivering, because at the end of the day, for all states to decide on giving up 18% tax on insurance, for example, it means a loss of revenue. Do you think we're close to consensus this time round?
I think it will come partially, if you ask me, because the state's recommendation will be very critical here, because state is a predominant stakeholder as well as far as the revenue is concerned. So I think the benefit will come, but it may come with some caveats. For instance, it may come for only certain categories of insurance policies. It could come based on age criteria. And I think it will be a good to start with, because if some sort of benefit comes based on some criteria, then I think at least we're moving in the right direction. So I think that is what is expected
Abhishek,
from
what do
this.
you mean age criteria? I mean, you'll pay tax at a certain age and not at a certain age?
No. So for instance, if we talk about the insurance policies, and these are health insurance policies. So if you are over 60 years of age, premium may be exempted. Things like that can come up in the meeting, and those could be implemented immediately. And there could be deliberations on the other aspects as well.
Okay. Apart from the insurance piece, what else do you expect to be on the agenda and actually see some resolution?
So I think airline for sure is on the agenda, and there needs to be some sort of reconciliation between the state and the center, and also the policy framework needs to be seen, because a lot of foreign airlines are getting that brunt, and these taxes are huge. And also keeping in mind the diplomatic relationships which India has with a lot of these countries. Some of these airlines are national carriers. So I think tax certainty will certainly come into play when GST Council today decides with respect to airline sector. Secondly, I think online gaming, the matter is sub judice. The matter is before the Supreme Court. We are getting dates after dates, and it could be heard anytime now. I think what is more important is not just the rate of 18 versus 28%. What is more important and why we are in Supreme Court is with respect to the valuation. If the valuation is on the entire amount of the gaming bet, then it is a problem. If the tax is at 18% or 28%, but only on the revenue of the online gaming company, then I don't see that should be a big problem. So I think more than the tax rate, the valuation will be the key, and whether GST Council will be able to address that based on the number, the revenue, etc. I think that will have to be seen, but I don't think that decision can be announced in this GST Council meeting. It will still take more time.
All right, thank you so much for that, Abhishek Rastogi there. And yeah, I think from a markets perspective, the big one is going to be the insurance pack, which has run up so many times on the hope that GST relief will come in, that I don't know how much steam there is left in it, but yeah, you might continue to see some of this today as well playing out in trade. The other big question, of course, continues to be about whether these companies will actually pass it on. And while that may be a positive for customers, it'll be a negative for them if they have to pass all of it on, because then where's the relief?
Yeah, no positives for sure, if not a further negative. But, it may just make some of the insurance stocks very active in trade today, and maybe sell on news tomorrow, who knows? I mean, or sell on no news tomorrow, who knows? So I think keep this sector on your watch list in addition to oil marketing companies, because oil prices have come off. But if you had to really look at the watch list from a stock specific perspective, here are the top things on our mind in the session today. So HUL. Board is mulling ice cream plans and stoppage thereof, so watch out for that one. Deep Industries, an LOA is signed for a 1400 crore order from ONGC. Mazgon Dock has bagged a 1486 crore from ONGC. SpiceJet, Carlyle debt restructuring, but more importantly, issuance of shares to Carlyle Aviation at a price of 100 rupees per share, which should be the big driver for SpiceJet today. And Britannia, the nod for capacity addition being given.
Okay, Zaggle Prepaid is the other one that's on the watch list. They have a new pact with FCM Travel Solution. Reliance Infra is now mulling making electric cars. I don't know how the street is going to react to it, but we saw that with Easy Trip. One day there was excitement, and then the next day there was a little bit of, is this a great idea? Nazara Tech is acquiring 48.42% in Paperboat, which is a gaming app. And Nebe Defense its unit has signed an MOU.
Well, a whole bunch of other stocks to track. Small company, but big order. RBM Infracorn has bagged a significant order to the tune of 3,498 crores from ONGC. This order is over the next 15 years. The company's market cap is sub 1,000 crores, and hence this order is important. RIR Power, they're setting up a 670 crore semicon plant, and Gensol Engineering has amended its QIP issue size from 500 to 750 crores.
Okay, and RBM Infracom, of course, an SME stock, so bear that in mind. Two names, Granules India on the negative side, 6 observations at Hyderabad facility, and Lupin, a negative note from Citi, more importantly, an action from an innovator company against a generic launch for Lupin, which may have an impact on this stock. So watch out for both of these in the session today. Let's take it to our experts very quickly. Kush Bora, founder at kushbora.com, Soni Patnaik, AVP at JM Financial Services, and Chakri Lokpriya, managing partner at Red Strawberry, on the fundamentals. All of you, thank you so much for taking the time out and being with us. Good morning, thanks for waiting by. Soni, I'll start with you. If we start off lower today, let's assume 50-60 points on the Nifty and come around those levels where the maximum put OI is there. What's the trade that you then take if you had to take one on the indices?
And good morning, everyone. Thank you for having me on the show. So I think Nifty has broken 25,000 on a weekly basis. So even if there is a 60 points of a gap down opening today, somewhere around 24,750 to 24,800, there may be a small probability, a small percentage that it can bounce back towards 24,900, 24,950 odd levels. However, the broader picture will continue to remain that since it has broken the level of 25,000, which was a very crucial base, it becomes a sell on rise sort of a market until and unless it's not able to cross 25,200 and close above it. The view does not get negated. It is a good correction that we can see in Nifty. So any opportunity towards 25,000 becomes a sell on rise. Maybe the next support for Nifty actually falls around 24,600. It's not a possibility that today itself it goes to 24,600. It's just that, whenever we see the opportunity towards 25,000 where the maximum call writers are present right now in options chain, it becomes a good sell and rise. On the put side, if we have to observe, you can see that there was a lot of open interest unwinding towards 25,000, and the highest open interest has now shifted to 24,500. So that becomes a next base or the next support for Nifty. I think the opportunity is only to look for a sell on rise as long as it goes above 25,000. Maybe from there one can look forward and keep a stop loss of around 25,200. So one can see it heading towards lower for 24,600. It's a positional play. It's not an intraday play. For intraday, just avoid whatever small gap downs and gap up or recovery we may see. Just avoid those plays for the intraday move and wait for a positional play.
Of course, easier to look ahead, but the fact is we've not seen this sell-off coming a few days ago. And what do traders do in that case? If anybody is sitting on long positions, either on stocks or on the Nifty or even on Bank Nifty, because early week data last week indicated that Bank Nifty would play catch up, what should they be doing? Should they just stay put or cut their losses?
So I think it's wise just to remain hedged at this point because, we've broken very crucial base. Even if we talk about Bank Nifty, Bank Nifty has given a clear breakdown below 51,000. So I think that's the level to watch out for because Bank Nifty can drag you lower towards 50,000 odd support base. So I think from your perspective, you can go for a balanced approach. It's not all these stocks have given that correction. There are a few stocks which have also given a good breakout as well, which are holding on to this trends. But as of now, if anyone has to go for a play, it is always wise to remain hedged until and unless these levels are above, because September historically has been known as quite a volatile month. When it comes to both Nifty and Bank Nifty, and you're combining it with a stock play, combine it with your put buying, hedge your positions, or go for deep out of the money call writing options wherever feasible. So I think that's a strategy one can adopt for going forward.
Okay, morning Soni. Let's quickly get your picks for the day.
Definitely. I'll have a balanced approach today. The buy comes in from the pharma space, DV's lab, which I'm preempting is that a good breakout, a range breakout can be seen in DV's lab. From current levels, 51.40 around, you can buy at these levels, keep a small stop loss of 5080 or target of 5250, 5300 can also be seen. I'm preempting that the range breakout for DV's lab would come somewhere around 5160 to 5170. So that's the preemption I've taken with the long built-up positions that we've seen week on week basis, and also the charts looking strong for the stock. So 5080 remains a good support. Keep a stop loss around those levels. Target of 50 to 50 and 5300 can be seen. The second sell idea comes in from the IT space Wipro, which has seen almost about to break a 20 EMA hurdle. So Wipro, one can sell in futures, keeping a very small stop loss of 530 in futures level. A target of 510, 500 can be seen, which is actually the next good support for Wipro. So I think this short play can come around quite nicely. And from those levels, once it tests 500, maybe from there, a reversal can be seen. But as of now, this short play can definitely be capitalized on.
And Kush, good morning. But before we come to your index calls, let's get your picks for this morning.
Sure. Hi, Tamanna. First of all, very good morning to you and all the US. Couple of them, like Sunny, I also have a hedged position today. Bank of Baroda, has seen a sell. PSU banks were under a lot of pressure. I think this might continue. This stock, independent of what the rest of the pack was doing, has remained under pressure for some time now. It's broken below the key support zone of 240. So I think the near-term downward pressure could continue. 232, 227 are the targets to look at on the downside. 242 is where you place your stop loss. On the long side, I've got Ratnamani Metal and Tubes. This stock has seen a fair bit of consolidation over the last couple of months, but in the last few sessions, it's seen a very decent breakout. On Friday, the stock was up on the back of very good volumes, plus the kind of relative strength that is there is evident with the move that we saw on Friday, vis-a-vis what the rest of the market had done. So this is a positional buy with targets of 39.50 and 4100. The stop loss on this one comes in at 36.50.
Okay, we'll take a very quick break. We're back with Chakri's view and also Kush's call on the index. But before we get into that break, so NSE, the National Stock Exchange, has a new bull. And this is an interesting take, really. And I hope we can actually see pictures of the statue as well, a closer shot. Because this is interesting because you have the bull and you have a whole number of statues around it to depict the Aam Aadmi and Aam Aurat of India and the connection that the stock markets now have with more and more people. So this is something that Ashish Chauhan of NSE said, that now you have traders or people investing in stock markets in all but 30 zip codes across India. And that's what this bull has to depict. We'll try and get you some clearer shots of this, but right now we'll take a very short break. Stay tuned for more on the other side.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का
Welcome back. You're watching India Market Open. It's expected to be a rough start. The pre-open indicating to not such a good morning in early minutes of trade. We'll give it some time, let things settle. A 130-point cut is what it seems like in the early ticks this morning. Chakri, how are you feeling? The lack of any sort of triggers for the market. The only big cue is globally the Fed rate cut. The sentiment for some reason has turned a little sour over the last 2 to 3 days of trade. If you are a fundamental investor, what is your strategy? Are you going to use the current weakness to go out and buy stocks? Because like we discussed this morning, the recent corrections in the market have been rather shallow. So every opportunity has got bought into and will get bought into.
Good morning. I think in the last few days, you've had a series of both missteps in Indian politics, Indian markets, Indian various factors, and as well as internationally. Now, internationally, it's fairly more clearer, simpler, because, now the question is whether the US will cut its rate by 50 or 25. There's a 70% probability that they'll cut it only by 25. ECB, EU starts cutting rates again this week. So which means this week, next week will shape how Indian IT and all the export-related sectors in India do, which I think are fairly well placed, whether it's information technology or textiles, chemicals, of course, still early cycles. On the other hand, in the case of the Indian markets, still it's only the government and public sector which is spending. Private capex is unlikely to show, has not shown any signs. Therefore, all the and infra out of that, it still remains to be the main thing which is spending. So I still buy into some of the infra names, power financiers, which have corrected.
Okay, let's shift our focus to pharma. It's going to be a sector in focus because of the number of updates coming in on several companies in this space. And Varsha's collated all of that for us. Yes, Varsha, what can we expect?
Thanks, Samana, for that. So let's start with Lupin, wherein Lupin is actually facing a legal challenge related to its generic launch of a product which is used to treat kidney problems. Now, this product, the original maker of this product is Otsuka, which is actually challenging a recent court verdict that favored Lupin to launch this generic version. Now, the court had previously allowed Lupin to launch this version in April 23rd April 2025. However, this new appeal introduced uncertainty whether Lupin will be able to proceed with this plan or not. Now, this product is actually primary product for the innovator, that is Otsuka, and this contributes almost 1.5 billion US$ in revenues for the innovator. Now that's what the market that Lupin was actually targeting. Now let's see what Citi has to say. Citi has a sell rating with a target price of 1700, which implies downside potential of 24%. Now according to Citi, Lupin's planned launch of the generic of this product in April 25 might be risky due to the legal issues, and Lupin may choose to delay the launch of this drug. According to Citi, this will actually impact the Lupin's earning, because Citi was expecting that it will contribute almost 30% to Lupin's revenue in 2026. The company also, the other is the company had already lost the litigation to the nearest possible product, Silent, which is used as an oral contraceptive as well. Then we have Granules India, wherein they've got 6 observations from US FDA at its Hyderabad plant. Inspection was from 26 August to September 6. And this facility is actually crucial for manufacturing finished doses and pharmaceutical intermediates, which supports global operations. Although we don't have the revenue contribution, but we do have the capacity. So they have 23,200 tons per annum capacity for their intermediates and 26.8 billion units for their finished doses. Then we have Suvin Pharmaceuticals, wherein US FDA conducted inspection at one of their subsidiaries called Casper Pharma, which is in Hyderabad, and the inspection was categorized as voluntary action indicated. Now, what does this simply means is that the US FDA had found some lapses during the inspection, but these issues are not severe enough to require immediate enforcement action. So the company is therefore expected to voluntarily correct this issue to comply with the regulatory standard. Then lastly, we have Ami Organics, wherein the Japan's regulatory had declared their Sachin Surat facility as GMP compliant, and company Surat Manufacturing will be a good manufacturing practices compliant. Now, inspection was already conducted in June 7 without any major observation, which was actually highlighted in their Q1 FY25 con call.
Got it. Varsha, thanks. So much of news flow packed out there in pharma. And Chakri, I mean, it's difficult to decipher what one will be the topmost, but I thought that the innovators' notice to Lupin or Granules now having a US FDA issue in one of its largest plant seem a bit negative for both. What did you make of it, and what would you do if you were a shareholder here in these stocks?
I think, these companies will do launch at risk as they usually do. And, they have an excellent, legal teams in place. And so, I wouldn't really panic if I am an existing shareholder, simply because, there will be price erosion at launch, but that kind of numbers are already in place. So I wouldn't think that this new share, these actions, a lot of actions are anything significant.
But look at that, the two stocks are starting off lower. Very quickly, Kush, before we get the brokerage call of the day, Kush Bora, if you had to trade a Lupin, a Granules, or some of the other pharma stocks which were active, what would stand out for you, particularly these two, specifically Granules and Lupin?
So Lupin does stand out. The reason being that the stock is still seeing some momentum. It might open lower, but there is a strong support zone at 22,200. So if that is maintained, I think this dip might turn out to be a buying opportunity. Granules too, stellar run, but negative divergence is seen on the cards, and support zone of 685. It's testing that perhaps the opening will be lower than that, so might turn a little negative for the day or for some time. So between the two, Lupin looks good. But otherwise, we've discussed a couple of stocks like Concord Biotech and Mankind Pharma in the last, week or so, and they continue to remain strong. So any kind of opportunity, of a dip should be taken as, an entry point. So Concord Biotech remains, my favorite in the pack.
Sony, a couple of stocks that, we were discussing that would be in focus is going to be crude ancillary plays. So with crude trading at recent lows, any opportunity to go long in OMCs, paint companies or lubricants, because some of these counters have been quite active all through last week on the long side?
I think OMCs are decent. However, if we just analyze the paint companies, Asian Paints and Berger Paints individually, they have a stronger structure on charts and derivatives data, especially a stock like Berger Paint, which is quoting just around its resistance of 600. So any move, if it's able to cross 605 in intraday today, that will give you a good option chain breakout, and the stock can head towards 625, 630 levels. There's a very strong support of 590, 585. So I think the risk reward ratio also stands to be favorable at that point of time. So definitely a stock that can be, just considered into would be Berger Paints. Asian Paints has also given a good breakout. It's run up well. However, at the levels of 30 to 70, 30 to 80, there's a possibility of Asian Paints running another 1% at max and then facing a hurdle. So I think out of all these stocks and all these sectors put together, Berger Paint is something that is still continuing to give you that strong side up. So I think it's the stock to look out for.
Okay, let's get the top brokerage call this morning. Harsh is joining in. Harsh, what's on your radar?
Good morning, Tamanna. You're seeing Medanta rather meeting up with Motilal Oswal, and some very crucial takeaways just in terms of turnaround of the developing hospitals business. Now these are generally hospitals in tier 3 beyond, and they have certain characteristics, including they're open for 24 hours of the day. These are called developing hospitals, and this has seen a softish growth. But what Medanta seems to be suggesting now as part of this conversation is that there's been a bit of a turnaround here over the last couple of months. So growth seems to be inching back. Of course, outside of that as well, very strong growth plans that Medanta has. Also on the matured hospitals front, they're seeing good traction, good growth, and that growth momentum is sustaining where matured hospitals is concerned. But with regard to the growth itself, you're expected to see very strong growth in beds, 3,373 beds by FY25 end, and longer term guidance of 5,000 plus beds that Medanta has. Matured market hospitals in any case have done very well for them, 15% growth on top line, EBITDA also going up by around 300 basis points odd, 3% odd in absolute terms, and therefore you're seeing a bit of a turnaround or good traction on that count as well. But with turnaround in developing hospitals, I believe that, or rather Motilal believes that it's a key positive for Medanta. Overall, they're looking at a valuation of 1,380 rupees per share, which is a 24% upside from here. They're valuing this at roughly 33 times 12-month EV to EBITDA forward. So watch out for this one. Looks very interesting in terms of commentary.
Well, this is one stock you want to track for this morning. The reaction, though, is very muted. A quick check on how stocks like Mazagon Docs are doing in early trade. There's been order wins for the counter, even though the broader sentiment might have been lower. But Mazagon Docs is indicating to a gap up in trade. Let's take a look at the other shipbuilders. Like I said, these stocks usually move in groups, but Cochin is trading flat. Carbon Reach also may not be seeing a positive bias, but Mazagon Docs up 2% in trade. Kush, I know Mazagon is not in the futures and options space, but would you consider initiating a long trade on Cochin Shipyard or Garden Reach only because Mazagon Docs is up 2% this morning?
I mean, I wouldn't even consider going long on Mazagon Docs, despite the kind of news and the moves that it's seeing. This is, I think, if at all this sustains, then this will perhaps be the first kind of up move or a bump up that, we are seeing in some of these names. Too early to jump in and, too early for my comfort. So I'd wait on, all three names, wait for some more, confirmation, some more price action on the upside before I, before I sort of have a buy signal on some of these. So I'll wait it out. This is the first move that, we are seeing. And as I said, remains to be seen if it sustains.
Chakri, if we see a 25 basis points rate cut, which is anticipated, what's the impact on financials? Would you go out and buy or sell any of the large cap, mid cap financials as a result of that action?
Yes, you're right. We will buy financials. We will buy housing companies to begin with, because they'll see the fastest cut, reflecting, and that'll also perk up the demand for housing companies. So PNB Housing, LIC Housing, these companies to begin with are inexpensive. Second, the infrastructure finances, REC Power Finance, their loan book growth is not going to slow down, as feared by the market and some brokerages, because that's for the banks. Maybe those banks in general might slow down a bit, but not infra finances. And third is, of course, PSU banks are also much better placed than the private banks. So that would be the pecking order: housing companies, infra financiers, and then PSU banks.
Chakri, are you excited at all about the insurance play ahead of the GST meet? Do you think that there is, any real differentiator for these companies if there is a relief on the GST?
No, it's very unlikely unless, insurance companies also start manufacturing EV cars or something like that. They will largely probably, cut some kind of relief to the mid-income taxpayers. They'll have a cutoff some 5 lakhs or something annual income if they do. But outside of that, I don't think life insurance are worth a significant investment.
What about the health pack, and why do you want everyone to make EVs? Is it because that's in vogue now?
Indeed, I'm also thinking of manufacturing EVs, and it seems to be the flavor of the season. And but that aside, I think the life insurance companies, basically the GST cuts, meaningful cuts, is very unlikely to happen across the board. It's probably a mid-income housing, the taxpayer, they might see some relief.
Got it. Okay, 50 seconds left. Pre-open rates have settled. So I have 20 seconds each for both. Sonia, I'll come to you. 20 seconds. Your top call for the day today.
I think here we'll just look at Pidilite, which is giving a good range breakouts. I think one can just look forward. If it crosses 260 for the day, one can continue to buy in that stock for a higher targets of 3,300, keeping a stop loss of 3,220 for the day.
Short target, short stop losses. Kush Bora, your top call for the day today. 15 seconds.
Looking at the POCL, Pondy Oxides, the target on this one could be 24, 25 and 2,500. And on the downside, you have stop losses at 20 to 75.
Okay. Again, as you see, viewers, on that base, very short stop losses and target. Probably the nature of the game as well currently, because the markets are looking choppy. We're likely to start off lower, of course. The question is only, do we succumb to further selling or do we stabilize? Let's pull up the first rates. Flat, actually, not as bad, to be honest, but it was expected to be maybe a third of a percent. It's about 1/4% on the Sensex currently. bring up the mid caps and the small caps very quickly before we get the heat map up on the screen, because I don't think the broader market's moving too much. Just about 0.25% on the mid cap space as well. Small caps, well, about 1/3%. The Nifty hovering around that 24,800 on the futures, which is where the highest put OI is. Get the heat map up on the screen and show you what's moving and what's not. Fair degree of red, but a little bit of green as well. Let me start with the red first. NTPC, ONGC. Remember, PSUs are being taken to the cleaners all of last week. PSU banks predominantly, but some other PSUs too, and we're seeing that pressure today as well. Weakness in Hindalco, weakness in Power Grid, Tata Steel. So metals coming off, and there's some talks about SAIL having cut target prices or prices for metals or steel rather. I don't know if that's also brewing this weakness here. What's doing well? Shriram Finance on the brokerage note from UBS up about 1%. HUL up about 1%. HDFC Life, SBI Life. So life insurers ahead of the GST meet in focus as well. Don't quite see a BPCL though. So while we see ONGC sulking because of the crude price fall, Tamanna, we don't quite see BPCL in the list of the top 20. So OMC is playing it quiet right now.
Yeah, because there is no guarantee that BPCL will be allowed to pass on rates one way or the other. So perhaps that's why that kind of a move. But let's pull up what's happening in the broader markets this morning as well. Quite range bound there on the top line and nothing massively negative on the broader markets. This is actually a relief. This is actually good news, because considering what the global handover and the setup look like, this actually is not half bad. About 0.5% down, both on the small cap and the mid cap indices. Let's look at specific stocks. Insurance is in focus, and you saw that on the Nifty as well. But let's see what's happening with LIC, a Star Health, and HDFC Life, for example. Nothing much there. I'm not sure what 20 microns is there, but nothing massively moving on insurance right now. Mazagon Docks was in focus. Remember, 3 major orders from ONGC. Mazagon Docks is the recipient of one of them, about 1% up. 1,400 crores owed is the size of the order. On the negative side, Lupin, Granules, both of them with bad news. Lupin because Citi has lowered its target. This is because an innovator has challenged the release of a generic drug that they want to put out by April 2025. About 1.5% down on the stock. Granules has received 6 observations from the US FDA after a site visit. That is not being seen very well for the stock. 3.5% down this morning. Suzlon has completed an acquisition of Renom Energy Services. It was on the cards, and you're seeing some profit booking coming in there. And Godfrey Phillips, meanwhile, was the big buzzer. Most of last week, it is seeing massive profit booking now. Now that the news has come, Beena Modi has been appointed MD. Samir Modi is out of the board, so that family feud has sort of ended for now. Stock is about 4% down. I would say largely negative. Difficult to spot big winners this morning, Samina.
This morning, so it's not looking great as we see it. In terms of gainers, I think the stock of the morning would be SpiceJet. They've managed to have some sort of a restructuring deal, and the street is enthused about that. So the stock is looking good in early minutes of trade, up nearly 5%. If I can quickly get SpiceJet on the screen, 4% higher on SpiceJet is what we have on a morning that's rather muted. And also GM Financial, I don't know what's happening here, but the stock is up 3.5%. Metro Brands, there was a little bit of a block deal that happened. The stock responding to that quite well with the 3% uptake. Pharma is the theme this morning as well. So while you've got some pharma stocks that are losing out on back of specific company action, the general broader sentiment seems to be pro-pharma. GM Fadla has been a counter that we tracked all of last week. This morning too, the stock sees a 2% gain. Hotels aren't doing too badly. Chalet Hotels is up about 1.5%. You've got Macrotech Developers that's up 2%. Dixon Technology that's trading with marginal gains. Persistent is marginally higher as well. Deep Industries won a big order, but there's been no major reaction to that. Mazagon Docks started the day off quite well, but it's at the day's low. 13% on Deep Industries is what we have. We'll be talking to the management very shortly, but that's a significant order and the stock's reacting to that. On Mazagon Docks, there was an order win. The stock opened up, gapped up, but the gap up has gotten sold into, with some traders probably taking some positions off the table given the broader market sentiment. Ola Electric's 1-month lock-in period has come to an end. 4% of stocks can now be traded freely. Like we've said, this doesn't mean that it's going to be sold, but the stock is lower. 3% lower is what we have. Raymond Lifestyle as well, after its fantastic listing last week, the stock was down 5% on Friday, and it continues to see a 5% cup this morning as well. SJVN is also down 4%. Granules, Tamanna highlighted, is trading lower. KSB, Aptus Value, Raymond Limited are some of the other counters. A check on Bajaj Finance and Bajaj Finserv, only because you've got Bajaj Housing Finance that opens its IPO today for subscription. Bajaj Finance trades 0.25% higher, no major up move there, and Bajaj Finserv also trades flat. VST Industries is down 6.5%, Wipro is down 3.5-4%. So there is pain. Some of the cuts on the street have come rather without warning. The sentiment is very cautious, and it seems like at best we could consolidate, at worst we could potentially go home negative. Soni, a quick word on Bank Nifty. I don't know whether we talked to you about it, but August was a tough month for Bank Nifty. PSU banks on Friday sold off quite sharply. So the trend almost reversed after Monday to Thursday being strong for banks, and then Friday saw weakness, and today is no different. Would you be brave enough to initiate a short trade on Bank Nifty or on the PSU banking index?
I think Bank Nifty, definitely a good breakdown has been witnessed on Bank Nifty on weekly closing basis. We can see a very aggressive call writers around 51,000. So any position in Bank Nifty for a short side should only be looked at a small rise, maybe towards 50,600, 50,700 in spot level. If you see, one can initiate a short from those levels, keep a stop loss of 51,000, and then again from those levels, you can see it sliding towards 5,200, 50,000, because the next support for Bank Nifty stays at 50,000. Instead of going for a short at current levels, just wait for 100, 150 points of a upside in Bank Nifty, a small rise, and then go for a short from those levels, because 51,000 a very clear resistance in Bank Nifty.
It's a very defensive play today in the markets, because if you look at sectoral indices as well, you have the FMCG companies that are the only ones really showing some signs of life, like Balrampur Chini, up about 1.5%, HUL 1%. Now, these are not companies that move massively. Coach, just coming to you on what you've spotted this morning, and a take on any of the players like an HUL, a Dabur, or Colgate right now for a short-term play?
No, Taman, as you rightly mentioned, some of these names aren't really, the trader favorite kind of a counter. HUL we know is up on a back of good news. So if you want to trade in a defensive play, then perhaps at the moment HUL does sort of look like, the only place to hide. But here too, you might find resistance around the 2,900 mark. So I would say don't trade in some of these names. If you want to, run for safety, then perhaps, some of these names might make a cut. Just a quick word or a quick update on one stock that we discussed last Monday, and that is Mangalam Organics. Now, we had discussed this stock when the price was around 540. This is not a slip of tongue. The price was actually 540. All targets surpassed. The stock is close to 700 now. My suggestion, book partially at least. There's still upward momentum. The stock is in an overheating territory. But since there is momentum, you might want to take some money home, but still hold some of the positions. Your trailing stop loss now comes in at 665, but you'd want to book some profit and enjoy the little pockets of green that we are getting to see, however limited, but that we're getting to see today. So quite a run. Mangalam Organics, book partially, hold the rest with stop loss of 665.
Okay. Chakri, the one thing that seems to be very focused is oil prices, right? And the correction that we're seeing there. Does this make OMCs, even with the risk of prices being cut by the government, a play, or would you not quite want to go along there?
I'd rather focus on Reliance Industries because, you're still pricing in mid-cycle margins, because with an interest rate cuts coming in the US and Europe, demand will perk up globally for oil. And also you have anyway the heating winter demand coming in, etc. So there are various reasons to support a mid-cycle margin, and recent refining margins have come off quite sharply. So given I think Reliance Industries is far well positioned, given that it's both O2C business, right from refining to up to the chemical spend.
Okay, just want to mark Adani Green Energy, because what's happened is that they've redeemed $750 million worth of holdco notes. Now, effectively, instead of refinancing, cash flows have enabled them to do this. Standard disclaimer, of course, the Adani Group owns NDTV Profit as well, but this is a large sum which has not gone in for refinancing, but has been redeemed, which effectively speaks about cash flows. And you know, I think Chakri, the other piece is, I mean, for Adani Green or for some of the others, but the fact that power companies are now getting enough cash flows is a big thing, right? Are you constructive power?
Absolutely. You know, Adani Green, and in fact, also we are constructive on. And in power, and the same theme continues to hold, whether it's Suzlon or Sterling Wilson, or even, and that's the reason I mentioned power financiers, because all these companies are financed by the power financiers. Now, you know, given that, you know, there's still weakness in private spending and capital spending, government spending on capital expenditures on power still remains strong, will remain strong.
That's Adani Green. Sony, just very quickly, you know, you've got FMCG and IT that are not doing too badly this morning. We've talked about HUL and some of those other names, but what about ITC? Had a bad fall on Friday, but there's a little bit of recovery this morning. Fresh longs on ITC, and also in the tech pack, anything that's standing out for a short trade?
So I think, Samina, we can see ITC trying to hold on to that 500 support. Now, it's not showing you a very strong recovery either, because there's a resistance around 505, 506. If it's able to cross those levels, there's a possibility that it can show the recovery and head towards 515, 520 odd levels. If you look at a broader structure, it is just consolidating. You know, the broad range for consolidation is from 490 to 500, 510. So that's a level. I think ITC is decently placed. One can continue to accumulate, not for an intraday play, but more like a positional play. And, you know, from the IT space, a short side trade, I think we've shared in the morning a short call on Wipro. I think that's still continuing to hold. 530 was a very small stop loss placed in futures. The stock can head towards 510, 505, because the support for Wipro next stands around 500 levels. So it has to test somewhere around those levels before seeing any sort of a reversal or a sort of a bounce back. So I think it's wise that it's just broken the 20 EMA. One can continue to go for a sell trade in Wipro, keep a small stop loss of 530, 510, 505 can be the targets.
All right. Thank you so much, Sony, Kush, and Chakri. Thank you so much for joining you. Chakri, especially, you know, since our conversation in light of that, today is EV Day. So a great day to start your manufacturing of electric vehicles company, if any.
Thank you. Will do, sir. Good to know. Thank you.
Okay. Thank you so much. And the reason I bring that up is because the next piece is our special segment on EV Day. And the fact that so many players are getting into it is not necessarily a bad thing. It's also telling you how robust that entire ecosystem is. We have a special conversation also lined up on this with Tata Tech. But before that, let's get you an in-depth analysis of the sector to give you actionable insights. Puneet joins in with key data. Yes, Puneet?
Well, thanks for that. So, you know, the penetration of electric vehicles has gone up by roughly 3 times in the last 3 years, and that's more so of course, you know, led by the pandemic as well, which gave rise to personal mobility going forward. So when you look at, you know, it constitutes roughly about 6 to 7% of our current total industry. And when we go forward, this has also been led by the two-wheeler industry specifically, which has led the way because of the number of players that are there. Now, when you look at, you know, the top 5 players in the e-two-wheeler segment currently, we have, of course, Ola Electric, which has grown their sales by roughly over 100% on a very high base of FY23 as well. But do take note of the legacy players of TVS and Bajaj as well, growing upwards of 100 as well as 300% also for someone like a Bajaj Auto. Hero MotoCorp, although on a very small case, has now also made meaningful presence in the segment. But the only disappointing part was Ather Energy, because they were very early entrants in it and haven't been able to capture the market as much. When you look at the market share, Ola Electric, of course, comes to around 35% at the end of FY24, which is month of March, one of the leading guns. And, you know, TVS is another one at the end of FY24, very strong market share it has gained. It was ahead of Bajaj in some ways. And we look at, you know, the market share in FY25 as well going forward, because that also gives a very different picture to what had happened at the end of March. when you look forward and move on to the next graphic and see, what has been one of the key things for all e-two-wheeler companies in the FY25 specifically. Now, Ola, while its growth has been upwards of roughly 60% in this particular time frame, the market share picture has dramatically changed from March to August, and that's been one of the key things to watch out for. So for Ola specifically, the market share has fallen from roughly 46% at the end of June to 31% now at the end of August in just a span of 2 months, while the others, such as Bajaj Auto, have been one of the biggest gainers in market share. And when we move on to the next snap, we'll be able to see the next percentage-wise split also. Now, specifically, you see that 52% is where Ola was at the end of April. This was at the end of the FAME 2 scheme. They were at 46 and now have dramatically fallen to 31% because of entrants such as Bajaj Auto increasing their presence. Look at the market share. It's gone up from 12 to almost 19% now, while TVS has maintained this market share at 20. Do take a note of Ather as well. It's doubled from the low levels of May of about 8%, 50% up by that time. But specifically, it's not been able to capture that market as we spoke about. When we move on and look at what's happening in the four-wheeler space as well, specifically, Tata Motors, of course, the undisputed market leader, 90,000 to 1 lakh cars sold which were electric last year. They have 70% market share on the back of launches of the Nexon as well as the Punch. Specifically, in this particular, we're going to see a lot of competition. Hyundai has already said that they are launching something in this particular year. Mahindra, as well as the other company that we want to look at is Maruti, that they'll be also launching by the Q1 of Q1 of calendar year FY25. So somewhere around January is when we should expect 1 or 2 launches from Maruti in this particular segment as well. And finally, to end this particular discussion on commercial vehicles as well, legacy players are specifically in the EV bus segment is something to watch out for. We spoke about this on Friday as well. The current market share is divided between Ashok Leyland at 33% as well as Tata Motors at around the same percentage as well. While there are also new and incumbent players such as JBM Auto as well as Electra Greentech as well. Finally, what are the factors to watch out for going forward as well? The new FAME 3 scheme is expected to be launched in the next couple of months. This is, of course, the scheme ended in March on March 31st, 2024 and was replaced by the EMPS scheme. But do note that the EMPS scheme had reduced the benefits by roughly 50% to buy an electric vehicle. So the two things to watch out for will be the outlay of FAME 3 going forward, as well as, within the segments such as EV bus segment, what could be the share, as well as for four-wheeler cars, as well as electric two-wheelers as well. So overall, market has been very strong going forward, multiple factors to look at. Back to you.
And it's going to be an interesting day, World EV Day, and of course there was a deep dive by our analyst on what it means. Puneet, of course, highlighting for you where all the action in that space is. A company that's an ancillary in some sense to the EV space is Tata Tech, and we've seen the kind of euphoria and excitement this counter saw during its listing time, but unfortunately in the recent past has sold off quite sharply on back of a big account of it seeing a drawdown. Well, Warren Harris, MD and CEO at Tata Technologies, now joins in to talk to us about what business is and what the key triggers for the company are. Hi Warren, good morning, thanks for joining us. Warren, you're in an industry which has that much needed momentum but still grapples with volatility. How are you coping? Is the outlook looking better today than it did, say, in the early part of this year, or are things tough?
Sure. Yeah, as far as the momentum in the industry is concerned, we're not seeing any tapering of demand. I think there has been a slowdown in EV sales, but we're in the business of investing with our customers in future products, and certainly demand continues to build. So we're excited about the direction that the industry is taking. We're excited about the contribution that we're making, and the biggest challenge that we've got at the moment is capability and skills, and that's why we're investing all over the world and specifically in India.
Interesting, Warren. So you have supply side concerns while demand is looking very robust at the current times. Is that what you mean?
No, the demand, I think, is very robust. Despite the fact that that growth in EV sales has started to plateau, the growth is still very much there. There was 14 million units that were sold last year. This year, the industry, despite the headwinds in places like the US, and certain parts of Europe, is still expecting to sell some 17 million units of electric vehicles. And so that translates into almost 1 in 5 vehicles that are sold today will have some form of electrification. And if you project to the mid 2030s, we expect that to transition to about 1 in 2 vehicles sold will have some form of electrification. So the industry is very much pivoting, not just to electrification, but also investments in software-defined vehicles and in autonomy, and that continues to provide tailwinds for organizations like ourselves. You know, the big challenge that I think we're all grappling with right now is the availability of relevant skills, and so we are investing ourselves in building the type of capability that the industry is going to be needing.
Interesting. Warren, how are you placed as compared to your global peers? I know you have your strengths, but there are players who've been around maybe longer than a Tata Tech, and then there is, of course, a geographical bias too. How do you deal with increased competition and geographical sort of biases?
Well, if you look at our EV journey, it began in 2010. Mr. Tata challenged us to put together an electric vehicle technology demonstrator that was as frugal from a pricing perspective as the Tata Nano, and we revealed that vehicle at the International Automotive Show in Detroit in 2012, and that was the same show that Elon Musk revealed the Model S. So we've been part of the EV journey almost since the outset, and we partnered not only with group companies like Tata Motors and JLR, but also progressive organizations like NIO in China, Polestar in Scandinavia, and we've recently, as many people will know, have helped VinFast launch the 2 SUVs that we took turnkey responsibility for. So, you know, although we are very proud of our heritage in India and the nexus and capabilities that we have there, we're very much a global company, and we have sites and teams that are very close to our customers in different parts of the world. And I think that footprint, that coverage model, combined with the experience that we built up now over the last 14, 15 years, I think is really informing the type of confidence that our customers are extending in us.
Warren, one of the easiest ways to scale up, and since you have supply side concerns, is acquisitions locally or globally. You know, one may argue that the better way to do this is either organic or through partnerships, which you've committed to recently. Anything that you're eyeing to build up your supply side quickly?
I think we're open to both organic growth as well as targeted acquisitions when they make sense. If you look at the history of the company, the history of the company has been informed by 3 relatively large acquisitions. There was the acquisition in 2005 of the company that I was a part of, Incat International, and we followed that up with investments in a company called Cambric in 2012 and a company called Ascenda in 2017, 2018. So the organization has demonstrated its appetite for acquisitions when it's made sense. But we've typically done that thoughtfully, and we've focused as much on capability and customer acquisition, as well as the cultural alignment between ourselves and the organizations that we've brought in. So we're very much open to complementing the investments that we make organically with acquisitions when they make sense.
Then no better time than now for it to make sense, right? Then I'd imagine that you would be eyeing a company, there is conversations underway. Give us clarity, because the environment, like you've mentioned yourself, is very robust.
And you're absolutely right. You know, I think the fact that we're now a public company, we have a balance sheet that is debt free. We have a very healthy cash position on that balance sheet. So it's we are primed to be able to pull the trigger and make acquisitions again when it makes sense. But we're always going to be thoughtful. We have a list of candidate targets that we are evaluating, and we will act with some conviction as and when we believe that the target acquisition will be right for us.
Warren, is the VinFast overhang finally behind you? No more downside expected from them? And also, was this a VinFast specific account problem, or do you feel like this could be seen, or have you seen this across other clients as well? Just want to get a sense whether this is really restricted to one company or a sector as a whole.
I think if you look at our customer base, it's a mix of traditional OEMs and associated supply chains, and it also includes new energy vehicle companies like VinFast. I think with new energy vehicle companies, we have the opportunity to demonstrate the end-to-end capabilities that we represent. And with VinFast, we took the entire responsibility concept through the launch of the two SUVs that we were responsible for end to end. And so, we will continue to expose ourselves to that side of the market because a lot of thought leadership and a lot of innovation is coming from those types of companies. But those companies follow a very specific kind of life cycle. They invest in new product, they then build product, they generate demand, and based upon their ability to be able to sell product, they then invest in follow-on products that will enhance and build out their portfolio. We expect that to happen with VinFast. They've launched now 4 SUVs in the last 12 months. They are generating demand in different parts of the world, and I think if they're successful with satisfying that demand, there's no question that they will invest in follow-on vehicles and capability. And given the success that we've enjoyed with that organization and through that partnership, we would expect to be part of their future plans. I think one of the things that I'm very proud of is the fact that despite the fact that we've had material runoff at VinFast, we've managed to backfill that. I think I've commented in the past that last year outside of VinFast, we grew the business by 30%. The runoff is, as you mentioned, largely behind us. We expect to return to sequential growth in Q2 and beyond. And we have not seen any softening of demand outside of VinFast in any of our other customers. And so we're very bullish about the continued momentum that we are building inside of the company.
Well, one of the concerns when you were listing as well was that Tata Tech has a very concentrated portfolio. Have you managed to change that around? Because we've seen the fallout of that through VinFast, right? Does your portfolio look a lot more diversified today in terms of client base?
Yeah, I think if you look at some of the announcements that we've made in the last 6 months, we've announced the partnership with Agratas. At that partnership advances our capabilities upstream as far as the EV value chain is concerned, to include now pack design. We're also going to get involved in the industrialization of the 2 gigafactories, one in Gujarat and the other in the southwest of the UK. We also announced, I'm sure you'll be aware of the partnership with BMW. BMW came to India, evaluated all of the candidate ER&D organizations, many of which had incumbent relationships with BMW, but they made a decision to partner with Tata Technologies, which we think is a testament to the breadth and depth of our capabilities, particularly in software-defined vehicles. But we also think it's a testament to the attractiveness of the value system that underpins the Tata Group. And so I think those are 2 very high-profile examples of the diversification that we're affecting as far as our customer base is concerned. And we'll continue to be very focused upon a small number of very strategic partnerships that we build with our customers, because the type of proposition that we represent requires a level of customer intimacy that cannot be extended to 100 companies. So we believe that that our ambitions in terms of growth are predominantly going to be satisfied by focused relationships with between 20 and 25 customers.
Just a quick word on the Nifty, and there's been a little bit of improvement. The Nifty and the Sensex both have recovered from the day's low point. The Nifty at its day's high and the Sensex now marginally trying to fight its way into positive territory. We'll wait for it, but the Nifty now not looking as bad as it did at 9:15 this morning. Warren, we were talking about these deals and these strategic relationships that you've gotten into with the likes of a BMW. What's the average time horizon and payment cycle or life cycle of these relationships?
There's no kind of there's no life cycle that defines all of our. There's no standard life cycle that defines all of the relationships that we have with our customers. Some relationships take a while to build. Customers will test us in terms of capabilities. We will build relationships with the leadership team. Confidence will grow. And that will inform the scale that we will then drive jointly between ourselves and that customer. Other relationships like BMW will start from a position of no history between the two organizations. And given the strategic intent of that customer, they will scale very quickly. And that's what we've seen with the work that we're doing with our colleagues in Munich. So there's no one size fits all. But I think the characteristic that we really look for is customer intimacy and strategic commitment between the leadership team. When we are entrusted with next generation product, we're being entrusted with the family jewels of that organization. And so it's imperative that we build relationships that represent a commitment from us to our customer, and just as importantly, a commitment from the leadership of our customer to Tata Technologies.
And Warren, very lastly, because we are short of time, but is there a good chance that you will outpace the growth you deliver in FY24?
We don't provide specific guidance, but we continue to be optimistic about our prospects for growth this year and beyond. So, the momentum inside of our organization continues to build.
Warren, thank you very much. You have a good trip to the US, and we'll hopefully see you back in the city at some stage later. In the meantime, the markets are not doing as bad as expected. It's not too painful on Monday morning, at least for now. But the big talking point is the primary markets. So the secondary market action this morning, at least, has moved to the primary markets with three big IPOs, or rather three IPOs opening today, but one big one. Tamana, I think the big one is going to be Bajaj Housing Finance, the second largest housing finance company in the country, backed by the Bajaj Group. 6,500 odd looking to be raised, out of which 1,700 already done.
Yeah, and you're right, Bajaj Housing Finance is the headline IPO this week, but there are so many. In fact, IPOs has become, in a sense, a larger actionable space than even the cash market, especially for FIIs. FII inflows have been at all-time highs in IPOs, which is also why you see so much action on listing day. And a whole set of IPOs will be opening this week. So we've got right now Deven Choksi, Managing Director at DR Choksi Investment, and Avinash Korakshakar, Director Research at Profit Mart Securities, to just give us a sense and a guide for our viewers on how to pick the right IPO among all the options you have. So we'll show you those graphics on our screens. Cross, Tollins Tire, Bajaj Housing Finance, all of them out this week. Deven, let me start with you on which ones you would pick. Do you have a favorite ranking? Which ones do you think are worth applying to?
Good morning. Well, Bajaj Housing Finance clearly is a lottery. I think it's a stock which one should be owning in the portfolio. Important point, a pure focus housing finance company with variety of customer segments covered. I think be it loan against property, be it developers finance, be it mortgage finance, or be it rental discounting, and both, I think, for the prime sector housing as well as for the affordable sector housing. The business of the company is spread across. So 2-3 things comes out very clearly. On one side, India has a long headroom, long runway as far as the penetration of the housing is concerned. Today, we are just sub 10% of penetration, I think, which could possibly grow as high as 60%, I think, in the mortgage lending business. So from the population, I mean to say. So from that perspective too, I think the runway is quite long, and anybody, I think, with a sizable, the better approach, I think, would definitely have the business to talk about. Bajaj Housing Finance, I think they have particularly set their meter right. I think they are growing the book at the rate of compounded rate of around 30%. Now, when you grow 30% compounded rate every 3 years, you are growing the size to double. And that's where probably I think the business of the company remains more sure. We have seen the companies in past, wherever they have, I think, disciplined way of their producing the growth, they have actually produced enormous wealth for the investors. So from that perspective too, I think this model looks, I think, appealing to me. So on one side, business dynamics definitely working good for them. Bajaj pedigree giving them a good way to access the fund at a cheaper cost. On the other side, I think lending money.
But the problem is you started this sentence by saying it's a lottery. So it's all amazing, but you're saying it's a lottery to actually get allotment. So then in which IPO this week do you have a better chance? Let me frame it that way, because you have PN Gadgil, you have Cross, you have Tollins. So should people look at some of the other options?
So Bajaj Housing Finance, I'll say lottery, because I think here you are not going to get enough amount of allotment possibilities because of the rush. So even if you end up getting one, I think it's a lottery going to be for you. So certainly, I think preference would be with Bajaj Finance. The other two companies, the Cross and Tollin Tires, both these companies are basically catering to the commercial vehicle segment as well as the off-road segment and the tractor segment in particular. Cross is basically more on the engineering side of the business, whereas Tollin Tire is largely on the tire side of the business, but catering to the same sector. So certainly, I think there is a growth involved in it, but compared to the size is smaller. They're relatively, I think, a smaller companies. So obviously, some traders delight, momentum traders delight, as far as I think those kind of things are concerned. They are attractively marketed to at around 34% or 34 times price earning ratio, both these companies. So from that perspective, they are not expensively priced, and the CAGR growth in last 3 years has been smart for both these companies. So obviously, I think the momentum traders would probably find some merit in those two companies. Bajaj Finance, definitely, I think long-term investors delight as far as the portfolio choice is concerned.
Avinash well joins in with a view on some of these very hot IPOs. Avinash, what's the verdict on Bajaj Housing Finance? I believe the grey market premium is also indicating to an 80% premium already on this housing finance company. If one doesn't get an allocation to this in the IPO, do you recommend buying it on listing day, even if there's a 50 to 60% upside? And the reason I ask this is while the fundamentals are solid, it's still a very expensive stock.
Yeah, I think, good morning, Samina. See, my guess is that this is an issue which is coming from the Bajaj Group after a very long time. And I think the Bajaj Group has rewarded investors quite handsomely. Valuations apart, I think, this company has got a great future. The runway for housing finance in India is extremely large. And I think Bajaj Housing is the second largest housing finance company. And with the kind of funding they get it, I'm quite sure that in the next, say, 2 to 3 years, they should be, doing a very large kind of AUM book and with a very impeccable asset quality. So I think, your question whether one should buy the stock on listing, because obviously this issue will get heavily oversubscribed. Yes, I think if you've got the next 2 to 3 years in mind, this is a stock which has got to be kept in your portfolio. Please don't miss it. But you need to give it that much time, because obviously when you buy a stock at 50-60% premium, obviously you're buying at an elevated level. But I think growth prospects seem to be quite solid. And I would not be surprised that, over the next, say, 12 to 18 months, based on the kind of news flows the company announces, the performances the company delivers, the investors could still make a good amount of money. But I think over the next, say, 2 to 3 years, it's a portfolio stock. One should definitely stay invested.
Okay, let's talk about the others as well. And we've briefly spoken about it, but Cross, and I want a view from both. But Avinash, I'll start with you first. The CAGR performance, in fact, I was looking at a note from Deven Choksi Research. 44% CAGR for the last 2 years, remarkable ROCs for an auto anch. Is it expensive though, or is it something that you would subscribe to? Avinash, the question is to you.
I think, Neeraj, if you look at the longer term picture, they are into basically suspension trailers, machined components. And I think this is a very, high end engineering kind of business. So I think despite the fact that the stock may appear a little expensive, if one were to take the next 2 years and see the kind of growth opportunity, then I think clearly, they've done a top line of 620 crores, a bottom line of around 45 crores. And as you said, the CAGR is almost 45%. So I think, if they continue to maintain this growth rate, then I think the markets could definitely be rewarded. And I would not be surprised that this issue could get a solid response, considering the fact that this is a very high entry business. It takes a lot of time to become a well-established vendor. So, machining is a very high-end activity. So yes, from a longer term perspective, yes, even from a listing gain point of view, there could be a reasonable listing gain also for this stock.
And Deven, good morning. Lovely note by the way on cross. I'm just trying to understand. So listing gain notwithstanding, and let's assume that the listing gain happens as Avinash is saying. What about post that? Is this a company that you would keep in your portfolio, or are the other listed auto anchs giving you a better opportunity? Cross, that is.
Yeah, and Neeraj, good morning. Well, I think definitely other auto anchs are there in the portfolios, but the fact remains that I think this company is getting more amount of prominence. 2 or 3 reasons. Government is increasingly spending higher amount of money on the agriculture and agriculture related activities. So obviously, I think the sector in which they are present is largely the tractor, the farm equipment side of the activity, wherein I think the majority of the machine components are going into. So that is one area where we are reasonably sure about, I think, the kind of demand scenario getting generated. In fact, in last 2 years' time, if you see this particular growth, it gets validated that because of the larger emphasis of the government, I think this kind of companies which are up till now sleeping, I think they have started suddenly waking up because of kind of business they started attracting into. And I think given the kind of pedigree for a longer period of time that they are enjoying, I believe that I think the market is ready for the products I think which they are supplying to different OEMs as well. So from that perspective, we remain reasonably confident about the growth, at least if not more, for next 3 years. And that's where probably I would like to think that such kind of companies which are relatively missing in the marketplace, I think they would probably find the presence. The off-road vehicle markets, the tractor, the farm equipment markets, they are the ones I think which are niche markets, and there comparatively the margins remain relatively better as compared to I think the other peers. So to an extent, I think they should be performing better going forward. And as we have seen the improvements in efficiency, we believe that the margins are likely to remain a little bit on a higher side. Given the lower raw material cost advantage that they are now getting, is also going to be another factor which should be giving sufficiently good clarity for next 2 years on the margin front for this company.
Just Avinash, your view on Tollens as well. Tollens is the other one that opens today. Are you excited about it?
No, Tamanna, in fact, this is a company which is largely a tire trading company. 75% comes from tire trading business. And basically the USP for the company is that, it's situated in Kerala. They've got 3 facilities. So I think raw material problem is not there. And I think I was just seeing the numbers on a top line of 227 crores. They've generated a PAT of 26 crores, which is quite attractive. So I think, if the company is able to maintain these kind of margins and continue its business model, because tire trading is essentially a very solid business. Very few players in the market apart from LG, which is a market leader here. So, in terms of valuations, the stock appears to be fully priced. But yes, if the company can generate a decent ROE and a kind of a good performance going forward, then I think this issue would definitely get a decent kind of response. Most importantly, crude prices have started correcting. So I think that also should add to their margin. So we have given a subscribe to this issue for our investors, but yes, from a slightly longer term horizon.
Okay, Deven, about 50 seconds left for Gala Precision to list. Any thoughts on this one, the new listing today?
Honestly, Neeraj, I think haven't looked into very detail about this company, so probably I think take another chance to talk to you later.
Yeah, sure. Avinash, quick, same question to you. 40 seconds left. Anything on Gala?
I think, Neeraj, looking at the response the IPO got, I think one should easily expect a 50 to 60% kind of premium on listing. The company has done remarkably well, and I think the issue has been subscribed significantly well. So I think at least expect a 50 to 60% pop up on listing, and thereafter I think we'll have to see which are the marquee investors who actually buy on the first day. But yes, fundamentally, company appears to be on a strong wicket.
Okay. Gentlemen, both of you, thank you so much for agreeing on a short notice to talk to us on the most active things here in markets currently, which is IPOs. And that's Gala Precision Engineering and a very happy promoter group ringing the bell. And well, let's see what the price is on listing. 72 versus 721 versus issue price of 529, which is a 43% uptick on listing. Not bad at all. It was expected, of course.
Thank God. I thought you were going to say, oh, just 43%. It's pretty good. I love the pictures of the promoter and their family ringing the bell. I think it's so sweet, and you actually get a sense of what a big day it is for them. And of course, we look at it purely from the point of what are the listing gains. 50% of the people who got allotment are probably going to sell it, but for them it's a big deal. So I like that bit of it. Yeah, the IPO market is hot, and that's where the FII money is also going, because at least some valuations still on the table.
Also, I mean, Tamanna, just before we wrap up the show, listing is such a special thing. You are taking birth on a stock exchange. Your stocks will get traded, and we've seen enough examples of companies gaining 100, 200, 500 times in the course of their life cycle. Sure, one of the companies that have gotten listed in the last 1-2 years will probably go on to do that kind of gains as well and create wealth for itself and shareholders.
On the flip side, once you list, you're open to all kinds of scrutiny. We will be sitting here and looking through everything that you're doing in your company, and then it's a whole different ball game. But anyhow, a lot of listings in the offing, a lot of IPOs in the offing. We hope this conversation was useful for you. We'll wrap up India Market Open here, but stay tuned. Talking Point up next. We're joined by Mihir Bora, CIO of Trust Mutual Fund.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है, they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन डिपॉजिट मोबिलाइजेशन जो है आज भी वो फिजिकल है। टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your...
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat for our guest today is banking on financials the right bet under the current context? Is IT in for a bit of a turnaround? Because his bets seem to suggest that they are bracing for some bit of an uptick in IT relative outperformance relative to the past. Have aerospace and defense and some of the sectors which have run so well in the recent past finally run their course, or could there be more? And of course, because he looks at macro with as much keenness as micro, we cannot let Mihir Vora go, or we cannot start a conversation with Mihir Vora without talking about the global macro. He joins in on the show today. Mihir, thanks so much for joining in. I was really hoping that we do it in person, or maybe some other time. I understand you had to go to your office today, but yeah, some other time in person from our studios. But thank you for taking the time out, Mihir. And just such a perfect day to get you. We've seen the non-farm payroll data come out. And the interesting thing is that maybe earlier the market wanted weak data to lead to some heavy central banking action for the markets to do well. Now the market seems to be worrying that yes, there will be central banking action, but growth seems to be a problem, and therefore there is a worry out there too. How do you look at this curious set of events?
Good morning, Neeraj. Thanks for having me. Always a pleasure to be on your show. So market always wants Goldilocks, right? But you may not get Goldilocks all the time. So market wants the US economy to slow down just enough so that there is a justification for rate cuts, but not too much that it goes into a recession or something like that. So that's something that is wishful thinking. My base case is that the US continues to slow down because if you look at the overall macro picture in the US, the excess savings of the households has actually been depleted. The excess savings that we saw because of the COVID stimulus, that is depleted. So you can't continue to expect the same kind of traction in retail sales, services, etc., that we have seen in the last 2-3 years. And the farm rolls data and the other data points in the last few days that we have seen, especially on the job creation side, there is a distinct sign of slowdown. So I think my base case is that the US continues to slow down as far as the retail consumption, etc., is concerned. So you may see some downgrades on that space. On the flip side, that may not immediately lead to technology spending because corporates have still made a lot of money. You are seeing earnings resilience in the tech sector, at least so far. So you may not see the immediate impact for Indian IT services. But for the global economy, as far as commodities are concerned, as far as general goods and services trade is concerned, you can see some slowdown.
Got it. Okay. So Mihir, there is a slew of central banking decisions. I think we have ECB this week and the Fed may be following some of the European central banks. Based on your base case of the US continuing to slow down, but we're also looking at Fed action, even if it's just 25 bips or 25 basis points in the current policy, but maybe some more in the times to come. What is your stance on risk assets in general? We'll come to India valuation specifically, but I remember you telling me that central banks have been the driving force behind market moves ever since COVID lows. Does that continue to be the case, or would you be skeptical on risk assets?
I would be a little circumspect, but not necessarily for, say, flows to emerging markets, because what the banks are trying to do is make sure that the dollar does not appreciate too much or depreciate too much. But if the pace of rate cuts in the US is faster than the rest of the world, then you might see a gradual depreciation of the dollar against the major currencies, which can lead to a little bit of positivity for the risk assets. But my observation over the years is that ultimately it's growth that matters. And if the rate cuts are happening in a slowdown cycle, then it does not necessarily have a salutary impact on risk flows. I think the fundamental requirement is growth, and if growth is slowing down, then you can see some volatility and some uncertainty for sure.
Got it. Now, just trying to figure out what happens sectorially, and I'll come to individual themes or individual ideas in a bit, because I see some of the changes that you presumably have made to your portfolios too. So would have some questions there. But before that, is it a turn for some of the lesser performing names which are trading at better valuations to make a bit of a comeback cyclically, and for some of the ones which have done really well in the last 12 to 18 months to take a bit of a breather or maybe even correct? Could there be a barbell strategy of sorts?
So I think the base thesis and the themes would remain the same. We've discussed this in the past, that we are more bullish on the domestic economy compared to the rest of the world. So that base case remains. Within that, we are still of the view that the financialization of savings and premium consumption will structurally continue to do better. And a physical asset creation, which includes infrastructure, manufacturing, real estate, will continue to be the focus area for the markets. The other one is, of course, that new business models will continue to get evolved. We'll see a lot more companies with these new age, new tech companies, which will be an interesting space to watch out for. So these 3-4 themes, I think nothing has changed in the last 4-5 months. That for us, that remains. Within that, what has happened is that while, say, 1 year ago, 2 years ago, some of the manufacturing themes, defense, etc., even railways themes were relatively unknown and under-owned in the institutional portfolios. So, of course, they had a dream run. We saw many multi-baggers in that space. But now I think we probably overshot a little bit, and typically, when you have too many thematic funds in a particular segment coming in, it means that the sector is now well discovered. So to that extent, the last 4-5 months, we have seen a slew of funds in this physical asset creation space, manufacturing, defense, etc. And stocks, of course, did run up and make a peak. So I think for the time being, while we are very, very bullish on these segments in the medium term for 3 to 5 year view, probably stocks had overshot and there's a bit of a correction. So in the last couple of months, we have reduced allocation purely based on valuations. I don't see too much of a threat to earnings, but purely because of valuations overshoot, we have reduced space in some of these segments. Over the last 2-3 months, what has also happened is that we are incrementally seeing some positive commentary from the companies which deal in the rural markets. So it's not like all gangbusters and things doing very well. But if you look at some of the data points like apparel consumption in tier 2, tier 3, tier 4 towns, commentary from some of the FMCG companies, there is a feeling that probably the worst of the slowdown in the rural consumption is probably past us, and on a good base with a good monsoon, we should start seeing some pickup. So rural consumption was something that we were negative on, but probably we are getting incrementally more positive, and we've kind of added a little bit of exposure in this theme. So that's one thing to look for. I think rural versus urban consumption wise, rural incrementally may do a bit better. Urban still is a mixed bag. Cars are not doing that well. Rural two-wheelers which are rural, they are doing well. So I think rural versus urban, rural is beginning to look a little bit better. The other big one actually is financials, where we do see a theme where the market is expecting rate cuts. But the impact of rate cuts will not be uniform in the short term. So to that extent, the markets are kind of rewarding lenders which have a predominantly fixed rate book, and that happens to be typically the NBFCs. So within lenders and non-lenders, so on lenders we have banks and NBFCs. Non-lenders we have a host of companies in the capital markets, insurance, wealth management, broking, asset management space. So that's the non-lenders. So we are more positive on non-lenders to start with because it fits in with the financialization of savings theme for us. So we are more bullish there. And within lenders, within bank and NBFCs, at least for the medium term, not medium term, I would say short term, we are a little more positive on the NBFCs because a lot of the NBFCs have a fixed rate book. And when interest rates come, the liabilities will get repriced downwards and immediately. Assets will take a little bit of time. For the banks, most of the book is floating rate. So the assets will get repriced faster. So you might see a little bit of compression for the short term for banks. So tactically, I would be more positive on the NBFCs within the lending space.
Okay. So, well, viewers, that's the whole gamut of things. I want to start off, though. I'll talk about defense in a bit. I want to start off with the global facing sectors, IT, and to an extent, pharma. Now, I heard you say that you believe more in the domestic themes and less on the global facing themes. But I do see, and correct me if I'm wrong, but relative to June, in July, your exposure to IT has increased from what, sub 6% to maybe around 9%. Is that true? And if so, why is that a bet when you are more focused or more constructive on domestic?
Sure. So that's more of asset allocation based on the profit booking that we did in some of the sectors that I mentioned. So, for example, while we continue to be very positive on defense, infrastructure, manufacturing, etc., we had a huge exposure to that segment, which we have trimmed dramatically. We almost had 20+% exposure, which we have in the last couple of months trimmed down to about 10%. So that the reallocation of that 10-12% that we do, some of it obviously went to IT, where we were significantly underweight. So you can say we're not like very positive on IT, but we've significantly reduced the underweight position that we had.
Okay, but you're not too constructive on IT. This is just a reduction. Okay, what about? And before I come to pharma, what about within IPO, Mihir, IT services, ER&D, and we have some of the tech plays which are more domestic focused, and we've seen the kind of gains that the Zomato, PB Fintech, now even a Paytm is reviving, etc. And there's some of the others too. Within this bucket, and I'm presuming that even the domestic tech plays form a part of this 9%, correct me if I'm wrong again, where is it that you are more constructive on within these buckets?
So, I don't really treat these new business model companies as IT per se, because they are more consumer companies in my view, because they face the consumer and use technology, of course, to reach the consumer. But for me, they are more of consumer companies. So we are very constructive. That's one of the things that we are definitely playing on, this new business models. So that's a definite plus for us, yes for us, overweight. Within IT services, I would say it's a stock pickers market, but in general, if I were to look at the top 4-5 companies, we are talking about at best single-digit kind of growth. My view on the large companies large IT services companies is that we will revert back to pre-2019 growth rates, which is again single digits for the medium term. The spike that we saw because of COVID spending on IT by US corporates is past us. So on that base, I don't think they've not, let's face it, they've not tweaked the business models dramatically to give us the confidence that they are going to grow faster than what they did in the past. So to that extent, it'll be a good, predictable, medium growth, medium expectations kind of sector. But if you expect the Indian economy to outperform the rest of the world, then you probably don't want to be very overweight on the large IT companies. In the mid and small cap IT space, IT services space, there are companies which have different target segments, as you mentioned, ER&D. There are companies which focus more on BFSI. So my guess is that you might see some more attraction on the BFSI spending space in the US after a long time. AI probably will give some opportunities for some of those companies. So I would say that IT will more for us be a stock pickers market, where we would like to pick stocks in the mid-cap space rather than go very overweight on the large IT companies.
Got it. Now, pharma is in focus. Before I go to Mihir on his thoughts on pharmaceuticals, there are some news announcements that have come in today. It would be good to get in my colleague Varsha to give us a lowdown of what have been the latest developments and what are the stocks that are moving as a result of that. Varsha, good morning.
Good morning, Neeraj. So, few of the pharma stocks are actually under pressure. Now, let's start with Lupin, wherein Lupin is facing a legal challenge related to its generic version of the drug, which is used to treat kidney problems. Now, the original maker of this drug, which is Otsuka, is challenging a recent court verdict that favored Lupin's generic version of the drug. And the Lupin was expected to launch this product in April 2025. However, this new appeal introduces uncertainty whether Lupin will be able to launch this product or not. Now, the primary product for the innovator is contributing almost $1.5 billion of revenue for the company. So that's the market that Lupin was actually targeting. Let's see what Citi has to say. So Citi has a sell rating for the stock with a target price of 1700, implying almost 24% of the downside. Now, Citi says that Lupin may choose to delay the launch of this generic drug, and the company may not capture as much as market compared to a typical launch that was expected. And this will actually impact significantly to the Lupin's financial numbers, as Citi was expecting a 30% contribution from this product in FY26. And then we have Granules India, wherein they've got 6 observations from US FDA for their Hyderabad plant. The inspection was from August 26 to September 6, and this facility is actually crucial for granules and contributes, so major contribution comes from this facility and is crucial for manufacturing finished doses and the intermediate products, and it also supports global operation for the company. We don't have the revenue contribution, but we do have the capacity. It has a capacity of almost 23,200 tons for intermediates and 26 billion units for their finished doses. Then we have Suzlon Pharmaceuticals, wherein US FDA conducted inspection for their subsidiary plant, and which was categorized as VAI, that is voluntary action indicated. That means that US FDA has found some lapses, but those were not severe enough to take any kind of action, and the company is therefore expected to take the voluntary actions for these regulatory approvals.
Thanks a lot for that, Varsha. Mihir, pharmaceuticals, the price action seems to suggest that there is a bit of flow into some of the specific pockets. But the US generic makers have already had a rally in 2023 too. Are you constructive here, or are you part constructive? Would love to know.
Pharmaceuticals, we are constructive now compared to say 4 months ago. Couple of things. Structuring the sector did go through its ups and downs in the last 4-5 years. But I think the worst of the generic pricing pressures are most likely past us. So that's one good thing for the generics companies. But I think post-COVID, what has also happened is that a lot of companies are now looking for the CDMO opportunity for India, the CRO opportunity for India, because like it or not, people have realized that we need to, for the sake of security, diversify away from China. And China is really big on CDMO. So I think apart from the generic opportunity, the CDMO opportunities have also opened up for Indian pharma companies. And that's the reason why we do think that in the next 3 to 5 years, this sector should do quite well. The good thing about the sector is that you also have companies with a predominantly domestic exposure. So there's a wide basket to choose from. You can choose companies which are more like FMCG companies because they do the local markets. You can choose the generic companies, or you can choose companies which are in the research and CDMO space. So there's a whole gamut of companies to choose from, which makes it a interesting sector.
Okay, and watch out. So Mihir, again, because it may be a very bottom-up theme here in pharma, but also from sectorally divvied up, right? Healthcare very divvied up, CDMO as you said, or pure pharma, or even other facets of healthcare. Is there a first amongst equals there? Is there a theme within pharmaceutical that you like more versus some of the others?
Sure. So if you look at the incremental target markets which are opening up, I would say it's the CRO and the CDMO space, because that's something that not many Indian companies were focusing on. And this is something that's opened up in the last 2-3 years, because the multinational companies are actively looking to source from India. So that's one space where we can see incremental action.
Okay. Remember, viewers, by the way, me just one quick follow-up there. I don't want to make this entirely pharma discussion. One last question on China, but one quick question. There's a lot of talk of the Biosecure Act being passed in the US this week and the impact that it could have on CRO, CDMO. Is that something which is very big, or is it something that is difficult to analyze right now?
No, it is a significant. It's a significant move. You may not see the impact of it in the top lines of companies for 1-2 years, but structurally it will open up a whole new, opportunity. The target market incrementally can be quite large.
Got it. So significant, viewers, but not immediately. Now, Mihir, one final word, and I started with macro. I'm ending with macro. The only difference is I started off with the Fed and central banks, and I'm ending with China. You look at these correlations very, very closely. I would love to know, China deflating the way it is and the impact that it has on growth globally, because it's such a large portion of the global economy, and the impact that it has on commodities per se as well, because it's such a huge guzzler of commodities until it started deflating. What is the slightly medium-term impact that you foresee if China continues to deflate the way it is currently?
Specifically for commodities, you are asking?
In general and in commodities both. I would love to pick your brains on everything that you think about when you think of China.
Sure. So first of all, I don't believe that China GDP growth is going to come back for a long period of time, just because they have peaked out in terms of working age population 4 years ago. Second is they have also created all the infrastructure and real estate that they need. So there is a huge oversupply of infrastructure. There is a huge oversupply of real estate in China. And both these, of course, are huge guzzlers of commodities. So it's not a very good scenario for Chinese consumption of commodities. And China happens to be half the market or 70-80% of the market in certain commodities globally. So I think commodity price inflation is not going to come back in a hurry. That's my base case. The other risk that you rightly pointed out is that because China needs to keep supporting its growth, and if you can't build more infra, if you can't build more real estate, what do? So they are ramping up manufacturing, and they are ramping up manufacturing not only on the commodity plays like say your luggage and toys and stuff like that, but they are actually going high tech also. So that, I think, in terms of deflation, will continue structurally, and you will see China becoming more dominant. The hope is that, of course, in companies like India, Vietnam, etc., will come up as alternate manufacturing base to China. But China is not going to let that go easily, because they also need to keep growing. So it's going to be a race, and while we are very positive on Indian manufacturing, etc., it's not like it's going to fall in our laps without us doing anything. We really have to work hard towards it.
So therefore, okay, just final quick 30 seconds or 60 seconds. If China does expand these manufacturing capacities the way it did in the past, or maybe more than that, and even if there are duties, if goods which are cheaper land in neighboring countries in a much lower cost, then it has an impact on product price inflation for manufactured products even in India, right? Even if there are duties on Chinese imports. Does that therefore make the attractiveness of the Make in India story slightly lower?
See, we'll have to be smart about it, and I think the government also realizes it. So you have, for example, of course, duty is there. We'll have to be smarter about the free trade agreements that we are signing. For example, you can't, let other countries act as a conduit. And third is that there are non-tariff barriers that also what we've seen from time to time that the government use, like BIS hallmarking, etc., which kind of is not, which makes it a bit difficult for Chinese companies to import, etc. So I think there is awareness within the system, and PLI is another way of countering it. So on one hand you have tariffs, and on the other hand you have kind of PLI incentives for manufacturing, which makes it cheaper. So I think we are trying to go about it, from all sides. And we are seeing good progress. At least the last 2, 3, 4 years have been very heartening in terms of electronics and a lot of other sector. But as I said, you can't be sleeping at the wheel. We'll have to be continuously vigilant and proactive.
Got it. Mihir, it was such a pleasure talking to you. Thanks so much for taking the time out and being with us, and look forward to talking to you in person soon.
Absolutely. Thank you so much.
All right. That's Mihir of Trust MF. With that, it's a wrap on this leg of Talking Point. Thanks so much for tuning in.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया. हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past.
Hello and welcome. You're watching the F&O show, and over the next half an hour, we'll take you through all the F&O action in the markets. A quick check of how the street is doing. Friday was a tough day for bulls on the street across Nifty and Bank Nifty. This morning, though, the picture not looking as bad as we'd have thought. Nifty 50 pretty much at the day's high point, trading flat with a cut of only 16 points. A quick check on how the picture is playing out. The Nifty futures are trading in a premium, and that's what we're picking up on right now. And of course, if I can quickly get a check on what the open interest picture looks like. Open interest seeing a slight decline, indicating that the upside potentially on the Nifty could be capped. Across Bank Nifty, though, the picture is slightly different. Bank Nifty, which has or was the best performing index up until Thursday, turned out to be one of your top losers after Friday's trade. Nifty Bank trading at a good premium of 200 odd points. Open interest also seeing a marginal increase, indicating that there could be some more, or rather there could be a bit of a trend reversal on Bank Nifty, and that is evident in the way Bank Nifty trades right now. Nifty Bank trades with marginal cuts and oscillating between gains and losses from the way we look at it, not doing too badly on Bank Nifty for now. The breadth of the market's not too bad either. It's actually improved substantially in the last 1.5 hours or so. You still have a handful of losers, but on the gaining side, there are a few stocks that are seeing some pickup in interest, largely coming in from Pharma and FMCG. So while defense may not be a theme, defensive stocks is what you could see some traction in. Across the broader market universe as well, what we are seeing is stock-specific trade largely coming in terms of news that's driving some of these counters. But the top few gainers on the Nifty 50 come in from the Nifty 500 come in from the Pharma pack. Glenmark is up 4%. Alembic is also trading with a gain of 3.5%. You've got a few other names like Narayan Rudalia that trades with a gain of 2.5%. Some gains for Eris Life Science, Jubilant Pharma Nova, Gland Pharma also trading marginally higher. On the sell side, a couple of names that are shooting up in terms of losses are Jupiter Wagons down 6%, Godfrey Phillips post that board meeting and Binal Modi turning out to of course controlling stake of the company. The stock is seeing a big cut of about 5.5%. Raymond Lifestyle hits lower circuit second straight day after listing, down 5%. PFC, Raymond itself is trading lower. ONGC, Prestige Estates, fertilizer counters all trading with a clear downtrend in today's trade. What you also want to be a little mindful of is that the markets are currently lacking any sort of fresh triggers domestically, and internationally the big cue really is the Fed rate cut on the 18th of September, but it seems like we would be between now and then reacting largely to global cues in terms of trade. The Nifty Sensex are off the day's low point, and that's what I'm taking a little bit of heart from. Well, we have with us our guests who are now joining in with their F&O strategies. But just before that, we will talk to, of course, that's of course the queries that are on my screen. But if I can quickly get the names, we've got Vinay Rajani and Aditya Arora both joining in with their trading strategies. I'll start with you first, Aditya. What is the trade on the index? Nifty futures are in a premium, but the OI is still showing a downtick. Doesn't seem like there's much of a trend reversal, at least on Nifty for now.
If you look at Nifty futures, then I think market are rebounding pretty smartly. but we can't trust the momentum, because yesterday also, on Friday also, we saw a lot of zigzag movement in Nifty. Same is true for our markets and international market. So can't trust the movement right now, but we can have level-based approach in the market. Important support for Nifty should be 24,700. Until that is not broken, one can actually play this rebound trade in the intraday. And if 24,700 is broken, then probably a severe downside could open up in Nifty.
Vinay, what about you? What is your strategy on the Nifty? I mean, it's trading flat and we seem to be doing better than the rest of the world this morning. But no clear signs of a breakout, or at least the good news is there's no breakdown as well happening just yet.
Yeah, so follow-up selling is missing somehow. On Friday, Nifty closed on a weaker note, and Bank Nifty, in fact, continued to underperform. But Friday's close was below the 20 days exponential moving average. Right now, the 20 days exponential moving average is placed at 24,900. Today's high is almost around that level, so that is the immediate resistance, we can say. And going by the data, in last week, we witnessed a short build-up in the Nifty as well as in Bank Nifty. So Bank Nifty, if we go by the only Friday's data, Bank Nifty witnessed some short build-up as well, and in Nifty we witnessed some long unwinding. So overall, Bank Nifty is looking weak. Somehow today it is showing some resilient movement, not falling that much. And till now, so far so good, we can say it is trying to sustain. But we need to see whether Nifty is able to cross 25,000 to 25,100. Strong resistance is there, because call writing happening at that strike 25,000, 25,100. So that is a strong resistance that Nifty is going to face resistance there. So downtrend is still there. No doubt from the lower level it has recovered a bit, but it is too early to say that it is a reversal. So better to remain with the overall trend. Overall trend has been bearish. And what we advise to our traders and clients is to maintain the short position with the stop loss of 25,100. Unless we see any decisive level above that, the view for the market remains bearish. And as far as Bank Nifty is concerned, Bank Nifty is likely to underperform only, and Bank Nifty has got very strong resistance around 51,000, where maximum call writing has been seen and witnessed. So that is a strong resistance. So that could be a small bounce, but unless we see a decisive level above 51,300 to be precise, we are cautious on Bank Nifty as well. So today we need to see how this market reacts. So, but it's too early to say markets have reversed. So better to wait for some resistance levels to cross to take a bullish view. But otherwise, we are right now taking a bearish view and sell on rise view as far as intraday view is concerned.
Quickly, Vinay, so is it a fair assumption for me to make that you're recommending fresh shorts at this level, or you're indicating to avoid at these levels, either on the long or short side? Or could fresh shorts be taken up?
Yeah, so I would go by today's low in Nifty. Today's low was 24,753. If that is broken again, then definitely fresh shorts position can be looked at. So below 24,750, I would go short with a stop loss of 150 points, and downside target could be 300 points. So that is a trigger level conditional view I'm giving. So below today's low of 24,750, I'm giving a bearish view, and one can initiate fresh shorts below that.
Only if today's low gets taken out, a fresh short should be initiated. That's the word coming in from Vinay. Aditya as well, not too convinced about the Nifty and Bank Nifty. Well, we'll do a quick detour. Gentlemen, stay with us. We've got Gala Priskin that has listed today at a 40% premium to its issue price on the exchanges. We did have the opportunity to talk to the management on their issue and what they would be doing with the IPO proceeds and margin outlook. Let's listen to the slice of that conversation.
So basically, we are in three product categories, as you said, disc springs, coil springs, and fasteners as well. We cater to three geographical markets: India, Europe, and USA. And we address three market verticals, which is renewable energy, where wind turbine and hydro turbines are our customers. Then we address industrial, where mainly electrical customers like ABB, Schneider, and Siemens and all. And then third category is mobility, where we address automotive as well as railways, where our customers are Schaeffler and Valios. And in railways we have public as well as private sector companies as our customers. So the simple business models is, around precision components for these industries, for global OEMs.
Okay, so precision component manufacturing for global OEMs across the three industries that you've mentioned. Now, I want to come to your objects of the issue you've raising about from the fresh issue proceeds of about 135 crore. You plan to set up a new facility which is near Chennai, and again, additional capex would be required in your existing Bada manufacturing facility. I want to understand what is the additional capacity that you are expecting from the new unit, and also when are we expecting to make this plant operational? Mr. Jalan, I want to come to you on this question first.
Sure, very much. So out of the new equity which we are issuing, 135 crore something will be toward the fresh equity, and we will be deploying 37 crore for new facility at Chennai, Vallam, Vadgalam. And the capacity in the rupee term will be approximately 110-120 crore, which will be generating from this capex, all put together. We are expecting to start this facility by end of this last quarter, FY25 Q4 quarter. From the capex which we are putting in our existing facility at Vada, which is approximately 11 crore, we are seeing the additional turnover will be approximately 40 to 45 crore from this additional capex.
I want to understand now, with the additional capex and the revenue turnover, what is the kind of growth that we are projecting in FY25 and even in the next 1 to 2 year scenario, if you can expand more on that space.
Sure. So basically, if you see that historically, in last 3 years, we were able to grow at almost a CAGR of 25%, and the type of the market which we are catering, the new market, fastener, particular for fastener, we enter into. We are seeing considering the market, the capacity what we are putting up, we are expecting the similar type of growth in coming years as well.
Okay, so a similar growth level that we should be looking out for. Now, what is interesting is your margin profiles. There has been a consistent pickup that we are looking at. Last 3 years, 15% mark. From 15%, we have seen this reaching to the 20% mark. Firstly, I want to understand whether the margins will sustain at similar levels, and considering your margin profile, the gross margins have remained in the 59%. So where are the key additions that we are looking at? What are the key growth drivers that is leading to this margin expansion?
Yeah, so basically, as Kedgala mentioned, we are in 3 vertical, industrial, renewable and mobility, and we have more than 40%, around 40% export. So the mix of the margin which comes from the different end industry, different end customer, India market, global market. Considering the all in coming year also, we are projecting the similar type of gross margin, similar type of EBITDA margin of 18 to 20%.
Right, that's of course Priskin that has listed, Kala Priskin, that's listed on the exchanges today. A quick check on the stock. It had a stellar debut and continues to do well despite the broader market sentiment not being too supportive this morning. Vinay, let's talk stocks. What are your trading recommendations for our viewers this morning?
Yeah, so I would go short in the Navin Fluorine, which is a chemical company. It has been downtrend. The primary trend has been bearish with the lower tops, lower bottoms, and after some pullback, it has started its downward journey again. So I feel that Navin Fluorine, which is a part of F&O stocks, can be shorted here. So I would recommend selling a Navin Fluorine September future around 3260. I'm recommending a small stop loss of 3320 on the higher side. On the downside, I'm expecting a downside target of 3165. So this is a recommendation on the short side. The long side, I would go with the NGL. So this city gas distribution companies have been showing strength. The stock is trading and hovering around its all-time high and has been resilient in the downfall of the market. So I feel that this space is likely to outperform, and NGL is looking very strong on the charts. I would go long in NGL September future around 1855. I would recommend a stop loss at 1820 on the higher side. I'm expecting a target of 1910. So the time frame for both the recommendation would be 2 to 3 trading sessions.
The markets have actually turned positive in the last few minutes. We are pretty much at the day's high point on the Nifty, 24,881, 30-point gain on the Nifty. The Sensex also trades marginally higher, and Bank Nifty is seeing a gain of 0.3% as we see it. So it's not too bad anymore. At least there's been an improvement from early trade this morning. Aditya, what about you? What are your top stock recommendations for our viewers this morning?
Right. So we are seeing this kind of a seesaw movement since last few days, and market is very divided. There's one segment which is clearly underperforming, and there's another segment which is clearly outperforming, but steadily, step by step. So one of the sector in that category is Nifty FMCG space. I picked up two stocks from the same category. The first one is ITC, which is not correcting in the declining market, but consolidating. And when market becomes little steady, it slowly inches up. So over here we have a bullish strategy on ITC. We can buy 505 call at 9.95. We can sell 515 call at 5.75. Maximum loss potential over here is 6,720 and maximum profit potential is 9280. So that's my first strategy on ITC. And second one is also from FMCG basket, which is Marico. Today it's showing little resilience and bouncing back from the support level. So we have a bullish strategy on this one. We can buy 670 call at 15 rupees, sell 680 call at 11.25. Maximum loss potential is 4,500 and maximum profit potential is 7,500.
Well, those are a few strategies coming in from Aditya, trades that are looking good. I'll quickly go across to our viewers now who've been writing in with their questions. Sai from Kerala has written in. He has the Nifty 25-100 call at 226 premium, September 12th expiry. Vinay, you take this one first. What do you recommend Sai should do with his open positions on the Nifty?
Yeah, so it's a simple, as I said, that today's low is a very strong support from the where we have seen a nice bounce back. So if he is holding long positions at 24,000, I hope he is long, right? 24,000 call, 24,100.
Yes, that's right. He is long.
Yeah, so I would recommend him that today's low should be kept as a stop loss. If today's low is again broken, then one should cut their long positions. So definitely, and there is a strong resistance around 25,000, 25,050 band. So around that level, one can exit the long position.
Well, that's the recommendation coming in from Sai this morning. The other one that I have is Parthiban from Ooty writes in. Parthiban currently holds Dr. Reddy's September 6,800 calls. Aditya, should he hold this or exit?
I think the way today Dr. Reddy came up and then declined from 6,700 to 6,600 is showing a sort of negative momentum. So I would say he can go light on this position. And if he has to rebuild the position, then let stock break today's high, which is placed at 6,715. So once the stock goes above 6,715, he can be a little more confident about the position. Otherwise, the stock is showing a little bit of decline today. So I'm less optimistic on the upside.
The next one again, so it's interesting that most of the strategies this morning are from the option side. Tejas from Nasik writes in, and he's got M&M, Mahindra and Mahindra 2,700 calls at 61.4 rupees. Again, Vinay, what do you recommend Tejas should do? If you look at the charts of M&M and the performance of the stock recently, what is the recommendation? This is for the September series.
Yeah, so it is not into a clear-cut uptrend. It is still trading below its 20 days EMA. The other indicators are also showing a bit bearish scenario. So no doubt from the lower level, it has bounced back 60 rupees from the today's low. But at higher level, one should exit the long position. This is the stock which is not looking that strong on the charts. No doubt today's low is important. But I would recommend that 20 days EMA for the stock is placed around 2750. So once that level reaches, one can exit the trading long position. So he's having call options. So I would recommend that wait for some more rise, 40-50 rupees upside could be there where 20 days EMA resistance there. So 2750 is a very strong resistance around which one can exit the long positions.
Well, banking has been in focus, and AU Small Finance Bank has been one stock that's been rather active all through last week. We have a query from Aditya Sharma who writes in from Delhi, and he says that he's got AU Small Finance Bank 650 rupees puts at a premium of 8 rupees. What do you recommend he should do, Aditya, on AU Small Finance Bank for September?
650 put is little far away from the current market price of 707. So there's good likelihood that there could be some decline in the put premiums because the stock is showing very good resilience since last few days. 3 days back, it was trading at 670 and it hit 720 in such a declining market. So I think buying a put is a sort of less favorable strategy, given that there's no technical breakdown as of now. If he really has to get into this trade, then let stock break 670. Then a negative momentum or trend could start in AU Bank. Otherwise, right now the stock is making higher high, higher low, which is technically a positive sign.
You know, Aditya had a long trade on ITC. When I want to get your view as well, because it'd be nice to have a consensus view on a stock. And I bring ITC up because it was a constructive trade by many analysts all through last week. It held out quite well till Friday morning, saw a big fall, and now pretty much at the day's high point. Do you concur that ITC may be a good long trade for our viewers?
Yeah, so I'm expecting ITC to outperform. At least in falling market, it can fall less, and in rising market, it can outperform definitely. So right now, if we go by the 2-3 weeks view, the recent view, so recent past has been consolidation. No doubt it has been resilient. FMCG sector has been doing good. So not only ITC, but HUL, Colgate, and the Britannias of the world are also doing very well. So yes, ITC is looking strong on the charts, but I don't think one can earn through the momentum like a call option in the category, because this particular stock is right now into consolidation in an overall uptrend. So it requires a clear-cut breakout from the consolidation. There is strong resistance around 550. So once that is taken out, we can expect some more momentum to come in. Otherwise, this stock is likely to remain strong, but right now into consolidation of 515 to 495 range, 20 rupees range is there. So yes, I'm expecting outperformance. But momentum would be again there once the 550 level is taken out on the upside.
The Nifty has done a good recovery, 0.2%, 0.3% higher on the Nifty. 24,900 has been reclaimed on the index for now. Aditya, and one more stock that I want to talk about, because again, it's been a large underperformer in the IT pack. And if there is still a belief that IT will outperform the index, would it make sense to go with a Wipro? It's been an underdog, and I'm guessing if there is a recovery, there may be a little bit of a catch-up rally on Wipro. It's trading, again, at its day's high as we see it right now.
Right, so Wipro today tested its important moving average at 515. So that now establishes an important support for the stock. And to be little liberal with the levels, then one should keep 510 as important support for the stock. Until that is not broken, probably there's scope for some recovery over here, as we are talking on a very minor time frame and minor levels, 1 to 2%. So 510 to 515 is the support, and upside levels which one should watch out are 530 to 535.
Right, thank you. Thank you, Vinay. Thank you, Aditya, for joining us this morning and sharing with our viewers trading strategies that they're looking forward to. Well, we'll move away from equities to commodities, and it seems like that market is also giving out a lot of opportunities for trading, for traders. Ajay Kedia of Kedia Advisory now joins in. Ajay, let's start with gold. It's been consolidating after recent highs, anticipating pricing in an aggressive rate cut from the Fed on the 18th of September. Currently in its consolidation zone, do you think it becomes a great buy opportunity? Because August gold was quite the star.
Yeah, very good morning. Definitely September would be a landmark for bullion, we can say, because in August month we have seen a gain of almost 7% nearby, and still we expect this long-term view for gold will remain bullish only, as dollar index is continuously losing its strength. And even in September we can see a rate cut. First time in last few years we have never seen this type of aggressive rate cut scenario from Fed. So we are expecting, market is actually expected 0.25 rate cut has been discounted in the market, but now the probability is very high that there could be a 0.5 rate cut, and which is going to be supportive for bullion. Since last 10 days we have seen gold prices on M6 trading in a very narrow range of 71,000 as a support and 72,100 as a resistance. So still we expect ahead of this big data point, we expect market is going to be in a choppy range. For today, we would prefer to take a long at 71,400 with a stop loss of 71,200. Upside would be limited, but 71,800 could be achievable.
Ajay, you've got a similar long trade. In fact, you've got a long trade across all commodities this morning. On silver as well, at current prices, you're advising traders to go long?
There are many points which preferred me to take a long in all commodity, particularly silver. If we see up till now, gold-silver ratio was moving forward to closer to 90, which was been major reason of underperformance of silver. But now I think $28, $29 is been trading in a very narrow range. On M6 also 80 to 500 is acting as a very strong support. As gold is getting support, some kind of support would be preferred to get in silver also. Looking to same, we prefer to take a long at 80 to 500 with a stop loss of 81,800. Limited upside, but 83,800 can be easily achievable in today's session.
Crude as well has seen a big fall, Ajay. There are supply concerns, recession worries, but I believe you're expecting a trading bounce back on crude. Is that correct?
Yeah, I think a technical pullback is expected because last week it is very much clear now. OPEC members that were insisting of a production hike, and they are still insisting that in 2025 we would be increasing our production. But right now we have already heard this. They will be postponing this up to December 2024. So I think that could trigger a technical pullback, and we have never seen since December 21 Brent prices went below $70 mark, because as soon as Brent will below 70, it will impact the producer and they will start cutting down the production. So last week we have got a support at 70, 50, 71 nearby, and I hope this is the period where consolidation would be there in the market. So looking to this, I would prefer to take a technical bounce around 57.41 can buy with a stop loss of 56.50, and target could be 58.80 on the higher side.
A quick trading call on copper and zinc as well, Ajay.
After August month's rally, we have seen prices has started moving down as demand concern from China is still prevailing, but technically market seems to be getting support. So copper preferred to take long at 780 with a strict stop loss of 776. Technical bounce towards 788. Similarly, zinc around 253 one can buy with a stop loss of 251. Immediate small bounce could be possible towards 256 on higher side.
Ajay, we're out of time, but thank you very much. Just to add two more strategies Ajay is recommending. He's got a buy on aluminium and a buy on lead as well. The target for aluminium is 220 and the target on lead is 182.50 paisa. With that, we are completely out of time, leaving the markets pretty much at the day's high point. A good recovery has played out in the last couple of minutes. Stay with the channel. There's a lot more programming on the other side, so keep it with us.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome. You're watching the Small and Midcap Show. I am Mahima Vachrajani. With me is Harsh Saita, and we're also joined by Megha Barve, who tracks the first management that we have on the show, that is Deep Industries, very closely. But before we move on to that, let's take a quick check on how the markets are doing. Well, the Nifty and Sensex both have an extremely wide range of trade today. The Nifty has roughly 170 points of range, which has been range bound in the past 1 week, and roughly 20 points away from its day's highs right now, up around 0.2%. The Sensex has a wide range of 550 points today and currently just 80 points away from its day's highs and up around 0.2%. So in line with Nifty 50 as well. But the broader markets today are under a tad bit of pressure. The mid-cap 150 is down around 0.4% and the small cap 250 is almost down 1% as we speak. In terms of Bank Nifty, let's also pull up what Bank Nifty is doing in trade today and see what impact the trade has in terms of Bank Nifty today. Well, the index has remained quite stable till now during the day, and it's up around 0.3%. Let's also quickly pull up the contributors on the Nifty and see what are the counters weighing down on the Nifty and weighing up on the Nifty. There you go. There is ICICI Bank, ITC, HDFC Bank and Infosys, which are some of the counters that are weighing up the Nifty, and ONGC, Tata Motors, Hindalco and NTPC are some of the counters that are weighing down on the Nifty. Let's also quickly pull up the breadth of the market and see where the market is skewed towards, whether it's the buyers or the sellers. Well, the market is clearly skewed towards the sellers, where we're seeing roughly 1400 odd declines versus 700 odd advances. So the ratio is 2:1. However, it's skewed towards the sellers. But Harsh, how are the sectors performing in trade today?
Well, yeah, it's a whipsaw kind of a market, at least to start this week off. We're going to quickly pull up sectors first off. 1/3% lower on the Nifty Auto, 1/3% higher on the Nifty Bank. So it's a bit of a mixed trade of sorts there. But look at some of the other big movers. Within the Nifty Bank as well, you're seeing private banks doing better. PSU banks, down almost 1% plus in trade. FMCG in that sense, switching focus, is doing fairly well in trade, 0.9 odd % higher. You're seeing oil and gas on the other hand, as well as metals taking a bit on the chin, at least in trade today. So you're seeing 1% lower on each of those roughly. You're also seeing a mixed kind of a day with regard to IT, around 1/4% higher. So in terms of support, good support available to the benchmark itself. But the broader markets is where some of the pain seems to be at least, because the advanced decline, as highlighted by Mahima, was fairly balanced in that sense. But let's go to our first management for the day. We have Rohan Shah, Director Finance and Group CFO at Deep Industries. Now, roughly 3,000 crore in terms of market cap for viewer perspective, but a 1,400 crore new order win. Mr. Shah, talk to us about this order, what it entails and how much revenue on an annualized basis is this likely to generate, because it's a 15-year tenured order. So talk us through a couple of those aspects.
Yeah, we are quite excited on winning this order from ONGC. So this particular contract is for production enhancement of their mature fields. So with this contract, ONGC wishes to increase their hydrocarbon production and to develop further their reserves. So this particular contract can increase the production of mature fields over a period of time. And in that, we can get our service revenue as a share of incremental production.
Right.
Yes, this contract is for almost 15 years, but we are quite confident that we can complete this contract well within time or even before the given timeline.
All right. And Mr. Shah, this is, the first production enhancement and contract that you have, in your basket. So I want to understand that, how do you plan to play this from a long-term perspective? Also, do you expect more such orders going forward?
Yes, so this is for the first time ONGC came up with a production enhancement contract, and this is first round with which ONGC has started this, and we are expecting few more rounds coming from ONGC itself. And with other PSU clients also, they are coming up with such production enhancement contract. And we believe in this industry, since we are more than 3 decades old, we have a great advantage to get this type of contracts even in future.
Good morning, Mr. Shah. Hika this side. Since this is the first of the, first kind of, project enhancement operation orders, could you kind of give us a margin picture? Because, you do enjoy healthy margins in terms of your other segments. So, first margin profile of such orders, since you expect more to come by, and also the market opportunity in terms of size, if you have some estimate on that.
So margins would be again excellent in this production enhancement contract as well. So as you rightly said, we are operating on good EBITDA margin, more than 40% in our other verticals. And from this particular vertical also, we are expecting a good amount of margin going further. And with regards to opportunity, since it is the first contract we have received, though we were eyeing on this type of opportunities for since last 6-7 months, and we believe adding further such type of contracts will definitely help us in improving not only our top line but also our bottom line.
Okay, Mr. Shah, you suggested that the tenure, while it is 15 years, you're gonna execute well within that tenure. What would that timeline be? Sub 10 years or maybe 10 to 12 odd years? Is that how this is expected to play out? And also, if I can understand on this order alone, what would the incremental margin be like, and therefore will it impact your blended margin, your overall margin?
Yes, so as I said, we are quite confident to execute this contract well within this timeline of 15 years. So our expectation is to complete this contract in range of 10 years itself. And with regards to margin, it will definitely improve our overall margin.
Mr. Shah, so then we want to understand that in terms of quantification, where will your blended margin stand at with respect, in cumulation to this order. So by the end of FY25, first thing, and if you expect that, the timeline for execution of this will be 10 years, including this order, blended margins will stand at what percentage?
See, blended margin exactly would be difficult to quantify, but as I said, it will definitely improve our overall blended margin. And since we are confident that we can complete this contract well within timeline and even in time of 10 years, probably it will also add a great amount every year in our top line going further.
Okay, Mr. Shah, with regard to the execution, when does it start? When are you fully prepared to start executing on this?
Yes, so in this type of contract, we would be.
Mr. Shah, sorry, I'm going to interrupt you for a minute. We have live footage coming in from the GST Council meet. Of course, several stocks in focus on the back of this meet. It's going to be a critical one with regard to especially insurance. That's one. And second is with regard to gaming laws on the GST side of things, on the indirect tax on gaming laws. So both of those will likely be in focus. But there you go, some live visuals coming straight to you before we move straight back to Mr. Shah. There you go. We have the Finance Minister, Miss Nirmala Sitharaman, also there, chairing that 54th GST Council meet. Of course, this will be critical for the likes of a Delta Corp, largely flat in trade today, the way I'm seeing it. But nonetheless, that one in focus. You're also seeing that some clarifications on this count could really help the overall picture for someone like a company like Delta Corp. We also have something like a Nazara, which will be in focus, doing fairly well in trade after an acquisition as well, 225 crore acquisition made by Nazara. Zensar Tech also among those which might benefit. But in terms of the insurers, you will have LIC, HDFC Life, ICICI Pru, and the like, who will also get impacted. But Mr. Shah, sorry, apologies for that. We had to cut through for that live visual. But if we can come back to you with regard to how quickly do you expect to start executing on this?
Right. So, as per our internal estimate, it will take 9 to 10 months to start revenue out of this particular contract. So, we believe revenue from this particular contract will start from next financial year.
Mr. Shah, now in terms of your, overall order book, could you maybe give us a sense in terms of how you expect the entire order book to grow to, as well as the segments where you see, more orders coming in terms of your bidding pipeline? How does it look like right now?
Right. So, at the end of Q1, our total order book was standing at around 1,250 crores. And with this single order, it would be doubled, more than doubled. And we believe the growth is coming from all different verticals, including this new vertical of production enhancement contract. So we are expecting few good more contracts coming and will be added to our order book in coming future, probably in next 3 to 6 months. We are expecting good amount of bidding pipeline conversion in our regular business verticals as well.
Also, Mr. Shah, just with regard to your timelines again, you've suggested you'll start extraction from this new well maybe 10 months from now. So how does revenue therefore start to accrue? Will it be linear over the 9 years thereafter, or will you front end some of it, or will it be back ended? How will it work in terms of top line?
See, generally it will start from low and it will have a bell curve type of production. And so it would be then be on peak in immediately 1-2 years. And it will be there for few years, and over a period of time, it will start reducing. So we believe a majority of revenue would be more or less front loaded.
And Mr. Shah, considering the kind of, order wins that you've secured and the kind of growth that you've seen, I want to understand that so FY24, you've roughly done revenue of 427 crore. So from a longer term perspective, I want to understand that by the end of FY26 or 27, where will the revenues be at? What will be the number like? And also the bottom line then?
See, to quantify exact number would be difficult, but we are quite bullish on our growth numbers, and we believe we should grow at least more than 35 to 38% even in FY25, and similar amount of growth we are expecting in FY26 and 27 as well. So with an opportunity of adding few more such production enhancement contracts in coming future, this growth percentage can even go for higher.
Got it, Mr. Shah. You said 25% growth in the next 2 years. From which segment will this be coming from? How will your margin profile look like? Will we see more focus on natural gas compression and natural gas dehydration, which are your higher margin segments, or is there an optimal mix you're targeting?
Yes, so growth is coming from all different segments, including gas compression, dehydration, and drilling workover. Along with this, we have also entered into different value-added services, one of which is charter hiring of entire gas processing facility, which is again a unique concept introduced by us recently, where we are converting EPC opportunities on charter hiring basis. And that is also a great push which we are expecting for that particular vertical as well. So growth is expected from all different verticals which we are into, and the additional vertical which we are adding with this contract of production enhancement as well. So all put together, we are expecting 35% type of growth.
Okay, and Mr. Shah, so for this particular order win, is there any capex that you're going to plan to do? And if yes, what will that amount be like? And secondly, how will you be funding that capex?
See, we are into this business for more than 3 decades, and we are providing almost all services which are required to increase the production of this particular field. So largely we would be using our own equipment and our own services to increase the production out of this particular field. And if required, we'll do further capex as well. But as of now, it is a little difficult to quantify because this contract would spread over almost 10 years.
All right. Just overall picture, Mr. Shah, I want to get this absolutely right. So you've got a top line of roughly 450 crore currently. You'll likely go to closer to 1200 crore maybe by FY27 at the growth clip that you're expecting, roughly 30-35%. And you'll do a 40% margin on that. Is that the right way to look at this?
Yes, of course. We are gunning for it.
Right. Okay. Very, very interesting. 3,000 crore in terms of market cap and extremely robust in terms of growth. So thank you so much, Mr. Shah. It's been good chatting with you.
Thank you.
Right. Stock on a tear. Let's pull up Deep Industries just to cap this off. Stock up nearly 15+% in trade the last I had checked. If we can pull that up, we'll know exact. There you go. 17.2 odd % higher in trade. That's where Deep Industries currently is at. Very, very large order win, larger than the current order book itself. So that was, of course, Deep Industries. But let's switch focus. We have Ajay Singhania, Managing Director and CEO at E-Pac Durable, joining us as well. Welcome, Mr. Singhania. Talk to us about both the Q1 overall in the context of the full year FY25, as well as how Q2 is playing along for you.
Yeah, hi, good morning. So see, being a pioneer in air conditioning ODM business, obviously 24 was a subdued year wherein we faced a lot of challenges in terms of the weather uncertainties and timely rains and all. But obviously Q1 25 has been exceptionally well for us. We grew almost 80%. The industry has been growing at almost 35-40% plus. So one of the best times for E-Pac Durables. And coming to Q2, definitely the growth momentum continues. The market has been responding very well, and India being under-penetrated in terms of AC, we can really feel the heat not only in the climate but also in terms of sales.
Mr. Singhania, you've recently acquired E-Power Electricals Private Limited. Now, from what I understand is that it manufactures DC motors, and this is probably, a raw material for what you manufacture. So I want to understand that you will be utilizing this for your own consumption. So I think that this will impact your margins overall, and this could be margin accretive for you. So I want to understand that going forward with this acquisition, will your margins improve, and if yes, by how much?
See, first of all, we have not acquired E-Power, so it was 26% E-Pac and 74% RR Wire. So we have increased our equity from 26 to 50% now. So it's now a 50-50 JV between both the companies. Definitely, see, the idea behind starting of E-Power and now increasing the shareholding has been that we understand, one, that we'll be utilizing the motors captively for our own consumption. At the same time, we have a large customer base available to supply to. So this would be, the results would definitely be independent, but it would help us secure the supply chain, reduce our dependence on China further. So that's the whole idea.
Mr. Singhania, good morning, sir. It's Puneet this side. I just wanted to ask on your backward integration currently, you are manufacturing a lot of components for air conditioners currently as well. And you've also commissioned a new plant in Andhra Pradesh for the same. I wanted to understand, within Andhra Pradesh, is it only for room air conditioners, or also will include small appliances, which is another segment that you're currently in? And I also wanted to just ask you one key question on components, because PCB is only currently in Bhiwadi facility. Is there any particular reason that you don't have the PCB manufacturing? Because it's going to be one of the most important components going forward for you as well. So just wanted your idea on both these queries. So one's on PCB specifically being in Bhiwadi, and also on the current product lines which are there in the new facility.
So see, coming to the product lines in the Andhra facility, so we started off with the AC as the first product, but at the same time, our manufacturing facilities are fungible in terms we can utilize them to manufacture the small appliances as well. So now in this quarter, we have started putting up facilities for the small appliances as well. And Q3 onwards, we believe that we'll start production of the smaller appliances in the Andhra facility. So it is already in the phase. So we've been taking a step-by-step approach. So small appliances will start, the mass production would start from end of October onwards. And especially the washing machine, which we are launching, is going to get manufactured in the Andhra facility first. The second question in terms of the PCBA. So the PCB assembly, we started off in our North facility first because we have created enough capacities here. Now, as we are using the same facility to even supply to our Andhra facility, so in phase 2, we will be in a position to put up the PCBA manufacturing even in Andhra. So currently we are utilizing our capacities which we've installed here in the North. So once these capacities get utilized for the North itself, we'll be in a position to invest for the same in the South.
Right, Mr. Singhania, talk to us about revenue contribution going forward. So you're expecting, of course, these new products to start to contribute to revenue. Is H2 the likely expectation, H2 FY25, in a significant fashion? Is that how one can look at it?
So see, I'll put it this way. Previously, if AC was contributing almost 85% and 15% the other appliances. Now going forward, as we are increasing our footprints in the other appliances, also the large appliances like coolers and washing machines going forward, and as we are growing our portfolio of the small domestic appliances, so this H2 definitely the contribution is going to improve for the other appliances, the non-AC appliances. So I mean, even if I give an outlook for the current year FY25, I'll say AC would be, let's say, 78 and almost 22% from the non-AC business. So this is the way how we are improving our capacity utilization on a H1 and H2 basis.
And how would FY26 mix be like? Because that will be a full year when you'll be doing pretty much all appliances. So just trying to get context there.
So gradually we aspire to bring it down at least 60-40 in terms of AC and non-AC business. But 26 we should definitely be able to achieve, like say 74, 75 and 25, 26. So gradually it will keep on improving.
All right, and Mr. Singhania, in terms of finance costs, you've guided that, finance costs will reduce in Q2 and Q3. So I want to understand that, what is the progress there and where do you see debt going by the end of FY25?
See, in terms of finance cost, our core focus has been to improve our working capital cycle. So this is where we see a lot of capital getting blocked. So we have already reduced our working capital cycle from almost 90 odd days to 45 days in the last quarter. And we'll gradually keep on improving that. So that's somewhere we have tried to unlock our blocked capital. And this is how we've been able to improve our finance cost as well.
Now, Mr. Singhania,
we don't have now a large exposure in terms of the debt, especially the long-term debt. So it's only working capital which contributes towards our financial cost.
Mr. Singhania, I just wanted to get back to your room and room RAC segment specifically, your air conditioner segment. Now, you have mentioned that you have roughly 24% market share in the ODM segment specifically. Could you quantify specifically what would be the ODM share for your current revenues for, say, historical, for FY24? What would be the total ODM share specifically that you might be getting for room air conditioners? And I also wanted to ask if you have been receiving, are you compliant with PLI benefits for room air conditioners as well? And if yes, have you received anything in FY24?
So firstly, in terms of the RAC market, the overall RAC market was close to 10 odd millions in the last year. So ODM put together do almost 35 odd percent. So it could be 35 to 37%. So that means almost 3.5 to 3.7 million units get manufactured by all ODMs put together. And we contribute almost 24% of it. So that's in terms of the quantifying the total RAC market in India. For the PLI benefit, so we were one of the top 4 companies to commit the highest investment in PLI. So we committed almost 300 plus crores in PLI from E-Pac Durable. And we got our PLI benefit for the FY24 and for FY23, sorry. 24, we are on way to achieve it. So hopefully we should get it by end of this year. We are expecting it. So last year being the first year, we already received it. And for the FY24, the amount is close to 30 odd crores, which we should get.
I just had one follow-up, sir, on this particular facility. Now, currently you did mention that, newer segments will also be added. Now, washing machine, one of the key segments which, has caught my eye I wanted to just understand, because it's not a segment that everybody has entered to, but it has very high growth opportunity, because I think the penetration is still, around 20-25% if I'm not wrong. So I just wanted to understand the opportunity here and what could be, the margin picture going forward. You have been around, the 6 to 7% range in the last couple of years. Do you see the addition of non-AC components or, the consumer durable business specifically, because there's a lot of competition in this segment? So just wanted to understand on these two factors.
See, firstly, all the segments we are into, like AC, the lowest penetration is almost 6 to 7%. Different reports claim different thing. And even washing machine is not that high as 24%. So it's like 12% is the penetration for washing machine. So both the products are on high growth phase, and next 10 to 12 years, definitely every year we'll say they're multiplying, and the forecast is at least 15% growth year on year for each of the both segments. So definitely, I mean, these are both the high growth thrust area products, and OEM ODM is something very unique, because see, for us, the capability to manufacture AC helps us utilize almost 100% of our capacity during the first half of the year. So for us to improve our margin profile and to improve our asset turn, it is very important that we start focusing on products which are predominantly H2 products. So washing machine is one such product which starts picking up from May onwards till July, August, September. So these typically 4 months help us utilize our capacities better, and definitely then it will help us improve our margins as well, because we are not making any additional substantial new investments to manufacture washing machines.
Mr. Singhania, one last quick question. Your FY24 revenue did take a 7% hit as compared to FY23. So I want to understand, by the end of FY25, where will your revenues be at? And quickly, even commodity prices are expected to improve. So where will the margins be then?
See, FY25, we are on track to at least clock a growth of anywhere between 45 to 50% growth organically. So we will definitely clock a growth of 45 to 50% plus for this year. And similar growth is what we are working on for the next 2 to 3 years, definitely. So we'll continue our growth journey on the top line and bottom line both. And for the commodity prices, definitely the commodity prices have softened. But at the same time, since we are an OEM ODM, at most of the times we are kind of insulated with any changes in the commodity prices, both upside and downside. So that does not impact us much.
Got it. Okay, thank you so much, Mr. Singhania. It's been a pleasure chatting. We are completely out of time on this edition of the SMID show. From Puneet, Mahima, myself, everyone who puts the show together, thanks so much for watching. Hope it was productive. Stay tuned to NDTV Profit. More action on the other side.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है, they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है, आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Long Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hi, morning. Thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and this show gets you answers to all of your stock-related questions. To that end, if you've got questions for us, you can send them to the number on your screen right now. Let's take a look at where the markets are and what's happening in, first, the benchmark indices, of course. And you have the equity markets in India, which opened on a bit of a weak footing based on what we're seeing across the board globally. But we've recovered from the low point of the day. We are treading water at this juncture, just about flat for the benchmark index. And you have the mid-cap and the small-cap index that are both in the red at this juncture. So you have 0.5% cuts for the mid-cap index and cuts of over 1% for the small-cap index. So understandably, the breadth is pretty heavily skewed in favor of the declines, or it was actually, it is, it's not giving you actually the correct picture. So the numbers are indicative of one gainer for every 2 declines, and maybe that graph is a little bit wonky as things stand right now. But let's take a look at the key indices, because you have the Nifty Bank that is providing a little bit of support, and in fact it was underperforming today. It was in the red, but it has recovered from the low point of the day, and it is gaining currently about 0.4% or thereabouts. You have IT also that is gaining ground, and you have FMCG, which is standing tall in trade today with gains of about 0.8% or thereabouts. So it's IT, FMCG, banking. Pharma is more or less holding out in terms of not doing too much. And you have the oil and gas space as well as the PSU banking space once again that are losing ground as a pack. Now, we have been talking about Suzlon for quite a bit based on the run it's had since last year, and today it's arguably one of the stocks to focus on because it's gaining about 2%, not tremendous gains, but it has got a significant order, and this is something that we've been talking about for a little while. We've got an announcement has come through today, and Mika is joining you to tell us more about that. India's largest wind energy project. How significant is this though, Mika, in the larger context based on the kind of orders that Suzlon has been winning?
Yeah, it's actually taken, its order book from 3.8 gigawatts just as of the end of June 2024 to over 5 gigawatts. Now, what Suzlon has bagged is an order worth 1,166 megawatts from NTPC Green Energy. And like you mentioned, it is India's largest wind energy order. The company will install a total of 370 wind turbine generators, and this will be the S144 model of the company, which are at a capacity of 3.15 megawatts. Now this project is to be executed across 3 sites in Gujarat, 2 NTPC renewable energy projects and 1 Indian oil project, and the electricity generated from this project will power around 3 million households as per the press release. Now when you talk about the revenue potential for Suzlon, well, as per management, the company roughly earns around 6 crores per megawatt of installation. So the revenue potential from this order itself is over 6,900 crores for the company. And like I said, the current order book now is at 5 gigawatts, and it's up 31% from the Q1 FY25 levels. And it's key to note that this wind turbine manufacturing segment contributes around 20 to 23% to Suzlon's total EBITDA, and it is the company is the largest wind turbine generator in India and ranks 5th in terms of global capacity as well.
Important context being provided. Thanks so much, Mika, for joining in as always. Let's also tell you, by the way, that we'll get some more clarity from the management when we speak to them at 12 p.m. today. It's just a short while away. We are speaking with the Chief Executive Officer of the company, JP Chalsani, so you should watch out for that. In the meanwhile, let's talk about how this particular stock ranks in the books of our experts today. We've got Sameer Dalal of Natwarlal and Sons Stockbrokers and Rajesh Palvia, Senior Vice President Technical Research, Technical and Derivatives Research, I should say, at Axis Securities. As always, thank you so much, gentlemen, for taking the time. Sameer, arguably one of the stocks of the last couple of years based on the kind of run that we've had, and what a journey. What do you make of this latest development? Would you be a buyer right now? Would you wait for a little bit of clarity as to whether or not the fundamentals keep pace with the stock?
So, good morning. And can fundamentals keep pace with the stock? 100% fundamentals will do far better. The problem simply lies for Suzlon is that the stock has, like you said, performed extremely well over the last year and a half. The stock has gone up from 8 rupees all the way to about 75, 76 and made a high of even 80, right? So we discussed this once, I think either last week or the week before that in the past. So we continue to believe that renewable energy and wind energy will also remain one of the mainstays for growth in the power sector going forward. So Suzlon, being the largest domestic player, huge capacities, will get the benefit of fresh orders, which is already beginning to see operational utilization going up, which will allow them to generate higher profits. Their balance sheet has been strengthened. All of those things have been done, which we believe are very good. But simply put, where we find difficulty is that all of these positives have already been priced into a large, I'd say, priced in far more than what needs to be priced in. So it will take Suzlon at least another year before they can start working at much higher utilization, because these orders flows as they come in, by the time they start production, setting up, getting the permissions, all of that does take time. And you will see profitability increasing, but even after the increase in profitability and even after the increase in the operational efficiencies, we don't think the stock price can sustain at the 75 level in the near term. They do have a new capacity coming up, which will allow them to increase utilization. That will happen in another year's time. Based on that, maybe a year down the line, if the stock is at the current price or lower, it might warrant a buy from my end. But at this moment, we are not suggesting one to buy the stock. The stock has seen a significant run up. And there's if you have to balance the risk reward right now, the risk is far more than the reward that would probably come about. So I would not be going out to buy the stock.
Fair point. So therefore, time-wise correction might just be on the cards. On that note, let me start with the questions that we've got. And the first one is coming your way, Rajesh. We've got Shweta from Bengaluru, who is holding Sun Pharma from 1,500 levels. The stock is currently at 1,818. She's wondering whether to hold or sell. And she's saying that she's been holding from the 1,500 level, which is her swing trade. She's saying, if hold, what is the target?
So, looking at the overall structure, stock is still holding the ground at a higher level, and the way stock has moved up on the daily as well as on the weekly time frame, we believe that stock may exhibit further more strength from the current level also. She's already in the profit. I think now trailing of stop loss towards 1760 would be the right strategy to ride the rally of Sun Pharma, as clearly outperformance is there in this stock. Stock is almost trading near to its all-time high trajectory, and pharma stocks are continuously attracting the buying interest. I think we could see furthermore really towards 1940 to 2000 kind of level going forward. So I think at this juncture, 1760, I would advise to trail the stop loss, and I think we could see furthermore upward momentum in the Sun Pharma in the coming weeks.
That's a view on Sun Pharmaceuticals. NBCC is the next counter that we're focusing on, and we've got Shubha who's written in and who's asking whether it is a hold or a sell at this juncture, and the price of the acquisition was 194, which is above the current market price of 174 thereabouts. I'm coming back to you, Rajesh, since there's no indication of what the duration is based on the technicals, just purely based on the levels that you're seeing right now. Would you hold or sell?
So if it is purely trading position, so I think stock is now slid below to 20-day, 50-day moving average. So I think in near term, we could see some correction in the stock, and maybe stock may correct further towards 165, even 160 kind of level. That's the next important support area for this correction. Though long-term structure is bullish for the stock, and we believe that till stock is holding above 160, I think there is a possibility that stock may attempt to recover from those levels. And once stock crosses above 185, I think there would be high probability that stock may again attempt to cross its all-time high trajectory, and possible target towards 220 to 230 would be there on the stock. So I think already stock has broken. If it's a trading position, so I think she may exit. But if it's a positional trade or for investment perspective, I think she may hold on the position. Possibly stock may attempt to again break the all-time high trajectory. 220, 230 would be our target.
We already spoke about Suzlon, and we spoke about the power of renewable and the prospects thereabouts. So let's also talk about KPI Green, which is primarily involved in solar renewable energy. And we've got a question from Ravi from Chennai, and he's bought at levels of 914, and he's looking at the longer term prospects of this company. He's looking at the next 5 years. He's incurring a small loss at this juncture, Samir, but he's thinking long term. He's talking about the next 5 years. What do you think about this particular company? Would you hold on?
So given that he has a 5-year view, I think one can take a call to hold on to the stock, because look, they're going to be increasing their solar farms. The capacities will go up, their sales revenue, and these are high cash flow generating businesses. So you have to put the plants up front, and then you get the continual flow of income and profitability, and these are quite profitable at the end of the day. The problem is he's again bought it after a very significant run up. You see what's happened in this market. Whoever's entering right now is buying everything that has run up quite a lot, which has captured a lot of the positives into the picture. So if you ask me, in the near term, there's a very strong possibility that the stock may correct down closer to the 700 levels. If it does come there, we could probably add on and average this cost down, because at the end of the day, this is not going to be anything that I see significant, because at the moment they're sitting on 1 gigawatt of capacity of solar, which they're going to scale up, and it's going to be another 2 to 3 years before they have significant growth, and that is when the re-rating could probably happen. So from the near term, slightly cautious. On the longer term, one can put on.
Fair point. I would encourage everybody who's writing in to tell us whether you're looking for a long-term view on the fundamentals, or in fact the short-term view on the technicals. In fact, I've asked the next viewer who I'm speaking to as well, Aarti from Chennai, who's bought KEI. She's bought for a long term. She's just clarified, and she said that she can hold for the long term. She's bought at a price of 4,000. Okay, she's bought at levels of 4,572 rupees per share. The stock is currently trading at 4,334 thereabouts. Since it's a long-term query, I'm coming back to you, Samir. Is this the best play in the wires and cables space, or would you suggest moving to something else? She's incurring a small loss, so she can actually make the move. On the fundamentals, is this the best play?
So unfortunately, KEI is something we don't have under coverage.
Sure.
RR Cable and Polycab are the two ones that we do have. Havells, of course, we have, but Havells is not a pure wire play. It's got a lot of FMCG and not FMCG, but discretionary fans and lights and various other products. So these are the three that we do cover. Of the three, at the moment, valuations for RR Cable probably are the most reasonable, but then it is the smallest of the three. So that is why probably there's a slight discount to the valuation. But if one wants to take a play, I think Polycab is something that one can take on corrections closer to the 5,000 levels. That's where we are most positive. Havells, we find valuations exceedingly expensive, and unfortunately, KEI, we don't have a view.
Okay, that's a fair point. All right. IEX is the next counter we're talking about. Rajesh, I'm coming to you on this one. We've got Kalyan Chakravarti from Visakhapatnam, who's bought at levels of 192 and is looking for a short duration. Whether to hold or sell is a question. The stock is trading above the buy price at 211 or thereabouts. How does it look on the charts?
So I think he has bought at right price as he has bought for the short term. I think 190.95 was the breakout level for the stock, and the way stock is comfortably holding above now 200 mark. We believe that furthermore upward momentum we could see towards 220 to 225 kind of zone. Stock is moving in upsloping channel on a monthly as well as on the weekly chart. This is the fourth consecutive month where stock is making higher high-low formation. That clearly shows sustained buying is taking place in this stock. So after a long underperformance, now stock is recovering on the long-term chart. So I think he may hold on the position. Trailing stop loss now towards 202. Possible target on a short term, 220 to 225.
Okay, fair point. All right. We are talking about Ola Electric. Incidentally, if you didn't know, today is EV Day, and it's the 4th edition, if I'm not mistaken, of EV Day. It's not got a very long history, but 5th. I've been corrected. It's the 5th EV Day, and we've come quite a long way since we started talking about electric mobility and all of that. And it has been an interesting journey for India, as you know. We've been moving more towards the two-wheelers and the three-wheelers than the four-wheelers. And we've got an interesting report by my colleague Puneet that should be available on social media, and hope you can catch it over the course of the day. But this question is from Dilesh Joshi, and he's writing in from Mumbai. He's got Ola Electric at an average price of 123. He's bought 1,900 shares. He's incurring quite a significant loss at this juncture, but he is comfortable, Samir, with the idea of holding for as long as 10 years. Of course, a lot can happen in that time frame, and that's an understatement to say the very least. We could, in fact, move to flying vehicles by then. But what would you say about holding Ola Electric for now?
I wish we'd move into flying vehicles and avoid some of the traffic on the roads. But having said that, let's come to the point. Ola Electric is something we've discussed in the past also. And we've told you that from the longer term perspective, we are very positive on Ola Electric. They are the market leader. Apart from that, what they're doing is they're also getting their own battery manufacturing capacity, which we discussed, right? So once that comes on stream, they will be able to get some more margins for the products that they sell, and in fact become more competitive than some of their competitors, right? And at the end of the day, pricing is something very important when you look at two-wheelers and three-wheelers. Well, they're more in two-wheelers. But our basic theory is that, look, the shift to electric vehicle has been really slow. The acceleration will probably pick up over the next 2 years as the infrastructure gets set up. And it's easier to charge your bike or car or whatever you're driving compared to what it is now, where there are very limited charging stations. So the growth opportunity is extremely large. Yes, the company is making a bit of a loss right now, and that's fair. They're still in the setting up phases. We believe that for the time being, the stock should consolidate in these regions. Unfortunately, the person who asked the question has bought it at, when the stock was running up. And at that time also, when it was running up, we had said that we would like it around the IPO price to maybe 10 to 15% higher. So maybe 85, 90 is where we would have a lot of comfort buying for the next 10 years. Since he's bought it, I say hold on. You have a 10-year view. I think you will make good money. It will take you time, but if it comes down, please add some.
FIEM Industries is the next counter that we're talking about, and 4,500 crore market capitalization. It's done pretty well for itself over the course of the year so far. In fact, it is quite a performer. I'm looking at gains of about 70% or thereabouts. It's a question from Ujjwal, who's writing in from Patna, and he's wondering whether to get in on a technical basis, Rajesh, from the perspective of the next 3 to 4 months. Is that a good idea?
A very strong run-up is taken place in this stock. Across all time frame, stock is bullish. Series of higher top, higher bottom formation. The way stock has moved up in last couple of months, we believe that yes, there is a potential that the stock may continue its upward trajectory, and possible upside 1850 to 1900 could be there in a short period of time. So I think any minor decline towards 1630, 1640 is again, buying opportunity in this stock. At that time, your stop loss should be placed at around 1570 to buy in this decline if it gives you opportunity. So I think that would be the right level to enter in this stock. And possible target you can hold on for 1800 to 1850, and even you can continue, trailing the stop loss if it's move higher for another target of 1900.
Fair point. All right. Ujjivan Small Finance Bank is the next counter. And this is Karthik, who's asking for a long-term perspective on this. He's bought at levels of 49.5 or thereabouts. He's got 110 shares. He's writing in from Bengaluru. What's the view on this one, Samir? Would you hold on? Is this the best play? I don't want to ask if this is the best play. Is it a good enough play in the financial services space?
Well, it's a good play in the financial services, in the banking space. Look, there at the end of the day, got the banking license, which allows them to get slightly lower cost deposits. And, Ujjivan, like some of the newer banks, are able to give a higher savings rate to their customers because they don't have that legacy of, the old savings, which if they reprice, then they get a hit on their books. So they will be able to get the deposits to continue to grow. But Ujjivan Small Finance Bank, my big shortcoming is that, they do have a lot of unsecured microfinance loans. There's always a risk associated with those kind of loans. I mean, they are diversifying. I'm not denying the fact that the percentage has come down quite significantly over a period of time. But actually, the right question, what you asked, which you retracted, was, is this the best play in the banking space? No. If you want to hold on to it, simply yes, but it's not the best stock in the banking space.
Okay, so let me follow up then and ask you, which according to you is the best stock in the banking space?
So for me, I think you can still stick to some of the large caps. If you want, HDFC is one of our top picks in the space. But if you want to venture down into taking slightly higher risk and getting slightly higher return, then IDFC First Bank has been something that we have been suggesting to a lot of our clients. We simply believe that, look, it's a new age bank. It's highly digital. They've been one of the fastest to set up their infrastructure when it comes to retail branch networks and things like that. They've they've finished off most of the infrastructural funding that they had. They've become 80% retail oriented, granular kind of loan book lending. They are giving a higher deposit rate, because of which they are one of the few banks that have been able to capture a huge deposit growth and be able to grow their loan book. They're well capitalized. They went through a little bit of a small issue with certain NPAs that came out of Chennai in the last quarter, for which they provided for slightly higher, but we think that is also behind them more or less. And going forward, we believe, given the kind of drive engine that they have for dispersing of loans. So it was actually Capital First, which got merged into IDFC, and Capital First had a great lending book when it came to consumer lending. So they're able to capitalize on that. So we believe this will be one of the faster growing banks, and valuations are relatively all right and could give a good upside. So we are suggesting IDFC as the number one if you're slightly high risk, and if you're lower risk, then HDFC Bank is the top pick.
Fair point. Arun from Hyderabad has got the next question. He's also asking about a bank from the relatively shorter term. He's defining it as long term, but he says it's 1 year. Arun, the definition of long term is 5 years or more. Rajesh, on the charts, 1 year, would you hold on if you bought at levels of 111.6 or thereabouts?
Next, you're talking about IDFC First Bank?
Sorry, we're talking about Canara Bank. My bad.
Okay. I think if he's holding for 1 year time frame, yes, he may hold on the position. Though stock has shown some corrective move in last couple of weeks. Now, looking at the long-term structure, stock is still showing strength. The way stock has moved up during the last rally, the immediate support area on the monthly chart is placed at around 96. So I think if he can keep a stop loss of around 96 to 98 for long position, he may hold on the position. And I think once stock crosses above 108, 109 kind of level, I think some short covering or some pullback trade could be there in the stock, and then possibly stock may attempt to cross 115, and then if it's happen, then next target for the stock on a 1 year time frame would be around 130 to 140.
Side of 30% or thereabouts. All right, let's talk about Snigdha's question, and she's writing in from Delhi. She's bought BHEL at a level of 305, and she's looking at the next 3 years at the very least. Fundamentally, it's slightly higher than the current market price, just about 40 rupees or thereabouts. Sameer, would you suggest averaging? Would you suggest holding? What are the fundamentals looking like?
So the fundamentals are definitely improved for BHEL because of the expansion that's going to happen in the power sector, right, which they cater to largely, which had gone through a very bad lull over a long period of time. But the problem is, I think a lot of the benefits that were to come, or I expected to come, are also factored in when the stock price ran all the way from 40 rupees to 300. A similar story, again, you're probably getting in at the highest point in the time when the stock, after this huge run-up, if you take a slightly longer time period. So even though the prospects are bright, given that they're getting into various other spaces apart from just pure energy play, we think a lot of the positives are factored in. We are not suggesting one to average at this point. If you want to hold on, probably you can, but if you want to average, I think wait closer to 220 or even 200 levels. We think that is a possibility. It has run up quite a lot, so it could correct further.
Fair point. One last, and we're running out of time, so a quick view on Varun Beverages. We've got Sharath from Bengaluru, who's bought at elevated levels, and the stock is currently trading at 1,500. He's bought at levels of 1,600, but he's got a very large quantity. He's got 3,786 shares, so it's a very large amount that he's sitting on in terms of loss. Would you hold on to this, Rajesh, in the hopes of recovering your buy price?
I think if he can, yes, I think I would advise to hold as a stock on a long-term basis. Yes, it's in a bullish trajectory. Some correction was there in last couple of months, but I think again the stock will resume its uptrend as overall structure for the stock is on the bullish side. He may continue to hold. I think possible target once the stock crosses above 1570, I think possible target towards 1750 to 1800 would be there on the stock.
All right, gentlemen, on that note, that brings us to the end of this edition of Ask Profit. Absolute pleasure having you on the program. Viewers, hopefully we've answered all of the questions that you had today. Of course, quite a few of you have written in and we haven't been able to take them. We will take them over the course of the coming week. Do stay tuned. Lots more coming up on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Lord Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV.
Hello and welcome. Good noon. You're watching Hot Money here on NDTV Profit. I'm Harsaita. With me is Mihika Barve. And over the next half an hour or so, of course, we'll take you through markets, a very interesting conversation. So all of that slated. Let's quickly look at where the Nifty 50 currently is sitting. Well, we're not seeing the best of pictures to start this week off. We're seeing around a 10% higher on the Nifty, and it's fluctuating between the red and the green. So some bit of volatility as well that we are seeing in trade today. The broader markets is largely where the pain is, and we'll pull up the advanced decline as well to get perspective. But the broader markets, especially the Nifty mid-cap and small cap indices, the Nifty mid-cap down around 0.6 odd %, the Nifty small cap is down 1.2%. So that's where a large part of the pain, at least in the market, is. Why aren't we seeing that reflecting on the Nifty 50? It's up to sectors. Let's pull up the Nifty Bank, doing very well in trade today, around 0.5% higher or thereabouts on an otherwise tepid day, so relatively doing very well is what I mean. The Nifty IT also holding up fairly well in the green. So those two large sectors doing well is what's largely helping the Nifty 50. The Nifty PSU Bank, though, is where some pain is. So it's actually the Nifty Private Bank which is lifting a large part of the weight. And therefore, you're seeing good traction within the Nifty private banking space, up around 0.7 odd %, close to the day's high. The Nifty PSU Bank, though, is down around 1.2%. So tale of two cities in that single sector. But let's pull up some of the other movers. Nifty FMCG doing very, very well as well, 1% odd higher. You're seeing the Nifty Auto down around 0.5% thereabouts. And you're seeing the Nifty Media, which has been fairly volatile, down 0.5% again today. Metals taking it a bit on the chin along with PSU banks. Metals is the other component which is not doing so well, around 1% down as well on the Nifty Metal Index. So that's how at least it's playing out, at least midway through the day today. So that's where we are at. But let me bring on board, before we get the management on, Mihika, we have Suzlon in focus because we continue to have good traction, good order wins. We also did a special interview with Suzlon a couple of weeks back, and Neeraj did that. Just talk us through this new order win that has come through, due to which we saw that large spike on the stock. You can see it was up nearly 2+% after that order win.
Yes. It is India's largest order win on an aggregate basis. The order win is for 1,166 megawatts, and Suzlon Energy has received this order from NTPC. Now, this will be executed across 3 sites in Gujarat, according to the press release, 2 NTPC renewable energy projects and 1 Indian oil project, and the electricity generation potential to power around 3 million households. Now, this order comes under the wind turbine generator segment of the company. And to talk more about the order and the outlook going ahead, we are joined by the CEO at Suzlon Energy, JP Chalasani. Good morning, Mr. Chalasani. Welcome to the show.
Morning.
Yes. Up first, I want to congratulate you for the big order win. At first, just give us the details of the order. How will execution as well as revenue recognition play out with this?
This is 370 megawatts, 370 turbines of 3.15 megawatt each, and the 3 different projects all in Gujarat to be completed. And these projects need to be commissioned from December 25 to February 26. Means the whole thing is to be commissioned by next financial year. So therefore, obviously, the supplies would start this year for this project. And as you were mentioning earlier, there are 3 projects, and this has not just the supply contract, it also has the foundation erection contract, plus it also has a 10-year OMS service contract. And the service contract starts immediately after commissioning, unlike other places where we have a 2-year warranty period and there's a free OMS starts after that. But in this case, this service revenue starts right from day 1. So there are 3 contracts: the supply contract, the BOP contract, BOP includes the foundation erection, and the third one is the OMS contract. So the revenues would start going from this year itself because supplies would commence immediately. And the added advantage here is that the NTPC went ahead and awarded the land acquisition, 33 kV, other BOP much in advance to other contractors. So these sites are much better prepared for us to move ahead and do the foundations quickly and supply and direct. I think that's advantage that we expect these projects would be commissioned on or ahead of schedule.
Right, Mr. Chalasani, I'm Harsh also joining in. I want to quickly try and get your take with regard to how the timelines for this are expected to play out, as well as on a per megawatt basis, how would revenue start to trickle through? So just to try and get viewers, investors to understand that piece.
Yeah, obviously we don't, as a policy, we never talk about individual contract value-wise. As I said, that the revenue will start coming in, let's say start from towards the end of Q3 onwards, because supplies will commence, and the entire 1165 megawatt will get completed between December 25 to February 26. Means next financial year, everything will get completed. So revenues will start from, let's say, end of Q3 this year, and the entire project will get completed by the 4th quarter of next financial year. So the entire project will get completed.
Mr. Chalasani, in terms of margin profile, I know you don't speak on terms of, order specific, but now this entire order is in the S144 model, and so is your over 88% of your order book. So could you maybe give us the range in terms of how, what the margins look like for this model itself, because it's gaining so much traction?
As I said, unfortunately, we don't give a guidance on the project-wise or the model-wise. So the guidance, whatever we give in the investors' conference, is basically on an overall basis. They saying that 6 crores per megawatt is an average price for what we get, because there are different contracts of different scopes. So normally, it works out to an average of 6 crores per megawatt is the revenue, which it works out. And as we also keep saying that whenever we do up in each year, the moment we do 600 megawatts of execution, we will recover our full fixed cost for this division. And thereafter, everything what we sell straight flows to the EBITDA. So therefore, more we do beyond 600 megawatts, the EBITDA margins would substantially keep increasing. That's how it is. See, the main thing, a couple of advantages here is that this project is the certainty. Because of the advance action what NTPC has taken it, because we have always been saying, I said this in our interview as well, supply has never been a constraint for us. Okay. So therefore, because the advance action, this project can offtake turbines much quicker, and the project can be completed much quicker. So therefore, there's a certainty of revenue. And also, this is our first contract with NTPC.
And the last few years, we couldn't bid for public sector undertakings because of our balance sheet, but now that being corrected, that being strengthened, so therefore we'll be able to participate in the PSU. So as we move ahead, what would happen is that till now, each time we were saying that even earlier 3.8 gigawatts order book before NTPC, we said 2/3 of order book is C&I. What will now happen is that henceforth, while C&I would continue to grow, our public sector share will continue to grow because we'll be bidding more and more projects in public sector. So I think the major portion of our order book would be from public sector and the C&I segment, where the projects are expected to happen much quicker compared to some of the utility PPA projects.
All right, Mr. Chalsani, before I get to the 5 gigawatt order book that you now have, I want to try and get in viewer perspective from you with regard to the kind of opportunity size this opens up for you. You've said that now PSUs come to the fore for you, that opportunity opens up for Suzlon. So how large is the opportunity for you now?
See, opportunities, let's look at the sector itself is an opportunity because we don't exclude ourselves from any opportunity. Today, the installed capacity is 47 gigawatt, and we need to reach 100. Whatever, different estimates, whether we reach 90 or 100. And if you want to do 50 gigawatts in the next 6 years, that's what is the opportunity, what we have. And in India, we've been number one in terms of market share, and we will continue to do that. So therefore, for us, more important than the opportunity is that the quality of orders what we book and certainty of execution of those orders is much more important for us than simply saying that we have so much of order book. I mean, that makes a big difference. Every single order what we take is a quality order. It has PPA, it has a financial closure, it has everything. So therefore, the project would certainly will happen. I think that's more important for us. Otherwise, just counting the opportunity and saying that so much of order book is not going to really help. Those orders should be in a position that we should be able to go and execute it in the limited time period.
Right. So are you being choosy, sir, with regard to the orders you're taking on? Are you being choosy about the orders you're bidding for?
Yes, yes and no. Yes, in the sense is that we look at the quality of the order in terms of what stage that project is, what stage, if it is only a supply contract, what stage the land is available there, whether this project would happen in the timeline. Otherwise, what happens is we take and block our manufacturing capacity for the project, and the project gets delayed, then we are in trouble because we blocked and we can't even divert turbines. So therefore, I don't call it as pick and choose. We call it as we analyze the project and its timeline, and accordingly we take the projects. So one way, yes, we do the quality check of projects more from the point of view of execution capability and whether the power purchase agreements have been signed, PSAs have been signed or not, and those are the factors what we check. And every single contract what we have in this 5 gigawatts passes the test.
Right. So just given the kind of opportunity size available, I'm sure margins would also be playing a factor to what you bid for. Is there a number in mind with regard to what kind of margin or profitability you wish to achieve on the orders that you bid for?
No, there are two factors. One is, as I said, that margins would significantly improve with increase in quantity. As I said that, our break-even is at 600 megawatts for WTC division. So more we execute, more money we make. But as far as just because there is a huge demand in this country, you're not going to increase your turbine prices because at the end of the day, we all are guided by the tariff. Okay? So because the tariff is what the revenue gets fixed for the IPPs or any company. So that puts your pressure on to what extent you can actually put, the turbine price could be. I don't think just because there is a more demand, you can keep increasing your prices of turbine. You can't do that. The tariff is a limiting factor. So that would limit to what extent you can put it. But the economy of size, efficiency, and then more we do and more money we make from that point of it. EBITDA margins will increase significantly. So because we recover fixed cost 600 megawatt, but expecting that we will be able to increase our price is not the right thing because which we normally don't do. Because for us, what is important is long term. In the long term, wind sector has to sustain. The tariffs have to remain within a certain range. So therefore, we support that.
Gaurav, Mr. Chayasani, you said, in terms of it's the quantum that matters. So how much do you expect your margins to grow? The 17% that you're doing, do you think that's a reasonable number for investors to expect going forward, at least for FY25?
I think our guidance has always been constant. We said that high teens is what we will be, and we remain with that commitment.
Yes.
So
okay, now let's...
is constant.
Yeah, let's just talk about your larger pipeline now. It's filling fast. There is demand in terms of, so what's the bidding pipeline looking like? Also, kind of give us a perspective. Last time you spoke to us, you said that you want to grow the foundry as well as the all the other business verticals to grow independently. So how are the contracts broken up there?
Yeah, here if you look at this contract itself, as I said, while it is a supply and POP contract, it also has a 10-year service contract. So therefore, this entire 1.2 gigawatts, I'm just approximating it, it's 1.165 gigawatts, would get into our service revenue next year onwards. So therefore, straight away, the service business would keep, to that extent, would keep enlarging itself. This is one fleet. I'm not talking right now about the multi-brand. So therefore, each of the sales what we make, that is actually we're not just looking at one-time revenue of turbine supply. We're looking at it as a long-term 25-year supply by service contract. The here confirmed contract is for 10 years, and obviously it is subsequently it's extendable. So therefore, that's how the service business increases as we keep increasing the sales of turbines. And as far as the housing and foundry, what I talked to last time is that that division is now looking at expanding significantly into non-wind and as well as expanding significantly into export opportunities which are coming because of China Plus One strategy. So that's where that business, we have a separate strategy for that and it's going to grow.
Got it, Mr. Chayasani. I also want to talk about your capacity utilizations. Now, the aspiration is 90%. So what would it take to reach the 90%? And realistically speaking, in the next 2-3 years, what can one expect?
We just had I thought that we had a large interview of 30 minutes recently. So obviously, I said what I had to say at that point of time. I said that it is not a question of market share. My answer was that it's not a question of market share. What we attempt is that if I have an X manufacturing capacity, can we utilize to the extent of 0.9x, 90% of it? So today that's not happening. Today we're at 30-35%, let's say. That is what has to increase. That will increase with the projects which are certain to happen in terms of timeline wise. So NTPC is one which adds to that strategy of what we're having of enlarging our capacity utilization factor. Because we know certainly this 1.2 gigawatt, I'm just again approximating it, supplies would happen starting from, as I said, that the end of third quarter this year. So let's say the middle of next year, because thereafter it was only erection commissioning. So the next 3 to 4 quarters, we'll be able to supply this 1165 megawatt, these 370 turbines. There is a certainty. So therefore, our capacity utilization factor with such contracts would keep increasing. And we'll move towards our target of, can we reach 80% of capacity utilization.
Right, and so just give us a view on the pipeline, on the bid pipeline. How is that like, both domestic as well as export? What's the opportunity looking like in terms of bid pipeline for FY25?
No, there is, that there's 25 gigawatts of order has been placed on this. But my suggestion is that today let's restrict it to NTPC and NTPC order because we just recently spoke about it. Opportunity was large. There is 25 gigawatts of the pipeline which is announced. There is another 25 gigawatts of orders in different places of these things. I don't think opportunity is an issue. Issue is actually resolving the issues on the ground and getting the projects moving is what it is. But it's not the question of how much is the opportunity. Opportunity is out there. But converting that opportunity into on-ground commissioning of the projects is what is important. As I spoke, sometime back to you, Sandra.
Right. Okay, I'll stick to this order because you've overemphasized on that. So with regard to the O&M component of this order, what's the annual revenue that one can expect once all of this is set up, say FY27 onwards? You've suggested that O&M will kickstart at the start of the order execution itself. But just talk us through what that does to your top line in terms of how does it contribute?
No, obviously it's 370 turbines. Today we are 14 gigawatts operations. The state, that is increasing beyond the 1.2 gigawatts. So proportionally that much revenue is going to increase. And the thing is that it's going to increase faster rather than other contracts where we need to wait for 2 years. So straight away adding 1.2 gigawatts to the existing 14 gigawatts. That's the expectation. That is the revenue proportionality would go up from this single contract.
Yes. Thank you, Mr. Chalasani, for joining us, and we wish you all the best. It was lovely talking to you, sir.
Thank you. Thank you so much.
Yes. Well, we now introduce, Sharmila Joshi from sharmilajoshi.com, and in order to address the list of stocks we'll be addressing at first. Good afternoon, Sharmila.
Good afternoon.
Yes. Up first I want to take up ONGC, which is in focus. Now, the company over the weekend has awarded over 6,300 crores of orders. This has been distributed among 3 companies. One is Mazagon Docs, second is Deep Industries, and third is RBN Infracom. Now, Mazagon Docs was, given an order worth 1,400 crores for a pipeline replacement project. Deep Industries for 1,400 crores for production enhancement operations, and RBN Infracom received a 3,498 crore order from ONGC, and most of these orders have an execution period for the next 15 years. So, Sharmila, I want to first go on, come back to you. Your view in terms of ONGC and how these these orders actually help in terms of their production efficiency as well.
Yes, so I think a great piece of news for everybody involved. But I think that the question here is that one is the key thing that you mentioned is that these are very long gestation period orders. 15 years is what you're talking of. My only problem with ONGC is that when they are actually in a position to make money, since this is such an industry which is so closely linked with inflation, you always have some kind of control coming in some form of taxes. But overall, since it's improving efficiency, I think great news. And these are all great companies. I think at this point in time to think of replacing a company like ONGC would be, and to get that kind of scale would be impossible. So, I have no issues with that. It's just that I don't ever recommend oil marketing and downstream companies downstream, because I think that it's sort of a controlled environment. So I think out of the 3 companies, probably my best bet would be on Mazagon Doc, because not just this order, but overall their order book looks very healthy, but valuations look a little expensive.
Got it, Sharmila. So stay away from oil in terms of your view, but Mazagon Docs a good buy. But the next host of stocks we have in focus is the pharma stocks. We have likes of Lupin, Granules India, Suzlon Pharma, as well as Army Organics. And we're now joined by Varsha to give us the details on why these stocks are buzzing in trade today.
A few of the pharma stocks are actually under pressure. Now let's start with Lupin, wherein Lupin is facing a legal challenge related to its generic version of the drug, which is used to treat kidney problems. Now the original maker of this drug, which is Otsuka, is challenging a recent court verdict that favored Lupin's generic version of the drug, and the Lupin was expected to launch this product in April 2025. However, this new appeal introduces uncertainty whether Lupin will be able to launch this product or not. Now the primary product for the innovator is contributing almost $1.5 billion of revenue for the company. So that's the market that Lupin was actually targeting. Let's see what Citi has to say. So Citi has a sell rating for the stock with a target price of 1700, implying almost 24% of the downside. Now Citi says that Lupin may choose to delay the launch of this generic drug, and the company may not capture as much as market compared to a typical launch that was expected. And this will actually impact significantly to the Lupin's financial numbers, as Citi was expecting a 30% contribution from this product in FY26. And then we have Granules India, wherein they've got 6 observations from US FDA for their Hyderabad plant. The inspection was from August 26 to September 6, and this facility is actually crucial for Granules and contributes. So major contribution comes from this facility and is crucial for manufacturing finished doses and the intermediate products, and it also supports global operation for the company. We don't have the revenue contribution, but we do have the capacity. It has a capacity of almost 23,200 tons for intermediates and 26 billion units for their finished doses. Then we have Suzlon Pharmaceuticals, wherein US FDA conducted inspection for their subsidiary plant, and which was categorized as VAI, that is voluntary action indicated. That means that US FDA has found some lapses, but those were not severe enough to take any kind of action, and the company is therefore expected to take the voluntary actions for these regulatory approvals.
Thank you so much, Arsha, for giving us those details. Sharmila, I'll come back to you. Lupin, Granules India, as well as Suzlon Pharma, all under pressure. But what's your outlook on these counters?
So I think, three things. Firstly, pharma as a sector has done reasonably well in the recent past. I think if you look at the sectoral performance over the last year, then pharma would be among the sectors that's done best. So that always goes against you when there is bad news. Because if you're a sector and a stock within that sector which has done well and gone up, then if you have any piece of bad news coming, then your stock price does get impacted. And all these three pieces of news are fairly significant in their own way. They're not something that I would honestly put a sell call on any of the stocks, but significant enough to want you to sort of wait and see where the stock goes to. Probably, I think even for Granules, really speaking, the best time for it was, the COVID years, because they have products that did very well then. And I think the price has almost doubled since then. Lupin has also delivered great results. So I think you need to take this news into account. And if you definitely don't make a fresh buy, but I definitely would continue to hold what I have and would be more neutral on this because of this news than really having a sell call.
Thank you so much. Wait and watch if you're holding these pharma counters, but not a right moment to enter yet. But the next stock that we do have in focus today is SpiceJet. It's up 3%, and this is on entering an agreement with Carlyle Aviation Management. We also have the Aviation Ministry on the SpiceJet crisis. The minister said that they want as many airlines to operate in India due to the higher demand. And while SpiceJet is currently facing a crisis, they're keeping a close watch on the company. And we have Aditya joining us now to give us more details on the pact entered with Carlyle. Aditya, I believe this is on a restructuring pan lease.
Yes, absolutely, Mehika, you are right. So basically, the pact with Carlyle right now is for the restructuring of debt. The Carlyle has an exposure of nearly 1157 crores towards SpiceJet, and now what's happening is SpiceJet has entered into a term sheet with Carlyle Aviation, and Carlyle will convert a debt of $40 million into equity stake. So basically, what happens is in this transaction, Carlyle will get nearly 4% of the stake in SpiceJet, and the debt will come down from $137 billion or million dollars to nearly $97 million. Now, basically, when this debt conversion happens and 4% equity goes to Carlyle, the promoter's stake holding in the company, overall stake of the promoters, will also come down from 47% to nearly 45%. Now, this is an interesting development that has been happening because SpiceJet right now is dealing with a lot of financial crisis, and then they are in the dire need of money right now, and to keep the airline afloat, because flights have been denied takeoff and passengers have been denied boarding at many airports right now. So what is coming out from this entire issue is that after the deal of Carlyle, SpiceJet will get nearly 336 crores, which is out of the overall debt of 4,300 crores. So it is not a significant move for SpiceJet, but there is some assurance coming. And along with that, company had also announced raising money via QIP and also via issue of warrants to the promoters. And this raising will come to about nearly 3,200 crores. So all in all, SpiceJet has some promising fundraising pipeline right now, and airline is looking to revive itself.
Got it, Aditya. Shamia, I'll come back to you. SpiceJet, it's a counter that has been facing a crisis financially, but when you look at the stock performance, it's up over 58% in the past 1 year. What's your outlook on this counter and the sector as a whole?
Very clearly, I think this is a sector everyone likes, because we are seeing the rate at which everyone is traveling, and so whether it is hotels or any of the related play, there is great confidence in that. Having said that, I think we heard the numbers, the kind of debt that they have, what this means, and we all know, again, which is fairly public knowledge, the kind of issues that they've been dealing with. So I think, again, while this news is positive, you need to take it with a pinch of salt and be a little neutral and see how far this takes them, because at the end of the day, this is industry. Aviation as an industry really requires you to have a good amount of funds at your disposal, because there is a constant need to keep upgrading your aircraft, service industry in itself is, you need to be very good in terms of delivering what passengers want, etc. So I don't think that it's a good development, but it's not, I think, something that I would be absolutely positive on and say that now the stock becomes a buy for me.
Yes.
So again, a bit of a neutral view.
Yeah, got it. Thank you, Sharmila, for giving us, your outlook on the stocks that we have buzzing today. Well, viewers, on that note, that's all the time we have on this show today. But do stay tuned to NDTV Profit. Lots more lined up on the other side.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4।
Thanks so much for tuning in this broadcast. Now we are hitting a period of peak data. There is going to be the Fed outcome, whether it's a cut on or remains to be seen. Then we hit the earnings season, and it will be an important earnings season as well, including and the festive season. So all put together, and then November comes the US election. So all put together, it promises to be a fairly data heavy period. Though I don't know which period in the last 4 years has not been data heavy. But at such point of time, charts often tell you a story. And charts in the recent past have told a story to Manav Chopra, who's predicted, amongst other things, the uptick that we've seen in the IT sector very, very correctly since the start of January, or probably even before that. He's now recently come out with a note on a particular theme. But before I get to the theme, let me welcome him to try and understand what does he think about the broader markets at large. Manav, great having you. Thanks for joining in. Hope all is well.
Yes.
I wonder, Manav, how do you think about the markets? Because the overwhelming consensus view is that the markets are overheated, overvalued, and they should correct. Just that, they are not correcting.
See, the market structure has been quite bullish. I think it has been, different dynamics
of the markets which have throttle the markets higher. To make it very simple, there has been different sector participations which has led the markets move higher, and that is a classical case for any bull market. Let it be the Indian equities or also the global equities. The kind of the rallies that we witnessed in last few odd months, definitely we are in a bull market. But yes, within the bull market phase, there comes a phase of short-term consolidation or a bit of a cool-off. But at the moment, we don't see any selling exhaustion or any intermediate top at these market levels, let it be the Indian markets or the global markets. But when we talk about the Indian markets in general, yes, the construct of the market in post-election has changed a bit, which we had spoken about last time, where the focus has got aligned from the high beta or the classical cyclical stocks or the PSUs and has shifted all together towards IT, certain sectors like consumer durables and pharma. So the market construct have changed, and that's the the classical way of any bull market that rages and moves higher. So at this construct, we are very bullish on the market. I think the markets are witnessing some sectorial and stock specific corrections, but in this whole scenario, as long as the market remains above 24,000 levels, I think we might see some bit of a cool off at around these levels, but no worry signal. But eventually, a likely chance we will continue to move higher in coming few months.
Okay, so 24,000. So you don't rule out a 2-3% gash, but you believe the eventual move is higher.
Absolutely. I think any short-term, correction of 2 or 3% can eventually happen to any course of the markets. But looking at the construct, I think we are quite constructive in the medium-term to longer time frame of charts.
What are the medium-term targets if you have them? It could not be an exact target. It need not be an exact target, Manav.
We do expect the next leg of rally, which could take the markets towards sub 26,500 levels. And that meaningful participation will be witnessed from sectors like IT, FMCG, Pharma, and some support coming from the auto. There is a likely chance that the financials, defensive of the financials like insurance, which have already started to participate, this will tag along. So, the general market construct is quite bullish, and we are not seeing any large cap stocks which are showing some classical topping, but just a bit of a cool off, and then we start to move on the upside.
And what is the time frame, Manav, that you're thinking of this? I mean, whether the number is 26 or 26,500 is a separate case in point, but what are the time frames that you believe these targets could be reached?
A very likely scenario, this should happen by next 2 or 3 months, maybe post the October, November. September is usually a cyclical, the month where the market usually takes some bit of a cool off. And looking at the global market charts, it looks to be a breather kind of a scenario. And I think a lot of data events, once gets gathered off, we will start to bottom out and start to move on the upside.
Got it. Okay. So constructive on markets doesn't rule out a 2-3-4% correction, by the way, viewers, at 25,000 to a target. For a market to stay above 24,000 at the very least, it could still correct 2-3%, but that could happen in any market, no matter how bullish it is. You've given us some sense of the sectors. I'd like an update, Manav, before I get to your latest report as well. And the update that I want is on IT. Now, you identified this way early. The sector has done well, relatively and in absolute terms. But I heard you say that this rally that you anticipate in the markets to come in would be led by IT. Did I hear you use that term?
Yes, absolutely. I think IT will be the new sector leader, something that we had already discussed and focused a few months back. The sector leadership will be changed and IT would be taking the strong hold going forward. I think we have seen a very good classical breakout in the IT index, and this sector has been massively under-owned by a lot of mutual fund investors, by the mutual fund couple of months back. And that massive under ownership and a run up, we are seeing some bit of a chase coming in. Obviously we have certain data points to reflect that, and it doesn't end here. I feel currently IT index is somewhere close to sub 42,000 levels, but eventually we will see another leg up towards 45,000 levels. And on stock specific, we remain bullish on names like Infosys, TechM, Persistent, and Naukri, which has been our top buy from this sector. And within that space, if IT starts to see some bit of a leg upside, I think that definitely calls for a limited downside for the Indian markets in general.
Okay, so Infosys, Techem, Persistent, and I heard you mention Naukri has been your top buy. So amongst the first amongst equals is Naukri or InfoEdge?
Yes.
Okay. So the top favorite is InfoEdge, but the others like Infosys, Techem, and Persistent also stand out for Manav Chopra. Manav, did you mention consumption at all? Part one of my question. And part two is this very interesting note that you've come out with on Titan. Now, is Titan effectively under the broader consumption theme, or are you looking at dwellers slightly differently within that bucket?
Okay, so the sector which also has been in one of an upgrade on the technical perspective has been a consumer durable sector. We've seen a good amount of rally and outperformance post in last few months, and the sectoral change and the market construct have become slightly bent towards the low beta, which was anticipated. And within this space, I think Titan is one name which has seen some bit of a correction of 15-20% in last 6 odd months. This has been one of the underperformers. And we are sticking to one of the process on our technical models to identify early trend movers. There is a long-term proprietary scanner that we've created, which helps us identify early trend movers at an early stage, which was one of the qualifying criteria for our IT index, and a similar one is for a stock specific on Titan. Whenever on Titan there has been a buy signal in last 4 years, every year we've witnessed one buy signal as per our model, and let me tell you, Neeraj, all the buy signals have given positive returns in 3 to 6 months, giving an average gain of 20 to 30%. And with that, with a strong tailwind of the consumer durable sector, I think Titan has witnessed some bit of an accumulation and selling exhaustion completion in last couple of weeks, which definitely triggered some strong buy setup for us, and which got validated by some early breakout signals, and basis on that we expect new highs coming in for the Titan. Yesterday there was an initial breakout which witnessed a strong trading day, and as per the open interest data there was short covering. So that really talks about the under ownership of Titan even at the current levels, and this is one stock within the Nifty 50 which has a reasonable room to go towards new highs. So we have a medium-term upside target of close to 4350, 4700. And as per our models, we expect in the past 5 years, once we have a buy signal, there is an average return of 50% in 12 months time. So that gives us a upside long-term target of 5400. So a reasonable upside room even from the current levels, currently priced at 3650. It remains a bound dips for us, and I don't see the stock go below 3450 on the immediate basis.
In which case, just wondering, because it's a technical call, are there stop losses that you're putting in place for a large position on Titan?
Yes, so we have recommended a stop loss of 3400 on closing, which is a 6% stop loss for an upside of 30%, a very high risk reward trade for us.
Oh yeah, most certainly, very high risk reward as well. Okay, so IT markets, IT, consumer durables, all three favorable. Within IT, you've given us your list. And within the consumer space, Titan, what's one last 30-second answer, Manav, if you can. Is Titan the lone ranger, or some of the other jewelry stocks could also do well? Any study there?
Yes, so this segment has been quite bullish. We have witnessed a good amount of momentum, particularly in names like Kalyan Jewelers. The stock continues to be one of very strong favorites for the mid-cap segment. The momentum remains to be very, very strong and upbeat, and absolutely no thought about the fact that the stock will continue to move higher. And the trajectory for Kalyan Jewelers remains very, very strong. I think it will continue to outperform, no second thought on that. But based on the current market setup, I think we have to also identify certain structures which are providing you high risk entry, maybe post a correction. That's why, Titan also got qualified. But largely, I think Kalyan Jewelers too has some more legs on the upside, and looks very bullish within the segment itself.
Well, that was Nuvama Institutional Equities Manav Chopra talking about investing in current market scenario and more. Let's have a quick look at what the markets are doing at present. Well, let's pull up the Nifty 50. Both Nifty 50 and Sensex have had a wide range of trade today in terms of Nifty 50. The range was roughly 70 odd points, and currently if we see the Nifty 50 has slowed down in terms of its momentum and it's trading flat right now, roughly 100 odd points away from its day's highs. In terms of the Sensex has a wide range of 550. Both Sensex and Nifty have had range-bound trades in the past 1 week, but today the range is wider. The stock is, up around 0.08% only. The Sensex is up around 0.08% only. Let's also take a quick look at what the broader markets are doing. In terms of the broader markets, the Nifty Midcap 150 and the Small Cap 250 is a tad bit under pressure. The Midcap the Small 50 is down around 1.5%. So it's trading lower as compared to what it was trading at 11 o'clock, and Midcap 150 is also down around 0.8%, so both are under pressure. Let's also quickly pull up Bank Nifty and see what Bank Nifty is doing in trade today, and also see the kind of momentum it has. There you go, the Bank Nifty has also come off from its day's highs, and it's trading around 0.13% higher. Let's also pull up the contributors on the Nifty and see what are the counters that are weighing up and weighing down on the Nifty. There you go, there's likes of ICICI Bank, HUL, ITC, Infosys are some of the counters that are keeping Nifty in check when it comes to the positive side, but there are stocks like ONGC, Tata Motors, NTPC and SBI are some of the counters that are weighing down on Nifty. Let's also quickly pull up the advanced decline ratio and see where the market is headed in terms of the buyers and sellers ratio, and clearly we are seeing that there are 1,500 odd declines versus 580 odd advances. So the ratio in terms of advances to decline is roughly 1:3, and of course skewed towards the sellers in the market today. Let's also quickly pull up the sectors and see what sectors are under pressure and what sectors are doing well in trade. There's Nifty FMCG, which is up around 1.4%. So it's always a game of the defensive play. Nifty consumption is also up around 0.4%. Nifty IT again is up around 0.16%. But something that's under pressure is Nifty PSE down around 2.4%, and PSU Bank is also under pressure, down around 1.4%. Nifty Energy is down around 1.4%. Nifty Metals is also down around 1.4%. We can also quickly pull up and see the contributors on all of these indexes: Nifty FMCG, Nifty PSU Bank, Metal Energy. Let's pull up Nifty FMCG and see what are the counters that are, adding to the gain on the index. There's HUL, which is up 2.5%. Now, this is after the board has considered a new committee for taking decisions on their ice cream business, after Unilever, which is their parent company, has decided to hive off their ice cream business. There's United Breweries, which is up around 2.5%. Dabur India up 2%. Likes of Marico, Tata Consumer, ITC, Britannia, Godrej Consumer, all up in trade more than 1%. But two counters in red: Radhiko Khaitan down around 1.1% and Balrampur Chini Mills down around 1.5%. Let's also quickly pull up the PSU Bank Index and see what are the counters that are trading in pressure. All contributors on the index are in red, largely led by PNS Bank, UBI, CBI and PNB. But, let's shift focus to SpiceJet, and here's an NDTV Profit exclusive. Cash-striped SpiceJet has come up with a financial rescue plan. Carlyle Aviation will convert part of debt into equity and will get 4.1% stake on fully diluted basis. Well, Aditya joins in with more details. Aditya?
So yes, right now what SpiceJet has informed is that Carlyle Aviation is going to convert a part of its debt exposure towards the airline into equity, and basically this equity conversion would mean that the current debt exposure of Carlyle Aviation towards SpiceJet, that stands nearly around 1157 crores, will come down to somewhat around 820 crores. Now what basically happens after this is Carlyle Carlyle Aviation will get 4% stake in the company. So after getting this 4% stake, the promoter stake of in the company would come down to nearly 45% from the current 47 odd percentage. In this complete exercise of Carlyle Aviation converting their stake to equity, they are considering the stock price at 100 rupees per share. Now this is one very interesting point wherein the lender, that is Carlyle Aviation, is considering 100 rupees per share price, which is 62%, nearly 62% higher than the current market price of the airline. Now this would be an interesting move from the Carlyle Aviation part to see that how this entire deal, entire debt conversion goes through, and also there is a fundraise in the pipeline from SpiceJet to raise around 3,200 crores, which airline would be looking forward to handle the current financial crisis at the center.
Right. Let's now shift focus to the pharma sector. Now, the sector has been buzzing on the back of widespread update across companies. Varsha joins in to give us, a lowdown of what's buzzing in the sector. Varsha, take it over.
A few of the pharma stocks are actually under pressure. Now let's start with Lupin, wherein Lupin is facing a legal challenge related to its generic version of the drug, which is used to treat kidney problems. Now the original maker of this drug, which is Otsuka, is challenging a recent court verdict that favored Lupin's generic version of the drug, and the Lupin was expected to launch this product in April 2025. However, this new appeal introduces uncertainty whether Lupin will be able to launch this product or not. Now the primary product for the innovator is contributing almost $1.5 billion of revenue for the company. So that's the market that Lupin was actually targeting. Let's see what Citi has to say. So Citi has a sell rating for the stock with a target price of 1700, implying almost 24% of the downside. Now Citi says that Lupin may choose to delay the launch of this generic drug, and the company may not capture as much as market compared to a typical launch that was expected. And this will actually impact significantly to the Lupin's financial numbers, as Citi was expecting a 30% contribution from this product in FY26. And then we have Granules India, wherein they've got 6 observations from US FDA for their Hyderabad plant. The inspection was from August 26 to September 6, and this facility is actually crucial for Granules and contributes. So major contribution comes from this facility and is crucial for manufacturing finished doses and the intermediate products, and it also supports global operation for the company. We don't have the revenue contribution, but we do have the capacity. It has a capacity of almost 23,200 tons for intermediates and 26 billion units for their finished doses. Then we have Suzlon Pharmaceuticals, wherein US FDA conducted inspection for their subsidiary plant, and which was categorized as VAI, that is voluntary action indicated. That means that US FDA has found some lapses, but those were not severe enough to take any kind of action, and the company is therefore expected to take the voluntary actions for these regulatory approvals.
Varsha, thank you so much for breaking that down for us. Well, all of those stocks are in pressure today. Granules India down around 3.4% in trade. But, let's shift focus to the primary markets. The IPOs have received a lot of traction when it comes to 2024. One of the, biggest IPOs opens for subscription today. That is Bajaj Housing Finance, which is a 6,560 crore IPO. The price band is fixed between 66 to 70, and the offer consists of 3,000 crores of OFS and 3,560 crores of fresh issue. Now, in terms of the anchor investors, well, the IPO raised 1,758 crore through anchor investors, and these anchor investors include the Government of Singapore, Abu Dhabi Investment Authority, Fidelity, Morgan Stanley, ICICI Pru, and HDFC Mutual Fund. Now, in terms of the key strengths and weaknesses of the IPO, well, in terms of the key strengths, well, highest share of salaried customers at 87% in the customer mix, and it is the most diversified player in terms of offerings and market presence. In terms of ability to leverage client base to cross, sell and diversify portfolio, and consistent investment in technology to suit customer needs in a better way are some of the strengths for this IPO. In terms of weaknesses, well, the PE is tagged at 33% versus that of P of peers, which has a median of roughly 24 times. So the valuations are slightly higher as compared to peers. In terms of the PB ratio, that is price to book ratio, it's 3.2 times versus peers of 3. So that is in line with the peers. In terms of high loan to value ratio, it's 70% in Q1. And high loan to value means, high loan to value basically means that the lender has higher risk if asset price declines. Now, in terms of the loan business, the customer range from individual buyers to large scale developers, and average ticket size of roughly 46 lakh is the highest in the industry. And in terms of outlook, what can you expect going forward from Bajaj Housing Finance? Well, the industry is growing at 15%, is expected to grow at 15% in the next 3 years, and the housing demand is expected to remain buoyant. So clearly Bajaj Housing Finance is going to benefit out of this kind of boost. And we also have likes of Cross Limited and PN Gadgil Jewellers, who are also, are open for subscription in this particular week. We have PN Gadgil, where IPO size is roughly 1100 crores. The price band is 456 to 480. Subscription starts from 10th of September to 12th of September, and the lot size is 31. So the minimum investment for one lot size is roughly 14,880. We also have two, IPOs which will open for subscription from the auto space, that is Cross Limited and Tollins Tire. The IPO size for Cross is 500 crores, and for Tollins it is 230 crores. It's World EV Day today, and to celebrate the same, we get you an in-depth analysis of the sector to give you an actionable insight. Puneet joins us with key data from the sector. Puneet?
Well, thanks for that. So, it has been a very strong segment for the country over the last 3 years, and especially since the pandemic. We have seen the EV market grow by roughly 3 times over the last 3 years, and it needs no stopping going forward as well. When you look at, some of the segments that has catered to this particular strong growth has been led by the electric two-wheeler segment, and that has been one of the key positives as well, driven by the likes of Ola Electric, Bajaj Auto, as well as TVS now. Now, when you look at, the company's sales in the past couple of years, that has been one of the strongest in the segment. Now, despite being, coming at a very strong base of roughly 1.57 lakh units in the previous year, Ola Electric reported roughly 3 lakh units in the last year, growing at roughly 114%, while the likes of TVS Motors, as well as Bajaj Auto and Ather Energy have maintained their market share as well. Now, someone like a Bajaj Auto, which has been a late entrant in the market, has seen its sales grow by roughly 3.5 times compared to FY23, and that's been one of the key positives as well. When you move on and look at what the market share would look like for companies like Ola as well as TVS, that's been one of the key positives as well, coming at roughly 35% for someone like Ola Electric, and it's also grown from the 1/5 market that it captured in the previous year. For the likes of TVS Motors as well, it's captured 1/5 of the market by the end of FY24 to come at 19%. While someone like in Ather Energy also, while the market share hasn't improved in FY24, it has maintained its 11 to 12%, but this is slightly disappointing because the company's early foray into this segment, similar to what Ola did, but hasn't been able to capture the market meaningfully. Others such as Bajaj Auto also had carried forward their market share from FY23 to 24 as well. Now, what's interesting is that the FY25 picture paints a very different view. Now, when you look at Ola Electric, its sales have grown by roughly 67%. But look at Bajaj's growth as well, upwards of 200%, growing very strongly, and so does, Ather Energy, and dropping at 10% this particular time. Because of the strong growth of Bajaj, their market share has improved meaningfully as well. So Ola's loss is Bajaj Auto's gain. When you look at the market share picture from April to August of 2024, we've seen that, Ola's market share touched at 52% when the FAME 2 scheme ended, but it has, moderated and fallen to roughly around 31% by the end of August. But biggest gainer in this particular segment is Bajaj Auto, this particular blue line, growing from roughly 13% in April to 19% now, similar to the market share of someone like a TVS Motors at roughly 20%. Ather Energy, if you spot, they have their, maintain their market share on the 11 to 12%, but similar to a story that they would have wanted to capture a market a bit more higher now. Now, when you look at the electric four-wheeler segment, it is not as crowded or as competitive as the electric two-wheeler segment, because there's one clear winner here, which is Tata Motors. They have roughly 70% market share in the electric segment, backed by the launches of something like a Nexon as well as the Punch. But competition from some likes of Mahindra and Mahindra also and Maruti expected to launch both in the last quarter of this fiscal year is going to be a key thing to watch out for. Finally, commercial vehicle makers, the EV bus segment is something that's, very interesting as well. We have legacy players like Ashok Leyland as well as Tata Motors and VECV, which have been competing in this market. But it has also a couple of new players in the market. Both are listed in the segment, both JBM as well as Electra Greentech over the last couple of years have gained market share as well. So, there are certain factors to look at as well. The FAME 3 is going to be one of the key things to watch out for. The outlay is something, if it's similar to FAME 2 of 10,000 odd crores, and which segment get the most premise or the strength as well is going to be watch out for. So overall, pandemic has been really a boon for electric vehicle segment and personal mobility. What to watch out for next is going to be one of the key things to watch out for. Back to you.
All right, Puneet, thank you so much for breaking that down for us. But with that, we're completely out of time on this show, and that's all that we have on the show for now. Stay tuned to NDTV Profit for more news and updates.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
Benchmarks trade flat, tracking weak global cues. Nifty trades below 24,900 while the Sensex is above 81,200. Broader markets underperform benchmarks. Small caps lose over 1%. Most sectoral indices drag the index. PSU banks, metals, oil and gas remain among the top losers, while FMCG packs gains of over 1%. Gala Precision marks a strong debut on the bourses, lists at a 40% premium to issue price. The 54th GST Council meeting, chaired by Finance Minister Nirmala Sitharaman, is underway. The Council is expected to announce rate rationalization for insurance products, online gaming and other key proposals.
The 40% of the air pollution in the country is because of transport sector.
And that's the word coming in from the Road and Transport Minister Nitin Gadkari from the 64th ACMA annual session. The minister also highlights synergies from EVs as NDTV Profit celebrates World EV Day. Hello and welcome. You're watching Market IQ and I'm your host Pallavi Nahata. Let's take a quick look at where the markets are at first. Well, not too much to talk about there. The Nifty 50 currently remains flat. The Sensex performing a tad bit better. On the Sensex too, while we're hovering around the 81,300 mark. On the Nifty 50, we're a tad below the 24,900 mark. Let's also take a quick look at some of the top gainers and losers on the Nifty 50. Now, while ONGC, Tata Motors, NTPC, SBI are what's proving to drag the index down. The most HUL, ITC and Infosys, along with a bunch of other stocks, are what's performing slightly better. But at this stage, we're seeing almost as many advances and as declines. Well, actually, we're seeing slightly more declines than advances. And we're going to be waiting for what cues the markets pick up on next. Very little to look forward to over the next few days. We do have the Fed, the FOMC meet to look forward to, but that's only next week. So we're going to be watching out for whether the markets move much up until then. Let's also take a quick look at some of the sectoral indices and what's performing well there. Now, among the top performing sectors, Nifty Private Bank, Nifty Bank are in the green, but most sectors are currently in the red. Nifty PSE, of course, is down by almost about 2%. Nifty Oil and Gas also down by around about 1.5% or slightly over that. What's performing well is Nifty FMCG, Nifty Consumption, Nifty Bank. Nifty Finance and Nifty IT too are in the green, but they're almost flat actually. Let's also take a quick look at the broader markets. We continue to see some underperformance today there. While the Nifty Small Cap 250 is down by almost about 1.5%, the Nifty Midcap 150, though in the red, is looking slightly better. It's in the red by about 0.5% or slightly over that actually. But as we celebrate the World EV Day, on this occasion we get you some in-depth analysis of that space. Puneet joins us to tell us what the road so far has been like for EVs.
It has been a very strong segment for the country over the last 3 years, and especially since the pandemic. We have seen the EV market grow by roughly 3 times over the last 3 years, and it needs no stopping going forward as well. When you look at some of the segments that has catered to this particular strong growth has been led by the electric two-wheeler segment, and that has been one of the key positives as well, driven by the likes of Ola Electric, Bajaj Auto as well as TVS now. Now when you look at the company's sales in the past couple of years, that has been one of the strongest in the segment. Now despite being coming at a very strong base of roughly 1.57 lakh units in the previous year, Ola Electric reported roughly 3 lakh units in the last year, growing at roughly 114%, while the likes of TVS Motors as well as Bajaj Auto and Ather Energy have maintained their market share as well. Now someone like a Bajaj Auto, which has been a late entrant in the market, has seen its sales grow by roughly 3.5 times compared to FY23, and that's been one of the key positives as well. When you move on and look at what the market share would look like for companies like Ola as well as TVS, that's been one of the key positives as well, coming at roughly 35% for someone like a Ola Electric, and it's also grown from the 1/5 market that it captured in the previous year. For the likes of TVS Motors as well, as captured 1/5 of the market by the end of FY24 to come at 19%. While someone like an Ather Energy also, while the market share hasn't improved in FY24, it has maintained as 11 to 12%, but this is slightly disappointing because the company's early foray into this segment, similar to what Ola did, but hasn't been able to capture the market meaningfully. Others such as Bajaj Auto also had carried forward their market share from FY23 to 24 as well. Now what's interesting is that the FY25 picture paints a very different view. Now when you look at Ola Electric, its sales have grown by roughly 67%, but look at Bajaj's growth as well, upwards of 200%, growing very strongly, and so does Ather Energy, and dropping at 10% this particular time. Because of the strong growth of Bajaj, their market share has improved meaningfully as well. So Ola's loss is Bajaj Auto's gain. When you look at the market share picture from April to August of 2024, we've seen that Ola's market share touched at 52% when the FAME 2 scheme ended, but it has moderated and fallen to roughly around 31% by the end of August. But biggest gainer in this particular segment is Bajaj Auto, this particular blue line, growing from roughly 13% in April to 19% now, similar to the market share of someone like a TVS Motors at roughly 20%. Ather Energy, if you spot, they have their maintain their market share on the 11 to 12%, but similar to a story that they would have wanted to capture a market a bit more higher now. Now when you look at the electric four-wheeler segment, it is not as crowded or as competitive as the electric two-wheeler segment, because there's one clear winner here, which is Tata Motors. They have roughly 70% market share in the electric segment, backed by the launches of something like a Nexon as well as the Punch. But competition from the likes of Mahindra and Mahindra also and Maruti, expected to launch both in the last quarter of this fiscal year, is going to be a key thing to watch out for. Finally, commercial vehicle makers, the EV bus segment is something that's very interesting as well. We have legacy players like Ashok Leyland as well as Tata Motors and VECV, which have been competing in this market, but it has also a couple of new players in the market. Both are listed in the segment, both JBM as well as Electra Green Tech over the last couple of years have gained market share as well. So there are certain factors to look at as well. The FAME 3 is going to be one of the key things to watch out for. The outlay is something, if it's similar to FAME 2 of 10,000 odd crores, and which segment get the most premise or the strength as well is going to be watch out for. So overall, pandemic has been really a boon for electric vehicle segment and personal mobility. What to watch out for next is going to be one of the key things to watch out for. Back to you.
Absolutely. In fact, Nitin Gadkari, Minister of Road and Transport and Highways and a strong advocate for EVs, said that 40% of India's pollution is because of the transport sector. While addressing the 64th ACMA annual session, he also added that consumers should have the option to save up on fuel.
The 40% of the air pollution in the country is because of transport sector. I am the minister who is responsible for that. Is it good? And actually, I am really telling you, I never want to, actually in Delhi, every time infection is there. And one of the important reasons is pollution. So the ethics, economy, ecology and environment. These three are the important three pillars of the society. And I feel that we need to protect our country from air pollution, water pollution and sound pollution. And that is the reason, first thing. So my suggestion is, now you understand the economics. I got opportunity to launch a CNG scooter of Bajaj. And Raju was telling me that if 1 kilometer in petrol, the cost is coming 2 rupees 25 paisa, and in 1 kilometer for CNG, if you are using, the cost is coming 1 rupee. So there is more than 50%, 60% saving in the fuel cost. Then consumer is going to take that. If you want to capture the market and increase your share, you have to give the option to the people.
Right, and moving on, Suzlon Energy's stock jumps after the company secured India's largest wind energy project worth 1,166 megawatt from NTPC Green Energy. So what does the project entail and what is the revenue potential? Mihika joins us with all of those details. Mihika.
The project is to install 370 wind turbine generators. Now this is of the S144 equipped turbines. This is a model of the company which is roughly around 88% of their Q1 order book, and these will have a capacity of 3.15 megawatt. And these projects will be executed across 3 sites in Gujarat, 2 NTPC renewable energy projects and 1 Indian oil project. And the electricity generated will power around 3 million households. Now according to the company, this project is expected to be completed by Q4 of FY26. In terms of revenue potential, the company earns around 6 crores per megawatt of wind turbine generator executed. So this gives a revenue potential of over 6,900 crores based on the capacity of 1,100 megawatts. And the company has also stated that they have also signed up a 10-year O&M service contract as a part of this order. And when you look at the current order book, now their order book is up 31% from their Q1 FY25 value, which stood around 5 gigawatts.
So, Mika, stay on with us. A slew of other companies as well, Mazagon Dock, Deep Industries and RBM Infracom are buzzing after having received orders from ONGC. Tell us a little bit more about these order wins as well.
Yes. So yes, ONGC did go on order allocation spree, as you can call it, over the weekend and gave a total of 6,300 crore orders. RBM Infracom bagged orders worth 3,498 crores from ONGC. Now the order has a validity period for 15 years, and it's key to know that RBM Infracom is an engineering and infra company which has expertise in the oil and gas refinery and power plant space. Then we have Mazagon Dock, which has got an order worth 1,486 crores. Now this order is for a subsea pipeline replacement, and it's to be executed by February of 2026. And lastly, we have Deep Industries, which has received an order of 1,402 crores, which is the biggest order received by the company yet. It has also taken the company's order book and it has doubled the order book to over 2,600 crores. Now this order is for the production enhancement operation in mature fields at the ONGC's Rajahmundry asset, and this is the first of the kind of in terms of the order nature, and the project duration is set for 15 years.
All right, thanks a lot for that, Mihika. In fact, we also spoke to Rohan Shah, the Group CFO of Deep Industries, about the recent order win. Here's what he had to say.
We are quite bullish on our growth numbers, and we believe we should grow at least more than 35 to 38% even in FY25, and similar amount of growth we are expecting in FY26 and 27 as well. So with an opportunity of adding few more such production enhancement contracts in coming future, this growth percentage can even go for higher.
Right, another set of stocks from the pharma sector, Lupin, Granules India and Ami Organics are buzzing today. Varsha joins us with the latest developments on each of these. Varsha.
A few of the pharma stocks are actually under pressure. Now let's start with Lupin, wherein Lupin is facing a legal challenge related to its generic version of the drug, which is used to treat kidney problems. Now the original maker of this drug, which is Otsuka, is challenging a recent court verdict that favored Lupin's generic version of the drug, and the Lupin was expected to launch this product in April 2025. However, this new appeal introduces uncertainty whether Lupin will be able to launch this product or not. Now the primary product for the innovator is contributing almost $1.5 billion of revenue for the company. So that's the market that Lupin was actually targeting. Let's see what Citi has to say. So Citi has a sell rating for the stock with a target price of 1700, implying almost 24% of the downside. Now Citi says that Lupin may choose to delay the launch of this generic drug, and the company may not capture as much as market compared to a typical launch that was expected. And this will actually impact significantly to the Lupin's financial numbers, as Citi was expecting a 30% contribution from this product in FY26. And then we have Granules India, wherein they've got 6 observations from US FDA for their Hyderabad plant. The inspection was from August 26 to September 6, and this facility is actually crucial for Granules and contributes. So major contribution comes from this facility and is crucial for manufacturing finished doses and the intermediate products, and it also supports global operation for the company. We don't have the revenue contribution, but we do have the capacity. It has a capacity of almost 23,200 tons for intermediates and 26 billion units for their finished doses. Then we have Suzlon Pharmaceuticals, wherein US FDA conducted inspection for their subsidiary plant, and which was categorized as VAI, that is voluntary action indicated. That means that US FDA has found some lapses, but those were not severe enough to take any kind of action, and the company is therefore expected to take the voluntary actions for these regulatory approvals.
All right, thanks a lot for that, Varsha. We continue to see some pressure on the Nifty Pharma, with most stocks trading in the red. But let's shift focus to the primary markets. We have a total of 11 new IPOs lined up for this week, with 8 new listings. Mahima joins us with the details on what to watch out for in the IPO space this week. Mahima.
Hi, Pallavi. So as you rightly mentioned, we have 11 new IPOs open for subscription, both from main board and SME space, and 8 new listings. Now, from the main board space, the biggest IPO to watch out for this week will absolutely be Bajaj Housing Finance. While the IPO size is 6,560 crores, the price band is set between 66 to 70, and the subscription opens today, that is 9th of September, and ends on 11th of September. The lot size is 214, which means that the minimum investment of one lot is roughly 14,980 rupees. rupees. Now, till now, as of right now, the IPOs has already been subscribed for 0.9 times. Moving on, there's PN Gadgil Jewellers, where the IPO size is roughly 1100 odd crores. The price band is set between 456 to 480, and the subscription starts on 10th of September. And will end on 12th of September. The lot size is 31, so minimum investment for one lot size is 14,880. Next are the two IPOs that will open for subscription, that have in fact opened for subscription today, and both are from the auto space. The first one is Cross Limited, where the IPO size is 500 crore. The price band is 228 to 240. The subscription will close on 11th of September. The lot size is 62, and so the minimum investment for one lot size is 14,880. And the next one is Tall Tires, where the IPO size is roughly 230 crores, the price band 215 to 226, and the lot size is 66, so minimum investment is roughly 14,916. Two listings on the main board space. The first one has already been listed today, Gala Precision Engineering, which did get listed on a 43% premium, and it was subscribed for roughly 201 times, which is the second most subscribed IPO so far. And we also have Sri Tirupati Balaji Agro Trading Company, which will get listed on 12th of September. It's the last day for subscribing this IPO today, and it will get listed on 12th of September, and it has been subscribed for over 18 times on its day 2. So these are some of the IPOs which will be on the watch out for this week.
You continue to bring more on that, but thanks a lot for that, Mahima. Now, cash-strapped SpiceJet has come up with a financial rescue plan. Carlyle Aviation will convert part of its debt into equity and will get a 4.1% stake on a fully diluted basis. Aditya joins us with the details on this one. Aditya.
Yeah, so basically SpiceJet's financial troubles have taken the center stage in the aviation space right now, and the existing lender, Carlyle Aviation, has come for its rescue. Carlyle Aviation is basically converting its part of debt into equity, and this part of conversion will result into the reduction of promoter stake in the SpiceJet. SpiceJet's promoter stake from 47% will come down to 45%, and in turn Carlyle Aviation will also get nearly 4% stake in the airline right now. So what basically is going to happen after this restructuring is that SpiceJet is going to get around 336 crores from Carlyle Aviation, and the current debt, which is at 4,300 crore, will be reduced by the same amount. The airline is also looking forward to raise money from QIP and warrant issue to promoters. This money is going to be what the airline is telling right now. This amount is going to be somewhere close to 3,200 crores. So all in all, SpiceJet is making all the attempts to come out of the financial turbulence it's facing right now, and the issue is not so small that it's not impacting the customers as well, because customers are continuously being impacted and they are denied boarding at several airports, which has been a serious trouble in the past few months, and Aviation Minister has also spoken about it. So let's listen in what Aviation Minister has to say on this.
स्पाइसजेट को हम देख रहे हैं अपनी तरफ से भी, जो भी ये छोटे छोटे इश्यूज हो रहे हैं उनको भी हम सर्कुलर दे रहे हैं कि उसको ठीक करना चाहिए जल्दी से जल्दी जितना हो सके। तो हम भी कॉपरेट कर रहे हैं, क्योंकि हमें भी ये जिस तरह से डिमांड है अपने देश में, हमें भी ज़्यादा एयरलाइंस को काम करने की ज़रूरत है। तो उस हिसाब से हम बैलेंस करते हुए चल रहे हैं कि जो समस्याएँ हैं उनको भी ठीक करें और जो एयरलाइंस है वो भी ठीक तरह चले।
Right, and the 54th GST meeting is currently underway. The agenda of the meeting was to discuss reducing GST on health and life insurance, reviewing revenue from online gaming, and more such things. The outcome is expected soon. My colleague Sesha Sen joins us with the agenda of the meeting. Sesha.
Right, so we are here at the Sushma Swaraj Bhavan, and the 54th GST Council meeting is underway. But as we wait for the meeting to conclude, let me run you through some of the agendas. So firstly, the primary item on the agenda is the potential reduction of GST on health and life insurance premiums, which is currently taxed at 18%. Now, the Council will explore options to either lower these rates or exempt specific categories such as senior citizens. The Fitment Committee is expected to present its findings on the impact of GST on health and life insurance premiums. Notably, as of FY24, health insurance premiums generated significant revenue of roughly 8,200 crore. Now, this highlights the financial implications of any proposed changes. The meeting, which also includes participation from state finance ministers and tax officials, will also address other pressing issues such as rate rationalization and also an analysis of revenues from online gaming will be presented before the GST Council. Besides, the Council will also review taxation on services by foreign airlines that have offices set up in India. Moreover, opposition leaders, including Delhi Finance Minister Atishi, has also said that the government will vehemently oppose any proposal to tax online payments of up to 2,000 rupees via gateways. Now, this is another critical item on the agenda because this could potentially, increase the cost of digital transactions for consumers and businesses. So, all eyes on the outcome of the meeting. Back to you.
Absolutely, we will continue to get more on that. But moving on, the Supreme Court has resumed hearing in the RG car rape and murder case as protests continue to rock Kolkata. But even globally, a bunch comprising Chief Justice D.Y. Chandrachud and Justice G.B. Pardiwala and Manoj Mishra is hearing a suo motu case in the matter. My colleague Varun joins us with the updates from the Apex Court. Varun.
Yeah, hi, thanks. So that's right, the hearing in the RG car rape and murder case has resumed today after the court had given some time to the CBI and the state of West Bengal to file their status reports in the matter. Now, the central agency and the state have submitted their reports before the court, and the duo was again seen to be at loggerheads with each other. A lot of back and forth was witnessed as the court tried to inquire into certain aspects such as the exact time of when the case of unnatural death was registered and when the exact time pertaining to when the search and seizure operation was carried out on site. It was flagged off that the post-mortem report was botched as it didn't have the exact details pertaining to the time of death, and the body of the victim was not preserved properly after the death took place. Even the court said that one thing was clear, that the FIR was registered nearly 14 hours after the death took place. Now, the court also inquired into the measures that the state of West Bengal has taken to ensure the safety of doctors on the ground and has sought the state's reply within a week's time. Now, adjourning the case for the day, the CJI has said that CBI's investigation is in progress in the case and it does not want to comment on it in open court. Therefore, another week has been granted to the CBI to submit a status report, and the court will continue hearing the case next on Tuesday, that is September 17th.
All right, thanks a lot for that, Varun. Now, India has reported its first suspected case of monkeypox. The Union Health Ministry, in a statement, said that a young male patient who recently travelled from a country currently experiencing Mpox transmission has been identified as a suspect case of Mpox in the country. Moving on, according to a report by Informa Connect Academy, billionaires Elon Musk and Gautam Adani are poised to make history as the world's first two trillionaires. Elon Musk, the CEO of Tesla, SpaceX and X, is currently the richest person in the world with a net worth of $251 billion. Musk's wealth has been growing at an extraordinary rate of 110%. That's on an annual basis. And if this growth rate continues, he is projected to become the world's first trillionaire by 2027. Now, on the other hand, Gautam Adani, founder of the Adani Groups, is currently estimated to stand at about $84 billion of net worth. This makes him the second richest person in the country. With an average annual growth rate of 123% in his wealth, Adani can potentially become a trillionaire by 2028. That's all we have on the show for now, but do stay tuned to NDTV Profit. We leave you with visuals of the Ganpati celebrations that continue to take place across various parts of Maharashtra and several parts of the country. Home Minister Amit Shah also offered prayers at Lal Bagh Cha Raja.
The 18th of September. will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay in.
Hello and welcome to the Mutual Fund Show. I'm Neeraj Shah. The next 20-25 minutes we'll talk about all about mutual funds, of course, but what kind of funds in a market scenario which is increasingly turning a bit choppy, uncertain at very high valuations. So the question that we asked to our guest today, and our guests today are Juzair Gabajiwala, Director of Ventura Securities, and Nisreen Mamaji, Founder and CEO of Moneyworks Financial Services. Both of you, thank you so much for joining in. And the question that I have at the top of my mind today is that for an investor who is not an out-and-out equities person, let's say she's investing in equity markets, but she's also a bit conservative and she doesn't have a very large risk appetite. Should that person choose hybrid funds as an SIP or a lump sum at the current juncture if the person is investing for a time period between 1 and 3 years? I think that's the principal question, because I'm sure this is the case for a lot of people who are right now getting a bit nervous with the market valuations and thinking, how do I stick to my investing policy of an SIP, at the same time mitigate the little bit of a risk? So Nisreen, I'll start with you. Are hybrid funds a good option for something like this or not really?
No, so I think for a risk-averse investor who also wants risk-adjusted returns, because if you go for a 100% debt fund, then obviously you will not be meeting inflation and you will not be making the desired return. So therefore, I think that the option which is called the equity savings fund in the dynamic asset allocation category or in the balance category with a minimal equity allocation. So ICICI Prudential Equity Savings Fund has currently got an equity allocation of about 17%. The rest is into arbitrage. In order to qualify as an equity fund, the entire equity allocation has to be 65%, and the rest is into bonds and debt. So, for a conservative investor, I think a 17% equity allocation into long stocks would make, excellent sense, because they would definitely meet the expected return and, also meet inflation standards. Another option is HDFC Equity Savings, where currently the equity option allocation is about 33%. So you have the options of both. For a risk-averse investor, completely risk-averse, ICICI would be a good option. And for somebody who wants a slightly more equity allocation, you can go in for HDFC. Balanced advantage funds also would make sense for a risk-averse investor, but your equity allocation would be a little higher. So for example, if you go for Parak Parik, that's a conservative hybrid fund, and the equity allocation is about 16%. But because it comes in the debt category, your taxation would be according to the debt, funds. But you can also go in for Tata Balance Advantage Fund, where currently the equity allocation is 47.5%, or HDFC Balance Advantage Fund, which is about 51.4%. So depending on your own, risk appetite, you can take various levels of equity allocation, even in the dynamic asset allocation space. So equity savings as a category and balance advantage as a category makes excellent sense for a risk-averse investor. If you want to increase your equity allocation, you can go, for a balanced fund, which is 65% equity and 35% debt. So there's a range of products here that will definitely meet your, risk tolerance and as well as give you risk-adjusted returns.
Okay. Well, in some sense, Nisreen has made the rest of the show pointless, because she's given just the right answer that you would actually need. But Nisreen, thank you so much. Yeah, this is great to know. Viewers, what I'm going to do is, now usually the climax happens at the end in a movie, and you set the stage for the climax. We've had a bit of a climax right now. Now we're going to go back. So let's say we've done the movie. Now we're going to go to a prequel, if you will, and try and unwrap this as well. But let me first take an initial comment from Juzair Gabajiwala as well. Juzair, and viewers, what we're going to do is, after Juzair's answer, I'm going to try and tell you the different kinds of hybrid funds available and what kind of hybrid funds might be suitable for what kind of an investor. We'll try and probe that a little bit as well. But Juzair, initial thoughts from you. The same conditions. She's a risk-averse investor, wants to invest for 1 to 3 years. Are hybrid funds a good alternative?
So I think, as you have said, Nisreen has already covered up the entire thing. So it doesn't give much scope for me to add much, because
yes, Juzair, there is. Looking forward.
So my take is that I think the most important aspect which any investor should look at would be is that he has to beat inflation, and not only beat inflation but consider taxation as well, right? So I think a bank FD generally does not give that, and that's one of the reasons why we have been seeing many of those banks have been clamoring about that they are losing deposits. So having said that, equity savings as a category does resonate for an investor who doesn't want to take too much of a risk. Now the only question would be is that when you are looking at a time horizon of 1 to 3 years, and you also talked about that whether the person should do it as a one-time investment or whether he should do it as an SIP. Now, ideally, it would make more sense to put it more as a lump sum, For the simple reason is that if your time horizon is 3 years, and if you start doing an SIP, your average holding will be, just around 18 months. Okay. So, and if your time horizon becomes 2 years, then your average holding is just around a year. So, I think putting more as a lump sum would make more sense. And specifically, equity savings have the benefit of the advantage of the having equity taxation with a 1 year holding. Some of the multi-assets can also, do well, specifically like how we have White Oak multi-asset and Edelweiss, where equity exposure is fairly negligible. Plus, you also have, gold also coming in as a play over there. So, only thing over there, the holding period should be 2 years to, qualify for long term. So, I think all in all, multi-asset and specifically equity savings. Only one thing is that a person will have to be, very mindful about, because the asset can keep on undergoing a change. The equity component can undergo a change. So an investor will also always have to be mindful about what is the disclosure which is made and what is the equity allocation. In fact, one more option which a guy can consider is also, like Quant has a dynamic asset allocation where he can actually go up to zero if the market become extremely expensive. So you need to start looking at what each fund has as a part of the DNA. So, that is what my take would be in terms of the investment strategy.
Okay. No, okay, so we've gotten the main answers from both our guests. Let's now try and make it a very basic conversation for me and you, my viewer, to understand these different kind of funds. So, okay, Nisreen, I'll start with you. Correct me on this. Or Juzair, I'll start with you on this. Correct me on this, okay? But the types of hybrid funds available. So, equity savings, conservative and aggressive hybrid. Do multi-asset class funds also qualify as hybrid? I would reckon they do, but please correct me if I'm wrong. Some bit of dynamic asset allocation and maybe even arbitrage funds. Would this be the gamut of of hybrid categories available in India currently, or are there more?
No, I think, yeah, these are the ones which would, in fact, I would not call arbitrage, purely as a hybrid. I mean, I would actually compare more with more like a short-term debt fund or a slightly longer duration liquid fund. Right. So apart from that, I would actually look at equity savings, conservative hybrid, aggressive hybrid, and multi-asset. And in fact, to a certain extent, some of the asset allocator funds will also come in also as a part of the strategy in terms of hybrid as a category.
Got it. Now, Juzair, for somebody who is risk averse, but as Nisreen described it beautifully in her answer, but wanting a slightly better than what debt fund return gives, because frankly, getting the debt fund return to an extent also for a young investor is pointless because it doesn't quite beat inflation, right? Especially inflation as it picks up. So my question is, within this set of hybrid funds, which are the ones which maybe with a slightly higher risk profile give you the best returns?
So I think with a slightly higher, if you actually go to see, would be your balance advantage funds are the ones which could give you a higher return, and even it could be to a certain extent even multi-asset. In fact, some of the multi-asset funds have actually outperformed even quite a few of the equity funds as well. So, in fact, that as a category is also a good category, specifically if in the today's time when the markets are slightly on the upper end, and since gold is also a good combination over there, so minimum 10% allocation is given, has to be in multi-asset into precious metals. So gold and silver by default 10% lands up being as an allocation. And like specifically we like the White Oak type of fund because his allocation to gold is nearly around 20% plus the equity exposure. He's also be able to add in international equity over there. And with even the definition of in income tax undergoing a change now, specifically from 1st April 25, where it only requires more than 65% allocation towards debt for it to be classified as a debt fund. Otherwise, with a 2-year holding time horizon, everything has become equal in terms of even the tax rate. Like you still will pay 12.5%. Now, whether you hold equity, it is 1 year 12.5%, and whether if you hold a multi-asset like a White Oak, it will be 2 years with 12.5%. So tax rate wise, you will become more or less neutral.
Okay, okay. Some examples out there too. Thank you, Juzair, for that. Nisreen, for somebody toying between equity savings funds versus other categories, I would love for you to tell us what are equity savings funds and why would they be the right fit for somebody who wants to earn that slightly better than a debt return profile with a lower risk appetite?
Sure. So basically, an equity savings fund would be termed as equity for taxation purposes. Therefore, the entire asset allocation towards equity, whether it is long or whether it is arbitrage, should be 65%. So for somebody who wants to have a lower, risk appetite and who wants a lower exposure towards equities, in the equity savings category itself, they can go in for something like ICICI Prudential or PGIM, which has about 11 to 15% of equity, and the rest, in arbitrage to complete the 65% quota, and the balance 35% would be in debt. So equity savings itself, just by the name, is basically, there are two choices in the dynamic asset allocation category. There's BAF, which follows a similar strategy, which is balance advantage fund, and equity savings also, which follows the same strategy. Equity savings would typically have a lower asset allocation. So before you invest into either equity savings or a balance advantage, it's important to check what is the exact equity allocation that you are going in for. If you wish to take a higher equity exposure, then you should know whether you want to take 30%, 40% or higher. So the risk basically is for you to be very clear, not by the name itself, but by checking the exact proportion or allocation towards equity and towards arbitrage in the equity savings or the balance advantage category. And there you will be able to match your own risk tolerance with the fund itself. So if you are expecting to be having less volatility, then definitely equity savings fund would be a good option for you. 15% to 11% would be ICICI Prudential equity savings or PGIM also. If you wish to go in for a slightly higher asset allocation, then you can go in for a BAF, either Tata or HDFC, which has in the range of about 50% plus towards equity and 15% towards arbitrage and the rest in bonds. So the hybrid as a category, you can go in for either conservative or aggressive. Conservative hybrid would have a higher debt allocation, less of an equity allocation, at least 65% in debt, while aggressive hybrid combination would be 65% in equity and 35% in debt. So here in the hybrid category, you may not have much allocation towards arbitrage. It could be directly long equity and debt. Right. So basically, it's important for the investor to check the allocations. Yeah.
Got it. Nisreen, what kind of returns should one anticipate? Let's say if somebody invests in these equity savings funds, the two that you recommended, or some others as well, what are the average kind of returns that somebody should anticipate?
So if you have a lower equity allocation, like I said, the Prudential or PGIM, you should expect in the range of 9 to 10%. Okay. Of course, they have returned higher, depending on the market in the last 3 years. But as far as expectation goes and as far as prospective returns go, you should be looking at about 9% averagely. I think that would be a good way to start. And the higher the equity allocation, higher the volatility, of course, and higher the return expectation. So that can go up to about 11 to 12% if you're going in for a balance advantage fund with about 50% direct equity allocation.
Got it. Juzair, I have one more question for you, and then we'll try and take a couple of queries. In fact, there are 2 or 3. There are maybe actually multiple ones, but we'll probably try and take 2 or 3. But what kind of investor should choose the aggressive hybrid category? What are these? What kind of investor should choose these? And what are the kind of returns that one should anticipate?
So it's basically like we normally, investors who are looking at, more than, equity as an investment. And, when they say that the time horizon, we normally tell them 5 years plus, right? And if the time horizon is not 5 years and they are looking at, somewhere around 3 years plus, and they are not very sure after 3 years whether they would need the money or not need the money, right? So then for them, aggressive hybrid makes more sense because he has a 3-year plus time horizon. And specifically in the current market environment, even for any investor coming for equity, we still tend to suggest more of a aggressive hybrid or multi-asset, since specifically when the valuations are high. So because most of the investors are expecting that whatever the returns are there in the past, the same thing will get carried forward in the future. And I think we may look at a reversal back to the mean. We are seeing aggressive hybrids giving nearly 18-19% return, whereas long-term average equity return itself we talk about 15%. So I think, as we can see itself, type of equity and debt is giving around 3 years aggregating 22%. Now those are the type of returns which one cannot expect going forward. So I think expectations will have to be set lower, and that's why aggressive hybrid today looks much better for even an investor who's looking at pure equity as an investment.
Jose, did I miss the fund names or any recommendations that Ventura Securities might have in this category?
So we like HDFC Balance Advantage. Because we have seen that the way the equity allocation is going, so now they have been high around a year back, and now they have come down in the equity allocation. So that looks pretty good. Specifically, it resonates with the way we are also looking at the market. That with a lower equity exposure, if you can get a better alpha generation, then it's quite good. ICICI Prudential equity and debt is also doing pretty well. And the other one which we like is also quant dynamic asset allocation. Simply from the point of view that the risk adjustment management is done very aggressively at quant.
Okay, so a few names. Quant Dynamic Asset Allocation Fund also features in that list from Juzair Gabajiwala. So on the aggressive hybrid side, and viewers, I hope you because we got the main answer at the start. I was just trying to unpack what each of these categories might be. So a very basic conversation, but something that might help you understand what are the kind of returns anticipated from each of these categories. Remember, relative to pure equity funds, this would be a lot safer in terms of if the markets were to correct, so on and so forth. But the returns as well relative to pure equity funds would be a lot lower. But they are meant for that kind of an investor or that kind of a time wherein maybe returns are not very predictable and you need some safety as well of debt instruments, which probably the hybrid funds would provide. Just one quick 30-second answer each from both of you before we take in the queries. Nisreen, to you first. Would you at the current juncture have a preference for hybrid versus pure equity funds? 30-second answer.
I think I would, because in times of volatility, I would definitely recommend dynamic asset allocation, so that the risk is managed.
Okay, Juzair, would your view be the same? It could be different, of course.
No, absolutely. What she said is absolutely right. I would rather, in fact, I would even look at multi-asset because I like precious metals also as a part. So there by default I get a 10% allocation plus equity. So multi-asset is an aggressive hybrid is the way for me.
Fair call. So I'm okay. So viewers, both our guests, experts, look at mutual funds and investing day in, day out, are now talking about putting in your incremental money at the current juncture into maybe hybrid funds as opposed to pure play equity funds because of a variety of reasons. Now, if you are a very high risk investor, you may choose to ignore this. You may sit with maybe a year of lower NAVs as well, if indeed the markets were to correct, if you really have a long-term horizon. I'm guessing, I'm not going to ask them, but I'm guessing that if I give them a 7-year, 10-year horizon, they might tell me that in which case an SIP into pure play equity funds is also okay. But for now, because I've given them the time frame of 1 to 3 years, they're choosing hybrid funds over pure play equity funds at the current juncture. It may change with the market texture in the next few months. But I have time for 2 queries, and I'm going to shift to that. Uday Pethe, age 37 years, has this query. Juzair, I'll start with you on this. Uday says, I'm a new investor and want to invest 15,000 rupees per month. My target is 1 crore. How much time will it take, and what are some of the funds that I can invest in?
Okay, so it's a the general thumb rule. If we follow a 15% return, right? So it takes 15 years at 15,000 to have a target of 1 crore, right? And if you, I think since his horizon, I'm assuming that it will be longer because he would then invest for at least a 15-year time horizon. So he can look at equity funds as a part of his target. And the best bet would be is have one large cap fund, one mid cap fund, and one small cap. So I think that's what he can do. So my preference would be is that one, he can look at Nippon large cap, he can look at Kotak Emerging for mid cap, and Bandhan small cap fund.
Okay, can we, if we have those fund names, if we can just put it out for Uday to know. Juzair, could you just please repeat the fund names as well? And should the allocation in these funds be equal or should they be varied?
No, it can be equal. I mean, since he's got a 15-year time horizon, so it beats our benchmark of everything in terms of holding even a small cap for a longer time duration. So I have recommended is Nippon large cap fund, Kotak Emerging for mid cap, and Bandhan small cap. So he will basically be invested across the gamut of the market.
Got it. Now, Uday, I hope you got your answer because I certainly did if I was you. I would, however, recommend you, Uday, if you are not completely sure of where to go in, it's always good to come to us. We try and give you the answers. It's also good to have somebody hand-holding you through this journey as well. Please keep that in mind if you're completely unsure of what to do. However, Jose's answer should hold you in good stead if you are a systematic investor investing for the really long term, and don't get flustered if returns change a little bit here and there in intermediate periods of market correction. Nisreen, a question coming in from Tanvi Bide. Tanvi is aged 29 years. Tanvi asks, what are some of the best international funds one can invest in? She says, I'm seeking more exposure to foreign stocks such as Nvidia and other semiconductor stocks. Do you have a view here, Nisreen?
Definitely. So, definitely, Tanvi, you can go in for international funds. Typically, we suggest that your entire portfolio should be, skewed 10 to 15% towards international funds. But since you specifically asked about this, I will answer you. So, the top funds that you could be investing is Mirae Asset, NYSE, FANG, and ETF fund of funds, Kotak Nasdaq 100 fund of funds, Bandhan US Equity fund of funds, and Motilal Oswal S&P 500 index fund. Now, the stocks that you would get amongst these four mutual funds would be Microsoft about 9.4%, Nvidia, which you specifically asked for, 9.37%, Amazon 7%, Meta Platforms 5.3%, Eli Lilly 5.17%, Apple 4.85%, Alphabet 4.78%, and there's another semiconductor stock, Broadcom, also about 3.49%. Netflix 2.88% and MasterCard about 2.47%. So we've tried to give you as much of semiconductor as possible. I'll repeat the name of the funds again. Mirae Asset, NYSE, FANG plus ETF fund of funds, Kotak Nasdaq 100 fund of funds, Bandhan US Equity fund of funds, Motilal Oswal S&P 500 index fund.
And Nisreen, I presume that she should invest in all of these funds and the allocation should be equal?
Yes.
Okay.
Invest in all these funds equally. And that's how we've I've given you the semiconductor funds that you specifically asked for, the totals of all that, as well as Amazon, Netflix, Microsoft, etc.
So helpful. It's been great talking to both of you today because I understood so much about hybrid funds, and I'm sure our viewers who had queries or may have wanted to know where to invest have gotten a direction as well. Viewers, I still urge you, we get the best guests on the shows, but if you are unsure about where to invest in, please do consult a financial advisor as well. But Nisreen, Juzair, thank you so much, both of you, for joining us and giving us your views. Really appreciate your time.
Thank you, Neeraj, for inviting me. It's a real pleasure. Thank you.
Yeah, most certainly. The pleasure was entirely ours. And viewers, that's all that we have on this leg of the Mutual Fund Show. Stay tuned to NDTV Profit.
फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है। टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग। इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter. The Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Hello and welcome back to NDTV Profit. You're watching Large Trades, a show where we talk about all kinds of bulk and block deals and market-moving stocks and sectors. I'm your host, Mihika Barve. But let's just take a quick look at how markets are faring right now. Well, we have the benchmark, the Nifty 50, up about 0.1%. It's been a choppy day of trade for the benchmark. When you look at the top gainers, we have HUL, and this is on the back of the board, considering on what the way forward is in terms of its ice cream business. We also have some gains in terms of ICICI Bank, ITC and Shriram Finance, all up 1.5% in trade currently. When you look at the stocks that aren't doing so well, we have ONGC and Hindalco and NTPC, a lot of these energy and metal counters, and these are the sectors that aren't doing so well in today's day of trade either. We have ONGC down about 4% in trade right now. When we look at the broader markets, they are underperforming the benchmark right now. We have the Midcap 150, which is fairly flat right now, but we have the small cap 250 that's over 1% down in trade. when you look at the counters that are, leading to the negative bias on the broader markets, we have Jupiter Wagons down about almost 7% in trade right now, as well as counters like an EIL, Motilal Oswal, and Raymond all down 4% in trade today. You look at the sectoral indices and you look at the market heat map for those in terms of the sectors that are doing well. We have the Nifty FMCG, it's the top gainer. There you go, have it on your screen. It's up 1.8% in trade today. Some strength in the Nifty Private Bank as well as the Nifty Bank and the Nifty Finance sectors. So you have that broader theme that's doing well in today's day of trade. But counters that aren't doing so well, like I pointed out before, it's the oil and gas and energy segments, mostly dragged down by ONGC, which is down 4% in trade today. But this was on the back of the company actually awarding orders worth 6,000 crores to 3 various companies. I mean, you pull out the stocks that were buzzing on the back of that. If you could pull out Deep Industries, it's hit an upper circuit of 20% after receiving 1,400 crore order. We also have stocks like RBN Infracom as well as Mazgon Docs. We had RBN Infracom, which was doing well last time I checked. When Mazgon Docs, it did open 2% higher, but now it's shifted into the red and it's down 1.5% lower. Well, we now go on to the stocks that we will be addressing in trade today. We have a host of pharma stocks like Granules and Albumic Pharma, as well as chemical counter like Gujarat Alkalis, and counters like Hikal and Ahluwalia contracts. But the first stock in focus, we have La Opala. Now, the stock's been buzzing in trade today. It's up 7% right now. And we have Mahima bringing us some key details on what could be moving the stock. Mahima.
Absolutely, Mika. So the stock has been buzzing in terms of high volumes. Now the volumes are roughly 15 times its 30-day average, which is not ordinary for a stock like La Opala. In terms of the stock performance today, it did touch an intraday high of 7.3% and currently also trading at a day's high. Now in terms of what the company does, well, the company is in glassware, opal glass technology and crystal glass technology as well. In terms of Q1 FY25 performance, well, the revenue was down roughly 16%, EBITDA was down 24%. Margins did take a hit from that 41% mark to 36.6% mark, and net profit was roughly down 18%. So Q1 has not fared very well for the company. Well, in terms of how the company has been a strong dividend payout company. In terms of FY22, it paid roughly 2.3 rupees per share of dividend. However, this increased to rupees 10 in FY24. In terms of capacity, well, the company has 3 manufacturing facilities which are operational right now, where the metric ton per annum capacity stands at 32,000. Recently, they've suspended a 4,000 metric ton per annum facility. The reasons for the suspension were low efficiency and aging of infrastructure in that particular plant. Now, in terms of distributors, well, FY22 to 23 had roughly 170 distributors, which have now doubled in FY24 by 235. In terms of India dealers, they had roughly 17,000 odd dealers in FY23, which increased to 22,000 dealers in FY24. And in terms of large key format stores that they supply to include Reliance, DMart, Walmart, Spencer's, More and Star Bazaar. In terms of stock performance, the stock has been under pressure YTD. It's down around 1.3%. 1 month it's been up around 15% and 6 months it's been up around 11%. So these are the overall reasons of why the stock is buzzing in trade today.
Thank you, Mahima, for giving us those details. Up first we have the pharma sector in focus. Now, 2 counters that are buzzing in trade today, but opposite reactions in terms of stock performance. We have Granules India, which is under pressure, down about 2% in trade, whereas we have Alembic Pharma on the other hand, which is up 5% in trade today, and we have Varsha bringing us the key details on why the stocks are buzzing.
Well, thanks, Mika, for that. Let's start with Alembic Pharmaceuticals, wherein the stock is buzzing on the back of volume, which is 4x of its 30-day average. Company has seen an intraday high of almost 6%. Now, 2 days back, there was a news wherein Alembic had received approval from US FDA for a drug which is used to treat infection from pork tapeworms. If you see the Q1 FY25 highlights, their India business grew 9%. There was strong growth in specialties therapies like oncology, gastro and all. Their animal healthcare segment outperformed with 23% growth, driven by robust portfolio of their strong brands. And also new product launches contributed to their growth. Their US business grew 18% with 2 launches during the quarter and expectation of 10 more in coming quarters. While their API business declined by 15% due to the high base in last year, that is Q1 FY24. If you see the future plans, so R&D spending, they are expecting a rise in R&D spending of around 550 crores by year end, and EBITDA margins are expected in the range of 18 to 20% in next 2 to 3 years. And that animal business is expected to grow based on new divisions and products, and they are expected to launch 10 new products in coming future. Then next we have granules, wherein we've seen an intraday low of around 4.6%. Now this is on the back of company getting 6 observations from US FDA for their Hyderabad facility. The inspection was from August 26 to September 6. This facility is actually crucial for them and contributes much more major revenue when it comes to FY24, and they manufacture finished doses and pharmaceutical intermediates from this facility, and this facility supports global operation for the company. We don't have the percentage revenue contribution, but we do have the capacity, wherein they have 23,200 tons per annum of capacity when it comes to intermediates, and 26.8 billion units of capacity when it comes to finished goods.
Yes, thank you, Varsha. But stay with us. But before I go on to address the chemical counter that we have on our radar, I think it's key to address Bajaj Housing Finance, and the IPO opened today, and as per data, it has been fully subscribed as of 2 p.m. The company does plan to raise a total of 6,560 crore rupees, and as per the data you have flashing on your screen, QIB subscription was 0.02 times. Well, we had NII subscription that is over 1.1 times, and the IPO has been fully subscribed. And as we get on more, and we will get you more details as we get them on by. But the next stock that we do have in focus is Gujarat Alkalis. Now the stock has been buzzing in trade on the back of larger volumes, and it's up 4% in trade right now. We have Varsha joining us again to give us the key details on this counter.
Well, if you see, Mika, the intraday high for this stock is around 5.8% and backed by volumes of 12x of its 30-day average. Now, let's see what this company does. So, this company is actually third largest caustic soda producer in India with an installed capacity of 2,230 metric tons per day. And they do have JV with Nalco for caustic soda project with a capacity of almost 800 metric tons per day. They do have a comfortable capital structure, so consolidated overall gearing, if you see, it's almost at 0.38x. Now, there are some key weaknesses when it comes to this company, although the stock is buzzing, but we do need to address the key weakness. One is, if you see that their profitability in FY24, that was deteriorating because of the operating income decline due to the weak caustic soda market, and if you see their FY24 EBITDA margin was at around 3.62%. Their debt coverage indicators were weakened, but it is expected to improve in Q1 FY25, and there was weak performance when it comes to GNAL because of the JV with Nalco faced delays and operational challenges, and there were significant losses in FY23 and 24 due to chlorine disposal issues and low caustic soda prices. They are also susceptible to the gas and power price fluctuations. Their power cost constitutes almost 33 to 34%, and they also face competition from cheaper imports, mainly from Japan and China.
Yes. Thank you so much, Varsha, for giving us all those details. The next stock that we have on our radar is Ahluwalia Contracts. Now, this is an engineering and construction company. It spared away its gains for the day, but it did reach an intraday high of 1,254.6 rupees. And we have Anushi joining us to, give us some more insight on the counter.
So Ahluwalia Contracts, as you've mentioned, is in higher focus today, and this is on the account of trading volumes which are taking place on this counter. Now, if you had to look at the volumes that traded at about almost 4 times its 30-day average, while the stock did see an intraday high of about almost 5.5%, but from there on it has pared those gains and it's currently trading flat at around 0.84%. If you look at the stock performance for the company in a month, it has remained under pressure. It was about 8% down, while over the 1 year period it has gained 69%. But onto the fundamental side of the business, if you look onto the outlook forward, so Q1, if you look at the margin, if you look at the EBITDA and the margins, they were weaker, so they expect this to continue in Q2 as well due to the monsoon impact which is going to take place as well. But moving on towards the whole FY25, they expect a double-digit margin profile for the company, while the revenue growth guidance is maintained in the range of 15 to 20%. Just coming back and briefing on the Q1 numbers over here, revenue had seen about a 20% growth, while margins margins moved downwards to about 6.6% as compared to 10.8%, and net profit also saw about a 38.5% of a decline. Order book of the company, if you have to look at as of June end, that stood at about 13,143 crore. The company expects an anticipated order inflow of about 2,500 to 3,500 crore for the year. And if you look at the overall order book of about 13,143 crore as mentioned, that is to be executed within the next 2.5 to 3 years as we go ahead. On to the just final piece of information, in this recent updates, the company also won a 350 crore of a project from Bharat Aluminium, and this was for building a housing complex in Chhattisgarh. So these are the fundamentals that are taking place in Ahluwalia contract for Q1. What was the update and what's the outlook going forward for the business as we move ahead?
Yes. Thank you, Anushi, for giving us all those details. The next stock that we have in focus is Hykel. Now, this is a company that partners with firms in the pharmaceutical, crop protection, as well as the specialty chemical industry. It's up 7% in trade right now. And the company does supply research services as well as active ingredients to customers. Now, in terms of its performance today, well, the stock was up over an intraday high of 10%, and the volumes over 12 times the 30-day average, and the stock has gained 27% year to date. While there was no key fundamental trigger, let me just go up on how the company has performed this year. Well, in terms of its Q1 performance, revenue and EBITDA were up 5 and 16% respectively on a year-on-year basis. Margins were up 140 basis points on a year-on-year basis at 14.3%, and net profit was down, however, 25% on a year-on-year basis. We talk about some of the key highlights. Well, they had increased volume demand from their existing as well as their new active ingredient API customers, and several of the CDMO project deliveries were actually pushed back because of certain customer requirements, and they aim to bring these deliveries back on the timeline of this year. In terms of the revenue breakup, well, the company earns 43.6% of its revenues from the crop protection segment and the balance 56% from the pharmaceuticals segments. And in both of these sub-segments, the CDMO projects account for majority of their revenues. They've also entered and are optimistic about the animal health business. They're now developing several multiple APIs, and these are progressing well. They also have a new multi-purpose plant operational with 5 products that have been validated, and they expect to be submitted for registration and later on commercialization very soon. And they're targeting a revenue of 300 and 400 crores from the segment itself in the next 3 to 4 years. In terms of the management guidance and the commentary, well, they do remain cautiously optimistic about their long-term growth. They've projected a 10 to 15% CAGR after their crop protection business gets normalized, which was affected in the years gone by. And they do expect to return to the historical EBITDA margins, which were around 18 to 20%. Do note that currently it's at 14.3%, but it has seen improvement. But up next, we have the World EV Day in focus, and that's what we're celebrating here at NDTV Profit. And on this occasion, we will get you some in-depth analysis of the sector. We have Puneet joining in to tell us what has the road been so far for the EVs and what lies next.
We have seen the EV market grow by roughly 3 times over the last 3 years, and it needs no stopping going forward as well. When you look at some of the segments that has catered to this particular strong growth has been led by the electric two-wheeler segment, and that has been one of the key positives as well, driven by the likes of Ola Electric, Bajaj Auto, as well as TVS now. Now, when you look at the company's sales in the past couple of years, that has been one of the strongest in the segment. Now, despite being coming at a very strong base of roughly 1.57 lakh units in the previous year, Ola Electric reported roughly 3 lakh units in the last year, growing at roughly 114%, while the likes of TVS Motors as well as Bajaj Auto and Ather Energy have maintained their market share as well. Now, someone like a Bajaj Auto, which has been a late entrant in the market, has seen its sales grow by roughly 3.5 times compared to FY23, and that's been one of the key positives as well. When you move on and look at what the market share would look like for companies like Ola as well as TVS, that's been one of the key positives as well, coming at roughly 35% for someone like a Ola Electric, and it's also grown from the 1/5 market that it captured in the previous year for the likes of TVS Motors as as well has captured 1/5 of the market by the end of FY24 to come at 19%. But someone like in Ather Energy also, while the market share hasn't improved in FY24, it has maintained its 11 to 12%. But this is slightly disappointing because the company's early foray into this segment, similar to what Ola did, but hasn't been able to capture the market meaningfully. Others such as Bajaj Auto also had carried forward their market share from FY23 to 24 as well. Now, what's interesting is that the FY25 picture paints a very different view. Now, when you look at Ola Electric, its sales have grown by roughly 67%, but look at Bajaj's growth as well, upwards of 200%, growing very strongly, and so does, Ather Energy, and dropping at 10% this particular time. Because of the strong growth of Bajaj, their market share has improved meaningfully as well. So Ola's loss is Bajaj Auto's gain. When you look at the market share picture from April to August of 2024, we've seen that, Ola's market share touched at 52% when the FAME 2 scheme ended, but it has, moderated and fallen to roughly around 31% by the end of August. But biggest gainer in this particular segment is Bajaj Auto, this particular blue line, growing from roughly 13% in April to 19% now, similar to the market share of someone like a TVS Motors at roughly 20%. Ather Energy, if you spot, they have their, maintained their market share on the 11 to 12%, but similar to a story that they would have wanted to capture a market a bit more higher now. Now, when you look at the electric four-wheeler segment, it is not as crowded or as competitive as the electric two-wheeler segment because there's one clear winner here, which is Tata Motors. They have roughly 70% market share in the electric segment, backed by the launches of something like a Nexon as well as the Punch. But competition from the likes of Mahindra and Mahindra also and Maruti expected to launch both in the last quarter of this fiscal year is going to be a key thing to watch out for. Finally, commercial vehicle makers, the EV bus segment is something that's, very interesting as well. We have legacy players like Ashok Leyland as well as Tata Motors and VECV, which have been competing in this market, but it has also a couple of new players in the market. Both are listed in the segment, both JBM as well as Electra Green Tech over the last couple of years have gained market share as well. So, there are certain factors to look at as well. The FAME 3 is going to be one of the key things to watch out for. The outlay is something, if it's similar to FAME 2 of 10,000 odd crores, and which segment get the most premise or the strength as well is going to be watch out for. So overall, pandemic has been really a boon for electric vehicle segment and personal mobility. What to watch out for next is going to be one of the key things to watch out for. Back to you.
Thank you, Puneet, for giving us all those details and an insight to how the EV theme has played in India. But we stick to the auto theme. Now, the 64th session of the Automobile Component Manufacturers Association of India, or ACMA, took place in Delhi today. Now, top voices from the industry spoke about the importance of EVs, fuel, and all things auto. And NDTV Profit's Tushar Deep Singh was at the event and spoke to the president, Sharda Suri Marwa, as well as Nirmal Minda of Uno Minda about the growth of auto components business. Do listen in.
Currently, the industry sits poised at 4.9-ish million passenger vehicles. This is scheduled to grow to about 7 million by 2030. I'm talking about domestic vehicle production. And as the auto component sector, we are gearing up to actually cater to that increased requirement. Our focus is on localization. Our focus is on skilling. That's where we are putting all our energy at the moment.
So you talked about the size of the auto industry. What is the size of the auto components industry over this period of time?
So the auto component industry currently is at about 74 billion. We've been given a task by the Honorable Minister to take it to about 200 billion by 2030, of which 100 billion should be domestic and 100 billion should be export. So I know it's an artist's task. I know it's an ambitious goal, but we will work towards it.
Something Mr. Pawan Goenka mentioned at the first session, yes. Those targets, given the CGR and the calculation that he mentioned, they look achievable?
Well, it's not appropriate for me to comment. His math did sound right, but I'll go by what we are working on currently, which is actually the automotive mission plan, which is actually being worked along with him. So, those numbers will come out and you will see.
You talked about making in India for India as well as for the world, making India as the manufacturing hub. Can you just talk to us about how your exports and your current exports business is placed at this point of time?
So exports for us at the auto component industry stands at about 21.2 billion. The rate of growth of export is higher than the rate of growth of import, so that's the good news. When we say make in India for India and the world, I think what we need to really focus on is on high levels of quality, high levels of skilling, and high levels of localization. We need to invest in R&D. We need to focus on design. And if we can put all this together, we're going to achieve what we set out to do.
The numbers you know well than that, but I would say today Dr. Goenka has given a mathematics of 1.6 trillion, this one, and even if we grow with the 11% growth, whereas we have grown 17% in the past. So I am particularly very bullish about the growth of the auto industry, and we will grow along with the auto industry. So about the auto industry, as you may know, that we are 24 vehicle car I'm talking about per 1,000, whereas the global average is 365. So we have if our GDP continue to grow, our per capita income continue to grow, our road infrastructure which is going very well, other infrastructure, we have no limit to grow to, today we are 4 million. I foresee something around 10 million in 8 to 10 years. Okay. And about the two-wheeler, we are around 18 million, 19 million. China is 10 million, a crore. Then we will also grow maybe single digit this year, maybe little less, but continuous future growth will be there. As far as auto component industry in Uno Minda, we have a target to grow 1.5x, then the industry grow. Okay. And fortunately, we are in two-wheeler, car as well as CV.
You have actually preempted my question. I was going to ask about Uno Minda, and how does Uno Minda fit in this growth phase, so to speak, of the Indian auto industry? You already talked about 1.5 times the industry. How will you achieve that, sir?
So we are multiple product line in the group. Almost more than 20 product line, and we are now foray in the two-wheeler EV, four-wheeler EV. So our kit value per car and per scooter and per CV is going to increase. Okay. So therefore, the value is something around 40,000 in the two-wheeler, 20,000, and it will go to 35,000 kit value as a two-wheeler. And similarly in the car from 35,000 to 70,000. Okay.
All right, let's now shift our focus to the primary market action. It's been a busy week. It's a busy week ahead for IPOs as investors gear up for 11 IPOs opening this week itself. One of them is PN Gadgil. Now, the 1,100 crore IPO opens tomorrow for subscription. And we spoke to the MD Saurabh Gadgil and Kiran Ferodia, ED and CFO, to know more about the company. Listen in as we wrap up this edition of Large Trades.
See, the primary reason for raising the entire money is growth. Today we are, like you rightly mentioned, one of the leading players. In fact, we are the second largest player in Maharashtra, behind Tanishq, and the plan is to add stores post the IPO and to be the largest in all counts, number of stores, profitability, and all parameters. So the reason for raising money primarily is to use it to expand the store network. A part of the money proceeds will be used to repay the bank debts to a tune of 300 crores, which will be again reused to take non-fund based limits, which are primarily metal loans. So we'll be having a dual strategy. One is to use the gold metal loans to reduce the interest cost to help us in hedging, and to expand the store network and to be the #1 player in the region of Maharashtra.
One of the key reasons many of the jewelers, are expanding is they want to come into state of Maharashtra and go to other states. We've seen a couple of southern-based companies who are doing the same thing, east-based companies looking at it. But you have a concentration strategy here, or to limit yourself in Maharashtra. Why is that?
So we're not saying we are limiting ourselves. What we're saying is that we want to be focused. First, exploit the potential fully, and then move ahead in the journey. So this journey by the company is to firstly capture the entire state of Maharashtra. This state is around $10 billion market for gems and jewelry. It's a fast-growing market. There are a lot of sectors and a lot of cities which we have still not really targeted, where we have the potential to further expand. Once that is done, we'll be looking at expanding in the neighboring states. So for a company, we have decided to follow the Peshwa route, as the Peshwas captured Maharashtra and then moved later on to Madhya Pradesh, Chhattisgarh, Jharkhand, UP, Bihar, Delhi. So that's the way the company would want to expand its footprints and be a leader in any state it goes into. So we don't want to be just present in a state or a city. We want to be a meaningful player there, a player who adds value, a player who's seen as a leader in that particular city, state, and then move ahead. So it's a very well-planned, well-thought-out strategy, and we believe that we want to focus on growth, profitability, and scalability at the same time together.
Is there a timeline to this strategy?
So the first 2 years, so FY25, FY26, will primarily be focusing on Maharashtra. That's when we feel that we'll be the leaders here in Maharashtra in number of stores and other parameters. The year 3 is when we look at the journey taking out of Maharashtra. So I think when you ask for a number, in 7 years, we should be in 3-4 states outside Maharashtra. And I think hopefully by then we should be a 100+ store company.
Kiran, financials, you're going to pay out 300 odd crores. This business requires a lot of working capital. Can you give us an idea of how your working capital cycle is?
So currently, PN Gadgil Jewellers right now is working in a consortium model, wherein SBI is my lead banker, and along with that we have HDFC, Saraswat Bank, Janta Sahkari Bank. So there are a couple of other banks also. So with the help of the IPO proceeds, we are planning to swap the current limit, which is in the fund-based to non-fund-based limit. As Saurabh mentioned you clearly that by utilizing this fund-based limit, shifting from fund-based to non-fund, we are able to save the finance cost, as well as on the other side, our hedging purpose can also be mitigated. So this is the dual benefit out of that. So we are utilizing 300 crore out of the IPO proceed for this purpose.
And you have, if I'm not wrong, roughly 350 odd crores of borrowings as we speak, right? As of July end.
Correct.
So what is the kind of differential that you say that when you move from fund to non-fund, what is the kind of gains that you have to the P&L?
So currently my cost of debt is around 9.5%. If I am going with the GML route, which is gold metal loan, so we already got the sanction from 4 to 5 banks. Only thing is we are waiting for this transaction to be complete. By executing this transaction from fund based to non-fund based, there are saving in the finance cost. My cost of debt will definitely reduce from 9.5% to it will be in the range of 6 to 6.5%. At the same time, we can utilize the finance cost as a tool for hedging. So by doing this, we can able to get benefit from both the sides.
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया. हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed.
Thanks for tuning in to India Market Close right here on NDTV Profit. And it's been, just pull up the markets, and it's actually been again a day wherein, much like last week, wherein the world markets were off and Indian markets did not fall, only to fall later on. I don't know if this will be the case, but we were talking about this today, that somehow the Nifty PCR and the quant indicators were suggesting that this might not be a bad idea to start accumulating. Now, again, these prophecies may fall flat on their face towards the end of the day, end of the week really, but so far so good. The mid-cap and the small-cap intraday should come up on your screen if we can very quickly before I talk about the Nifty 50, and then Samina will highlight what's happening at the broader end of the spectrum, of course. This is the mid-caps, and they've been quiet, 0.5% lower in fact for the mid-cap index. The small-cap index, 1% lower. So here, the music is not being great, but off the lows of the day, which is a good thing. Market breadth, I'm sure, is looking wobbly. Let me get the heat map up on the screen and show you what's happening at the large cap end of the market. So steady. ONGC has been sulking now for a while, ever since the crude price fall started, so shouldn't surprise. There's a bit of a pullback into commodity stocks in the session today. So you see a Hindalco, you see a Tata Steel out here. That is also looking weak. And select IT names, Tech Mahindra, Titan have looked weak. But a lot more green than what it was at the start of the trading day. Leading the charge is HUL, and we'll talk about it. A bit of a surprise really. I don't think too many people anticipated that the ice cream business potential demerger could really bring about such a trigger. I wonder, I'm guessing that's the reason. Shriram Finance on that UBS note, but it looks like, Samina, that select banks and select FMCG names are the ones which are driving the markets higher.
Yeah, in fact, if you looked at the futures and options space as well this morning, it was very clear that Bank Nifty could potentially see a pullback or a recovery. I don't know whether it's just ice cream, but you've also got ITC, so it's FMCG. Exactly what we talked about. It's not about defense, it's about defensives. And that, I think, is the theme on the street. Also with tech, what is standing out for me is the large cap names are getting hit bad. But there are a few. So look at a Wipro, right? Case in point, the stock has not participated in the recent rally. But this afternoon, it's not doing half as bad as the rest of the market. So stocks that have ran up have, of course, come off quite significantly. The ones that haven't participated, for some reason, are remaining or looking insulated for now. That's the IT index. Infi and TCS is slightly flat. The rest of the IT pack is trading much lower. Persistent also not doing too badly. When I say not too badly, it's trading flat. So let's not get ahead of ourselves. But it's not too bad an afternoon in terms of trade. We are largely outperforming our global peers, so that's a huge relief coming in for the trade. But like Neeraj said, we don't know how far this recovery rally is going to last. Our markets still look like they're on tender hooks, and we don't have any internal triggers that are going to be driving us. Everything that's happening on the street is going to be largely driven by macro cues. But the markets are positive, and I think for now we'll take heart from that. Bank Nifty as well, seeing a pretty sharp up move, 0.8%, outperforming the benchmark once again this afternoon. Broader market universe is looking a little iffy. The mid-cap index is doing badly, down 0.5%. Small cap and micro cap index taking into the chin, selling off far more than the large cap space this afternoon. In terms of stock movers, a bunch of counters that are moving. Some are very small, but the moves are very large, and I think that's what the market may want to do, is focus on these smaller names which are driven by news specific action. A couple of counters that caught my attention is Deep Industries. We highlighted this for you in the morning. The stock was one of the top ones to watch out for. The reason being, they bagged a massive order. Now, as compared to the size of this company, it's only about a 700 odd crore market cap company, but the order win has been so huge that the markets got excited. The stock is up 20% in trade. It also comes from ONGC, which I believe will improve the margins for Deep Industries. All that put together, the stock actually looks pretty good in trade. You've got Suzlon. The trigger on this one is that they've completed an acquisition. We don't have too many details of what this is going to mean, but the stock suddenly has slipped into negative territory. The last time I checked, it was trading with a 2 to 2.5% gain in trade. Well, a few more that we have on top of the list is SpiceJet. It seems like they could be coming up with a pretty fair deal with Carlyle Aviation to get them out of the financial mess that they are currently in. The stock is up 4% as we see it. Well, on the selling side, you also on the other gainers that you have are insurance. So anything that's got insurance play to it is looking good ahead of that much anticipated GST meeting outcome. SBI Life, General Insurance, if I can pull that one up, is one counter that's actually looking good. Well, along with that, PSUs are taking it to the chin and continue to do badly. Stocks like Hutco are down 30% from the record highs. PFC this afternoon is also seeing some weakness. Hutco is down another 1.5%. PFC is selling off. You've also got losses in Raymond Lifestyle, which listed last week. The stock has been hitting lower circuit. Ola Electric, the lock-in period has ended, so 4% of stocks are now liquid to be traded, which means that you will see pressure on the counter. That was the case early this morning. The stock getting bought into another 5% up move on Ola Electric. So it's an interesting market, Neeraj. Even though the lock-in for Ola is done, we thought it would open lower, and it did open lower, but the buying's come and the stocks are 5%.
Yeah, it's just very interesting as to what's happened to some of these individual pockets as well. But just the day of strength that we're seeing is what I want to ask Hemen Kapadia of KR Choksi as he joins on the technicals. Aditya Shah of Hercules Advisors joins on the fundamentals as well. Gentlemen, both of you, good afternoon. Thanks for joining in. Hemen, it's turning out to be a bit of a good afternoon if I look at the charts, because at least for the Nifty, I know the broader markets are correcting, but the index has been well behaved relative to what a Nikkei or some of the other Asian markets were doing.
A very good afternoon to you, Neeraj. Thank you for having me on the show. Always a pleasure. Totally agree with you. It's been a surprisingly pleasant good afternoon. Looking at the Dow Jones on Friday night, one would have thought that we are going to break 24,800 and go down the downs. But two things. 2400 has held as of now. I think it looks more of a recovery than a rally. The VIX, which was above 14 on Friday, Neeraj, has simmered down to 14.5. US, the VIX has gone to 22, which is obviously dangerous. And the biggest indication of all, if Hindustan Unilever gives a 4-year breakout, Neeraj, the market's not going to go up. FMCG defensive, then you have Dabur doing well, then you have Godrej Consumer doing well, Marico looking set for a breakout, Britannia doing. So if succinctly put, FMCG goes up, the market can't go up. So, but yes, as of now, things are fine. 24,800 has held. If 24,800 holds, then 25,100 is the level to get taken out of, which I don't think happens in a jiffy. But yes, I think near term, these are positives. 5,400 is the level to watch out for the Bank Nifty, which has held. So as of now, it's a decent recovery. Let's hope this recovery doesn't get sold into a couple of days down the line. And if today's lows hold for this week, Neeraj, that would be a sign of tremendous technical resilience, Neeraj.
We also have Aditya Shah joining in with a fundamental view on the markets. Aditya, the lack of local triggers and all eyes on what happens with the Fed rate cut is probably what's making our markets a little nervous and volatile. Are you using the current weakness as an opportunity to tactically add to the portfolio stocks that you've liked?
Definitely, Samina. Good afternoon. We've seen that the US markets are confused a little bit on what will happen on the rate cuts. The rate cuts may not be as strong as previously expected, and that's why the markets are really correcting. Similarly, in the Indian markets, we've seen that the index is holding up. However, the small and the mid caps are correcting down below. And I expect them to correct so that the froth does get a little bit cleared out within the small and the mid cap space. So corrections are opportunities to add. However, you should add in good quality companies within the banking and financial services, within the FMCG space, within the chemical space, within the pharma space. Be very selective and try to add companies where cash flows are really very strong. In a bull market, cash flows do really matter, because those companies where cash flows are not there, they will suffer eventually when there's a correction in the market.
I mean, in this market, I guess there's probably merit in talking stocks only. Anything that you like, anything that you've identified that's making a good, or giving an opportunity to make money? Hemen, any stock ideas from you this afternoon?
Oh, sorry. Yeah. Okay. My bad. I didn't realize it was for me. Yeah. A couple of stocks which look interesting, Samina. The first one is Dabur. Listed history shown we've never sustained above 660 on the monthly chart ever. This is going back 3.5 years. Now we are on the cusp of breaking out from here. So a buy on Dabur. One can buy Dabur at 655. Stop loss 635. Target is 695. It's a very modest target. I believe if it sustains above 660, which up till now it has shown all indications of, we are heading to 800 plus.
Second is a buy on Tata Elxsi. High beta, volatile stock. Slightly risky in the sense it's volatile, but yeah, it fell off a cliff from 9,100 to 7,500, is giving an upward bar reversal today. The correction in terms of time and price has happened in terms of retracement. Now we are setting the stage for a resumption of its up move. One can buy Tata Elxsi at 78.70, stop loss 76.70, target of 92.70. Longer term view would be 5 figures again, Samina.
Okay, well, that's the view on some ideas. It's interesting to see Tata Elxsi do well today. We had a conversation earlier in the day with Tata Tech as well. Sabina was in conversation with the MD. So some of these tech names standing out, but I'll tell you what's standing out, unfortunately for the wrong reasons. And that's oil upstream. They've been cracking. On the flip side, an oil upstream company like ONGC giving orders to companies, and those companies seem to be doing okay. So there is a large cap stock, there is a small cap stock, and there is an SME stock. All three have gotten orders from ONGC. Mika brings us those details. Mika, good afternoon.
Good afternoon, Neeraj. Yes, ONGC did kind of go on an order allocation spree over the weekend. Over 6,300 crores worth of orders allocated to 3 different companies. Up first, we have RBM Infracom. Now, the company received an order worth 3,498 crores from ONGC. Now, this has a validity period of 15 years. RBM Infracom is basically an engineering and infrastructure company and has expertise in oil and gas refineries, gas cracker plants, coal power plants, and petchem. We also had Masgao Docks. Now they got an award for 1,486 crores, and this is for a subsea pipeline replacement project that will be executed by Feb 2026. And then we had Deep Industries, which received an LOA of 1,400 crores for the production enhancement operation in the mature fields of ONGC's Rajamundry asset. Now the project duration is of 15 years, but Deep Industries expects this order to be completed in the next 10 years, and this is the company's biggest order till date, and new order doubles their order book to over 2,600 crores. Now, the nature of these orders kind of indicate on how ONGC is kind of enhancing its production. It has seen a decline from its mature fields, and the company has stated that they are implementing different initiatives to bring back some of the oil production in the mature fields back to the entire volume outlook, and as well as, you know, drilling and the new explorations faster.
That's Deep Industries for you. The stock is up 20%, and I think most of its investors would be laughing their way to the bank with that massive order win. So ONGC's brought smiles to a lot of faces this afternoon. In fact, we caught up with Rohan Shah, Group CFO of Deep Industries. He expects the company to pull in 35% growth in FY25 on back of this order win. Listen in.
We are quite bullish on our growth numbers, and we believe we should grow at least more than 35 to 38% even in FY25, and similar amount of growth we are expecting in FY26 and 27 as well. So with an opportunity of adding few more such production enhancement contracts in coming future, this growth percentage can even go for higher.
They've also said that because of this order, their margins are set to improve significantly. Himain, you mentioned Dabur. I'm going to throw in ITC and HUL too to the list of defensive counters that are doing well. Would you consider a long trade on either of those two names, or you're happy with just Dabur?
ITC, yes. HUL is firing on all cylinders, Samina. It's a 4-year breakout, Samina, and that is huge. It's a Colossus, it's behemoth, it's a F&O stock. 4-year breakout, raging bull market 4 years, the stock has not made a new high. It has done that today. So the only hitch or a fly in the ointment, if any, is gone off for 5 months in a row. I know that's not a criteria to hold back your trade, but 5 months in a row is making me slightly uneasy. But yeah, stock looks like going to 3,300 over a period of time. 4 years, the next year or two should be positive for the stock. So yes, HUL positive. ITC is the easiest one, underperformer, catching up, breaking out now above 515, looks good. Both are worth a trade, ITC safer.
Okay, well, yes, it's a colossal FMCG name making a big move today, and FMCG by and large seems to be doing okay. But Aditya, I want to just draw that string back a little bit and focus on that oil and gas thing, both from a perspective of ONGC And while everybody was suddenly thinking that oil upstream will be a favorite, I think the month of August, oil upstream got the maximum buy calls, and suddenly crude cracks and the stocks have just gone off completely. And two, just this, there is an SME stock and a small cap stock getting this large order wins from ONGC, really changing the fortunes, wherein one of the companies which spoke to us says that they'll grow at a 35% CAGR for the next 3 years. Any thoughts on some of these beneficiaries within upstream oil exploration and services?
So first of all, there needs to be caution. The companies today are using the exchanges as a disclosure box for order wins. Order wins are great for these companies, but execution matters a lot. You need to monitor how execution happens over a period of next 2 to 3 years. Short-term uptick in the stock price is really okay, but longer-term execution is what really matters. So don't get carried away by order wins. Order wins are part and parcel of life. Execution matters a lot, the first point. Second point is, within the oil and gas space, I have been very vocal in saying that the future right now, until EVs really fire up, which will be about 5, 10, 15 years down the line, will be the gas side of it. So somebody like a GAIL, which has done exceptionally well over the last 6 to 12 months, or a IGL or a MGL, is where the juice is, because gas is where the thrust from the government really is. The other space that you need to really look out for is the ethanol space, where the government is trying to give a real push to the ethanol blending to petrol, where companies like Praj Industries are already present, but they will do really well over a period of next 6, 12, 24 months as the government pushes more and more towards all of these kinds of play. Within the upstream companies, I'm not too positive on companies like ONGC, because I feel a lot of the rally has now already been done, and we now need to look at companies in the gas space as well as the blending space, where petrol will get blended with a lot of other products, so that pollution is controlled.
Himain, we anticipated this morning that long OMC could be a trade because crude prices have corrected so significantly, but not sure what's going on. And HPCL, BPCL have taken it to the chin. Upstream, of course, is doing badly. So stocks like ONGC anyway under pressure on back of falling crude prices. Technically on the charts, do you recommend buying into today's weakness on anticipation of a recovery on any of these names over the next few days?
Samina, if I can extend the time frame that you mentioned over the next few days, over the next few weeks, and if you have the patience and the capacity to wait for a few months or maybe even a year, then yes, I totally agree with you. It does quantify for a buy call, whether it's HPCL, BPCL, ONGC. But my favorite remains IOC. IOC hasn't done much. It's been an underperformer for quite some time. Mind you, it gives a decent dividend yield, but it's gone nowhere. So over here in a slightly lower level, if you have a 12-month view or maybe 15, I think IOC looks great. We are at around 175. My target is 220, so it could give you decent returns. HPBP are in longer term up moves, but yeah, they've cooled off a bit. And yes, coming back to your main question, on declines, maybe not a few days, but few weeks. They were the buy, including ONGC.
Right. HUL, we talked about that. In fact, Himain gave us a technical view on the stock, but there's also a fundamental reason why this stock is buzzing, and it's all about ice cream, from what we understand. Mahima is standing by with more on that. Mahima, ice cream bringing cheer to HUL?
Absolutely, Samina. So now this is on the back of the news that now HUL has formed an independent panel to evaluate their ice cream business. Now the committee will provide recommendations as to what they will do with the ice cream business going forward. The final decision, how will be taken by the audit committee, but it will be in consultation with this panel. Now in terms of the ice cream business for HUL, where roughly 3 to 4% of the total revenue is the ice cream business, and at present the overall market share of HUL in the ice cream business business stands at roughly 15%. Now, this is coming after Unilever, which is the parent company of HUL, decided to demerge its ice cream business, and they've given the reason saying that the characteristics of ice cream business are unique in terms of supply chain, in terms of seasonal fluctuations, as well as they're more capital intensive in nature. And the panel which formed after Unilever's spin-off so Unilever has decided to spin off this, and it will demerge its global ice cream business by the end of 2025. And the management believes that there is more growth potential, will be better under different ownership structure. And lastly, in terms of viewer perspective, HUL runs 3 brands under the ice cream segment, that is Quality Walls, Cornetto and Magnum.
Okay, well, it's good news for HUL and it's good news for primary markets thus far as well. But 3 companies starting subscription, open for subscription today. Mahima, what's to be watched out for each of these? If you have the subscription details, then share those two.
Absolutely, Neeraj. So I'll start with Bajaj Housing Finance, which was one of the most weighted IPOs. Roughly 6,560 crore is the IPO size, and it has already been fully subscribed by 2 p.m. and right now the subscription is 1.26 times. In terms of the price band, it's 66 to 70, and in terms of lot size, it has 214 lot size. So minimum investment for one lot size is roughly 14,980. And in terms of key details, second largest housing financer in India. In terms of the GNP and NNPA, it is the lowest amongst large housing financiers, and the outlook, well, the industry is growing at 15% CAGR and is expected to grow at the same rate in the next 3 years, and expected AUM growth of 25 to 30% is what the company is also expecting. Now the next one is Cross Limited. Well, the Cross Limited has been subscribed so far for 0.61%. It has an IPO size of 500 crores and the price band is 228 to 240. So basically the lot size is 62 and minimum investment here is 14,880. Now in terms of key details, in terms of 2 years CAGR growth, their revenue has grown by 28%, gross profit by 24%, EBITDA by 40% and profit by 54%. Next one is also from the auto space, that is Tolin Tires, and the IPO is for 230 crores and it's been subscribed for 1.26 times now, and the price band is 215 to 226 and the lot size is 66. So here the minimum investment is roughly 14,916. And lastly, PN Gadgil Jewellers will open for subscription tomorrow, where the IPO size is 1,100 crores. The price band is 456 to 480. So here the minimum investment will be 14,880. And in terms of key details, well, it's the second largest organized jewelry player, which is from Maharashtra. And the company will add 12 new stores with the IPO proceeds. And revenue has grown 36% YOY. And EBITDA margins have doubled in FY24 as compared to FY23. So these are the 4 IPOs that will definitely be, on the watch out for this week.
It's going to be a big one. I mean, look at Bajaj Housing Finance. It's part of the Bajaj Group, comes with very solid legacy in that sense, and the stock as well seeing a solid response. You've had about 100 odd anchor investors who've come in, acquired 1,750 crores of worth equity from the likes of Government of Singapore to Abu Dhabi Bank to, of course, Goldman Sachs, Kotak Mahindra, SBI Life, to name a few. Company is growing at a double the rate or run rate of the industry. And remember, with the government's impetus and with the pickup in disposable income, nuclearization of families, it is a story that you cannot take your eyes off. Of course, you've got to be lucky enough to be able to get an allocation on Bajaj Housing Finance. Here, Aditya, quick question. Have you got a recommendation? Have you got coverage on Bajaj Housing Finance? I mean, it's a story that you want to bet big on if you're playing the India theme.
Definitely. Bajaj Finance is a fantastic company, and what they have built over the last 5-6 years on their Bajaj Housing Finance subsidiary is tremendous. So there's no doubt that one should apply to this IPO. However, the valuations are expensive. It is coming out with a valuation of 3 times price to book. But again, as we've seen with Bajaj Finance as well, the valuation will continue to remain expensive if the company continues to deliver solid growth with NPAs under control. My bigger preference rather than Bajaj Housing Finance would be towards Bajaj Finance, We've seen about 2.5 years of time correction that has happened on Bajaj Finance per se. So that stock also continues to keep looking good to me, which is a part of larger financials per se.
Well, that's the word coming in from Aditya on the couple of housing finance companies. We'll take a break, but while we take that break, it's the 54th GST Council meeting that's underway. Here's a big statement coming in from Uttarakhand's Finance Minister, Prem Chand Agarwal, where he says that the government may cut GST on the helicopter services used by devotees to visit Kedarnath and Badrinath. Listen in.
जो हेलीकॉप्टर सेवा हमारे यहाँ जैसे बद्रीनाथ केदारनाथ या अन्य जो हमारे तीर्थ स्थल हैं या धार्मिक स्थल हैं या हमारे धाम जिनको हम बोलते हैं, उसके ऊपर जो जीएसटी है वो 5% का जो हमारा सुझाव था उसको मान लिया गया है। और उम्मीद कर रहा हूँ कि वो जब नोटिफिकेशन जारी होगा तो हमारे जितने भी श्रद्धालु हैं आने वाले, क्योंकि हमारे यहाँ आप जानते हैं 4 धाम यात्रा में बहुत सारे लोग आते हैं, तो स्वाभाविक रूप से उनको एक इससे लाभ होगा। और हमारा जो मंतव्य था यानी उत्तराखंड का या हमारा माननीय मुख्यमंत्री जी का, वो इसमें आज निर्णय हुआ है।
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है। टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत awareness create किया। हमने awareness through advertisements, through television, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with. What matters worldwide? is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead.
Back with India market close right here on NDTV Profit. While banks are doing okay, the real big mover intraday has to be Ola Electric. Look at that. Was down 5%, is up 5% now. 5.18% higher in trade is Ola Electric. So big move out there. Fair degree of buying seen at those lower levels. You know, this is something about, and Puneet will come in and join us, but something about an Ola movement perplexes me. Here's a stock, Samina, that lists at 76 rupees, doesn't do anything for the first half an hour, then suddenly has a series of upper circuits. It's like buyers suddenly decide that, hey, want to buy Ola. Goes up, all the way to 150, then corrects. Suddenly today, down 5%, there is selling, the lock-in erases.
It should have been. That was the right way of reacting to the stock when a lock-in period comes to an end.
Suddenly.
It's almost an afterthought, Neeraj.
Exactly.
It's almost an afterthought. You're like, okay, I need an opportunity. Ola is right there. And you're seeing that with a 4% downtick in early minutes of trade to a 5% uptick as we see it. Puneet is standing by with more on this. Puneet, this is a curious case of Ola Electric. From the day it listed to today, it's been teasing investors and traders alike. What's going on?
Well, definitely, you know, so we have the 1 month lock-in ending today. Roughly around 4% is what's come to the market, and roughly around 18 odd crore shares. So it's a sizable amount that's come in the market. We saw the reaction of the stock in the morning down 5%, as you guys rightly mentioned. And this intra movement of positivity has come, you know, in just the last hour. So it has been, you know, lagging in trade today for good reason because of the big outflow. Now, this is, you know, the first of the anchor book which will come into the play. The second one is going to come on 8th of November when the 3-month lock-in ends. And currently, anchor investors are eligible to sell 50% of their current holdings after the first month ends, which is today. So they will be eligible to sell the rest on 8th of November. But over the next couple of months is when, you know, we'll see the lock-in, you know, come into play after the next 2 months. Now, if you look at, you know, just the company and how it's performed in this particular time frame, the month-on-month sales from July to August has been very disappointing. It's fallen from roughly 41,000 odd sales in July to roughly 27,000 odd sales, and we've covered this in the morning as well. The market share of the company has fallen from 46% in June to 31% in August, and you know it's slightly a worrying picture for the company. They have been mentioning that, you know, the 30 to 35% market share is what they expect to maintain for this particular year, but very aggressive launches from the likes of Bajaj Auto as well as TVS Motors, as well as increasing their presence to dealerships, has been one of the key other factors to look at as well. So going forward, certain triggers that we'll be seeing for Ola Electric is, of course, you know, the EV bike segment that they mentioned. We will be seeing some booking numbers around Dussehra as well. That's what they mentioned to the market. Apart from that, they have been testing newer models as well in the E3-wheeler segment, which is very profitable as well. But for now, going forward, we'll be seeing, we have seen already Bajaj launch the cheaper variant of the electric Chetak scooter. Let's see what Ola Electric does with the EV bike segment. That's been one of the key triggers. But for now, you know, stock is reacting positively. The next trigger is going to be the EV bike as well as the lock-in, which expires on 8th of November. Back to you.
Ola Electric. Himain, I know there's not too much historic data on this one, but is there anything that you have on Ola Electric? It's a very recent listing, so I'm mindful of that. But I mean, as a trader, this is tempting.
Well, yeah, like I said, paucity of data, but a couple of things, Amina. Firstly, it's giving an upward key reversal today. It's taken support on the 55-day exponential moving average, and volumes have shot through the roof. In the last 1 hour itself, volumes are almost 4 crores. So something is happening, and whatever is happening seems to be positive for price action. And a close of a 119 should see a further upside.
You could see further upside. So technically, this one's looking good. Aditya, fundamentally, what is the reason that Ola defies pretty much any sort of news flow and dances to its own tune? At 114, if one doesn't own Ola Electric and wants to add it to their portfolio, could right now be a good time, or you'd wait it out?
So in my opinion, we've seen commentary across the two-wheeler space and the four-wheeler space of a slowdown, especially within the electric vehicle space, where the government is clearly saying that it will not be giving subsidies and the sector needs to sustain itself from here on. And there has been a slowdown in the uptake of the two-wheeler EV bikes and EV cars per se. So my sense is that this stock has become a lot of speculation per se, and a lot of investors are speculating in the stocks, and fundamentals have got detached in the shorter term. In my opinion, the stock is a clear avoid. I would not like to suggest this stock, and I would like retail investors to be really very careful. Rather than this, within the OEM space, if you want to have a exposure to two-wheeler space, you should have a combination of IC engines as well as EV space. So you could look at a TVS Motor, which has got both of these exposures, or you could also look at a Bajaj Auto, where they've got Chetak as well as their IC bikes doing pretty well. So Ola Electric is a clear avoid right now at this stage, and you should look at other OEMs.
That's the word coming in on Ola Electric and other OEMs. A few other stocks that are moving in the market this time around on the downside is these PSU stocks. The PFC today is down 5%. Hudco is seeing a big cut from its record highs. Defense names like Cochin Shipyard, Mascot Dogs, Bharat Dynamics, despite order wins, are seeing selling pressure in trade today. And PSU banks are seeing a little bit of recovery, interestingly. Himane SBI fell sharply on Friday. It's not done too much in terms of trade this morning. It's pretty much found a base. That's the feeling I get. Marginally higher in trade. Do you feel like SBI could be a good candidate to play a recovery for the next couple of days?
I think so. A small bounces in the offing, Samina. I totally agree with you. Okay, it's not much to go on, but we're at 784. Okay, it seems more like 795 and 807. So two possible levels, but yeah, a small bounce seems to be built in, Samina. Yeah.
Okay. Well, stocks which are seeing a bit of a bump up. Vimta Labs should come up on your screen. Also, Karnataka Bank should come up on your screen. Orient Paper has some upticks. So look at those moves there. Karnataka Bank, a sharp spike. Orient Paper has had this very sharp spike, if I'm not wrong, 5.5% higher. In fact, maybe it's cooled off a little bit, but still doing okay. Salzer Electrics is also up in trade. And today's listing has been steady at that 43% uptick mark. So that stock seems to be doing okay too. So question to both of our guests. Actually, Aditya, I don't know if you spoke about the IPOs. We probably didn't speak about today's listing, but Gala Precision Engineering, decent debut on a decent subscription. Did you get a chance to look at this company?
No, Neeraj, I've not been able to look at this company, so not be able to comment on it.
Okay, fair call, understandable. But stocks have done well. Sanghi Industries too, by the way, is doing well for itself. So a bit of a spike here into some of those stocks. Keep in mind, Himane, 4 or 5 names that I just highlighted. Sanghi, there is Vimta Labs, there is and a couple of others that have done very well for themselves. Anything that stands out from these stocks? Orient Paper?
Vimta stands out, Neeraj, because Vimta has given a breakout from a square formation today after 7 trading sessions. Is the volume matching? Yes, I think volume is matching. So Vimta stands out, looks good, all-time highs, further upside seems like a distinct possibility. And Sanghi Industries, Neeraj, has been down for some 13 weeks. Limited downside, upward bar reversal, positive divergence, indicator supporting. This can be a dark horse. Nothing to lose. Today's low can be a stop loss. Looks like it's giving a decent bounce, Neeraj.
Well, that's Vimta Industries. Neeraj's find this afternoon. Good volumes, big moves. The stock is trading and has seen a big spike in the last few minutes. Aditya, are you buying into the aviation theme? SpiceJet, of course, announced this morning about financial restructuring plan that it struck with Carlyle Aviation. Fuel prices are also lower right now. I know it's low down season in that sense for aviation or air travel, but opportunistically, how do you feel about some of these counters?
Within the aviation space, Indigo is dominating the space. Indigo has got about 63 to 64% market share, and that has led to a downfall in SpiceJet. SpiceJet is struggling to pay salaries, is struggling to pay the PFQs of employees as well. And that's a real problem. Even though they undergo a massive financial restructuring, the stock is not really cheap at this moment, and the future remains unclear about how the company is going to really move. So even Indigo, for that matter, is really very expensive stock. And I would like investors to stay completely away from these stocks and look at other sectors per se, where there is a whole lot of stability rather than looking at the aviation counters.
Okay, yeah, the 3% higher for SpiceJet. So not a very spicy reaction. And by the way, speaking of reactions which are not that great, Suzlon, it secured India's largest wind energy order. The stock was down about 0.5%. We spoke to CEO JP Chalsani about the order win and how it aids the company. Listen in.
This is 370 megawatts, 370 turbines of 3.15 megawatt each. And the 3 different projects, all in Gujarat, to be completed. And these projects need to be commissioned from December 25 to February 26. Means the whole thing is to be commissioned by next financial year. So therefore, obviously, the supplies would start this year for this project. And as you were mentioning earlier, there are 3 projects. And this has not just the supply contract, it also has the foundation erection contract, plus it also has a 10-year OMS service contract. And the service contract starts immediately after commissioning, unlike other places where we have a 2-year warranty period and there's a free OMS starts after that. But in this case, this service revenue starts right from day one. So there are 3 contracts: the supply contract, the BOP contract. BOP includes the foundation direction, and the third one is the OMS contract. So the revenues would start going from this year itself because supplies would commence immediately. And the added advantage here is that the NTPC went ahead and awarded the land acquisition, 33 kV, other BOP much in advance to other contractors. So these sites are much better prepared for us to move ahead and do the foundations quickly and supply and direct. I think that's the advantage that we expect these projects would be commissioned on or ahead of schedule.
That's the management of Suzlon, talking to us exclusively about what that big order wins means for the company. This one's been a hot favorite all through July, August, and of course now you're seeing a little bit of weakness in the stock, but it's largely been quite a bet post its earnings reporting a few weeks ago. Well, a quick check where it's going into the last 15 minutes of trade. The markets have spent most of the day consolidating with a very clear positive bias despite very weak global cues. So the handover from Asia was weak. I'm not sure how Europe has opened up, but it's not done too badly in terms of trade. And that's the Nifty picture for you. Nifty futures are trading in a premium. There's an increase in open interest to up to about 1.5%, very clearly indicating that long positions are being undertaken on the index itself. Europe is started the week off on a positive note. Remember, there's the ECB meet this week, and a rate cut is expected from the European Central Bank, and that could be stemming a little bit of a gain across those European markets. So while Asia was weak, Europe's doing okay, and our markets also consolidating very clearly with a positive bias. Bank Nifty, though, has turned around from what we had this morning. While there is an increase in the Nifty, the Bank Nifty futures are trading in a premium, there is a decrease in OI. So clearly, once again, it seems like the further movement on the index could be capped. And that's what Bank Nifty is looking like, but the Nifty itself setting out a fairly positive picture as we see it. Himain, we're going into the last couple of minutes of trade. The PSE index is down 2%. Broader markets are underperforming today, very similar to the trend that we saw in the early part of last week as well. In the last couple of minutes, any opportunities, any buy today, sell tomorrow, or even sell today, buy tomorrow for our viewers?
Well, the way the markets are placed, Samina, I think is more of a buy today, sell tomorrow. And well, I have a bunch of them actually. SRF, Apollo Tyres, and HDFC Bank all are qualifying for a VTST trade, Samina, because I believe the Nifty should go to 25,100. Sorry, should go to 25,000 tomorrow. So all these should bounce.
Aditya, what about you? Have you constructive on anything, there are opportunities, and it's very obvious, right? If you look hard, you will find something. Anything that you found that you'd like to recommend?
Definitely. So today, since we were talking about the Bajaj Housing Finance IPO, my topic right now at this stage over the last 1 month has been Bajaj Finance. We're seeing 25 to 30% credit growth that Bajaj Finance is really taking up, and with the new apps that are going to come up, they will do pretty well over the period of next 3 to 5 years. We've seen the stock derating as well over the last 2 to 3 years, where it has practically done nothing, and it has been at this level of 7,200, 300 over the last 3 years per se now. So the large cap financials, they will continue to keep doing well. Bajaj Finance is one of those counters where they will do pretty well. Another space that I find very interesting is the chemical space. I've been recommending that sort of a contra pick, where we've seen companies like Deepak Nitrite, companies like Gujarat Fluorochem now do exceptionally well over the last 1.5 months. Stocks have risen. The business performance will come by the second half of this year, and people need to be really very careful. Chemicals is a heterogeneous space, so you need to define your entry and exits that way. So two spaces look very interesting: the large cap financials as well as the chemical space.
Okay. Well, I think a chemical name that's done really well has to be Gujarat Fluoro. Some really sharp moves the whole of last week, especially Thursday and Friday. And I think in today's session too, it's marginally in the green. Actually, not marginally, sorry. 5% higher, $4,000 and counting for Gujarat Fluorochem. This is some serious uptick in this stock. Himen, $1,000 in a matter of 3 days. Don't leave much to the imagination of the strength of the counter. The question is what to do now. So I'll make it difficult for you, Himen. I'm not going to ask you, can somebody buy it now? Because I know your answer will be that it's difficult. So I'm going to ask you that somebody has the stock. Should that somebody book the profit here?
15% booking, otherwise not more. 4,200 all-time high. Stock's going to 5,000 nearer.
Oh, in which case, let me then ask what I thought was a difficult question. Would you buy it right now if you believe the targets are 5,000?
Yeah, I'd buy half now. Volatile markets and the way it's moved makes it probably susceptible to some cool off profit booking. So yeah, I'd buy half now. Assuming it comes back to sub 3,800, I'll willingly add more.
Yeah, what's happening, you track chemicals very closely amongst other things. I know that they are trying to do some battery chemicals as well. Probably some fundraising in one of the subsidiaries is the other rumor. Any idea about what could cause such a sharp up move?
So what is happening is the prices of fluorochemicals, some of the fluorochemicals that are used in refrigerants and also on EV chemicals are starting to recover. And it was about time that Gujarat Fluorochem, which is specifically present within the PTFE space, they are going to benefit as the prices continue to keep moving up. We've seen a sharp erosion in margins for Gujarat Fluorochem from about 40% to 30% over the last 1.5 years, and that will start to recover. So I'm not at all surprised by this rally. And as Himen also said, I don't see that why the stock price should not move to 5,000 by the end of this year.
That's the word coming in a couple of those chemical names. It seems like that rally is back. Even an Archean, in fact, has been doing quite well. It is an expensive stock, and you can't argue that. But of course, today the count is down 3%, but it's had a good run year to date at least. Neeraj caught up with Mihir Vora, CIO of Trust Mutual Fund, and shared his views on the IT sector and how the fund house has reduced its underweight position on the sector. Listen in.
So that's more of asset allocation based on the profit booking that we did in some of the sectors that I mentioned. So, for example, while we continue to be very positive on defense, infrastructure, manufacturing, etc., we had a huge exposure to that segment, which we have trimmed dramatically. We almost had 20+% exposure, which we have in the last couple of months trimmed down to about 10%. So that the reallocation of that 10-12% that we do, some of it obviously went to IT, where we were significantly underweight. So you can say we're not like very positive on IT, but we've significantly reduced the underweight position that we had.
Okay, but you're not too constructive on IT. This is just a reduction. Okay, what about What about, and before I come to pharma, what about some of, I mean, within IT Pack, Mihir, IT services, ER&D, and we have some of the tech plays which are more domestic focused, and we've seen the kind of gains that the Zomato, PB Fintech, now even a Paytm is reviving, etc. And then there's some of the others too. Within this bucket, I mean, and I'm presuming that even the domestic tech plays form a part of this 9%, correct me if I'm wrong again. Where is it that you are more constructive on within these buckets?
So I don't really treat these new business model companies as IT per se, because they are more consumer companies in my view, because they face the consumer and use technology, of course, to reach the consumer. But for me, they are more of consumer companies. So we are very constructive. That's one of the things that we are definitely playing on, this new business models. So that's a definite plus for us, yes for us, overweight. Within IT services, I would say it's a stock pickers market, but in general, if I were to look at the top 4-5 companies, we are talking about at best single-digit kind of growth. My view on the large companies is, large IT services companies, is that we will revert back to pre-2019 growth rates, which is again single digits for the medium term. The spike that we saw because of COVID spending on IT by US corporates is past us. So on that base, I don't think they've not, let's face it, they've not tweaked the business models dramatically to give us the confidence that they are going to grow faster than what they did in the past. So to that extent, it will be a good, predictable, medium growth, medium expectations kind of sector. But if you expect the Indian economy to outperform the rest of the world, then you probably don't want to be very overweight on the large IT companies. In the mid and small cap IT space, IT services space, there are companies which have different target segments, as you mentioned, ER&D. There are companies which focus more on BFSI. So my guess is that you might see some more attraction on the BFSI spending space in the US after a long time. AI probably will give some opportunities for some of those companies. So I would say that IT will more for us be a stock pickers market, where we would like to pick stocks in the mid-cap space rather than go very overhead on the large IT companies.